What's up, guys? Good morning. What a morning so far. Holy cow. Let me just tell you, once again, we were right, but I think I'm going to be wrong on one thing. I think my oil entry yesterday is very early, and that's okay. But the good thing about that, and I told you guys yesterday, is that I only bought a piece. I only bought a small piece because I don't know how it trades, and it just got demolished, as it should, with that data. So, welcome to the Ivy League live stream. Hit that like button, subscribe if you haven't already done so. We're doing a giveaway once we get to 500 and 1,000 subscribers. If you want to do a one-on-one, which I have a couple emails. We talked about it yesterday. I just want you guys to know, if you're not here right now and you get this and watch it later, I'm going to respond to you. I had a couple things to do yesterday, and I'm going to get all that handled today. So I want to go ahead and what I'm going to do is get a like a nice group started, possibly for like next week, maybe, I'm thinking. But we'll talk more about that as we get into like lunchtime. So hit that like button, subscribe. Let's go through the charts. Where are we going to make our money today? And if we help you make any money and you want to give back to the stream, that is in also the links in the description. Follow me on Twitter at Ivy League Trades. So we took a swing trade about a week ago on TLT. I'm no longer in it. And it worked out perfectly. So if you go over here to Twitter at Ivy League Trades. So what I did was I posted this. And some people had said that it's a little early, or that it's just, well, really didn't say it's early, that it's consolidating. I'm like, yeah, you're right. It is. It's consolidating. That's for sure. So here you go. TLT missing one thing, but man, if this doesn't look or feel like a great buying point, and guess what? Right here, baby, right off that 50-day, it actually had a down day, and we took advantage of that, and now it's up to $97, $98. We got into the 95 calls, and you are, let's see where she's at. She probably pulled back, I would expect, but she topped out right up there around $98. So, congratulations if you took that and you're still in it. And it's not surprising, right? Because yield should pull back. So when you get this data today, like we did, this is showing you that we have just gotten another big increase. Like the inflation on the labor market, right? Which inflation definition is rate of change. The rate of change in the unemployment data is increasing, and increasing even more. Okay, month by month. But we've seen it all across the board. And they're talking on CNBC like, let's not use one data, blah, blah. No, this has been data for the past few months. We are seeing this. Now you're seeing Intel starting to lay off. They cut their dividend. Like, it's here, folks. It's here. The Fed should cut. This is their time. So now we've gotten, and that's okay because, look, again, the Fed has reiterated that the longer they give it, okay, like let's just say if it gets bad or whatever, the longer they give it, the more they have to combat it. So they're not worried about it, which is what they have been saying. So let's do it. Let's get right into it. All right, SPY. We're looking for a bounce back. I actually wanted to try to get this level up here at 540.50, but it's already been tested. Let me look here. So where I'm going to be targeting, so 537.50 is where we were at, and I have to show you guys this. I'll show you guys how I write down, going into the day, how I write down my levels to make it really easy. So I'm like, okay, where should we be, or where are we? Where's the middle point, and what's above me and what's below me? So I have a feel and have it written down in front of me where I want to get in, where I want to, exit. So I would like to try to test this range up here at 537.50. I'd like to try to get that. And 537.50 is going to be the point where, are we going to reject it? Or are we going to try to reclaim it? All right. I want to check out NVIDIA too. So I do think we have some more downside coming, guys. So any bounces, I will be looking to get short. I should have already done it, and I thought about it yesterday afternoon after the market closed. I'm like, man, I should have already been in some long dated puts, and that's half the reason why I was going long the TLT. But, you know, what are you going to do? You know, it just happens so fast, and that's what happens. You know, they just, you know, when this market goes, it goes. All right, and bear markets, and you guys need to be careful too. I want you guys to understand that bear markets can be really, it's not that they can be really difficult, yes, but you can really get hurt in bear markets if you don't know what you're doing. Because what's going to happen is especially if you trade options, you're going to be paying more, okay? And if you can't withstand the volatility, you're going to be paying more to, in a sense, make less. In a sense. You know, you can make a lot, don't get me wrong, but, you know, you have to really wait, and you're going to be paying more, and you have to give it that room that it needs, because volatility has expanded. So a level that's 50 cents, you know, may become $1.50, if not $2. So you really got to understand that, you know, position size is going to be important. Dwindle your position size so that you can withstand the volatility. Man, I don't want to see this USO open. I mean, I really don't care. I only bought a couple contracts, so I'm really not even concerned about it. All right, hold on. Are we live or no? Are we live? Yeah, we're live, right? Why is... Okay. Yeah, we're live, right? So what I do is I have the stream playing so that I know everything is... So I know everything is okay. All right, let's go into the watch list. So you guys know we've been watching Tesla. We got short Tesla yesterday, and we've been eyeing that double top up there. You know, you can call it a bear flag, whatever you want to call it. It's just a double top at prior support, and you got the extension. And we got a pretty nice entry on this. What I want you guys to understand, look at this. Look how the volume is a lot lower on that downside yesterday. Downside was really consistent. You have these wicks up. What I want to do is I'm watching this 50-day moving average, and it's like 210. All right, 210. I'm watching 210.40, 210.50, and this 50-day moving average down here to see if we can catch a bounce. So we had an increase in volume right here. See that? And what was that through? That was through the 200-day moving average. And now we're pulling back on a decrease in volume. Really, it's kind of a little mixed, but that's a decrease in volume on a pullback. Let's see if this is really going to hold for a golden cross to take us higher. I don't know if they have any events coming up, if there's going to be any news. I don't know, especially with all that's going on. It's hard for me to be bullish, but I'm going to take my money when I'm paid, and I'm going to look to get short bounces. All right, we're not, you know, it's like the market just goes from one extreme to the other. You know, we were overdone to the upside, then the minute we want to get a pullback, it happens so fast. Oh, we're oversold. It's like, you know what I mean? So it is what it is, you know. All right, so Tesla, the 50-day moving average. You guys see this gap here at 210, 210.40? You have a gap there that I told you guys this whole week. I said, guys, watch for us to bounce and then pull back, bounce, pull back. That's going to start yanking that 50-day up. And what do we have? That 50-day get ready to meet us in the gap. So I do want to see if I can get a 210, which I think we're there now. Which it looks like we're going to double bottom and open up down here at 210. So let's look for a 210 hold. And let's just see if we can get a 210 bounce into 215 on Tesla. All right. 210 bounce on Tesla up there to 215. What else do we have? And if you guys have tickers, again, please throw them in the comment section. Just let me know how you're doing today. I hope everybody is well. So yes, I'm not going to get short down here at the 50-day. I mean, unless something, because you have the 50-day, then the 200-day. So, and you also had this prior gap down here. So, congrats on getting short up there at 235, everybody. 232. So yesterday, we had pointed out that this was the short zone. Literally that gray box. And when I want you guys to know, too, for anybody that's new here, when I draw a box, I more so want you to pay attention to where the bottom of the box is and where the top of the box is. So this was at 232, and 231, right? 232 resistance. We popped right back into it. We rejected it. This pop was on was when we got that data yesterday, and as we pulled back and broke this level at 230 on that pullback, I got short. I exited a little early, which, you know, I should probably focus on something that I could work on. Again, this week, and kind of like last week, understanding that I felt that this volatility was coming on any of my trades, I'm just going to be taking my money. You know, if I'm going to get paid $200, $300, $400, guys, I'm taking it, and I'm going to do it again, and I'm going to do it again, and I'm going to do it again. All right. I think I could have done a lot better this week. So next week, I'm going to work on trying to just like perform a little bit better. You know, I mean, guys, I can't. It's like, you know, I also have to remember, I just got one of the biggest trades of the year here on regional banks. I seen it. I felt it. TLT was also another one, but I got out of that a little too early. I caught that from down here, and then TLT, I exited this. It wasn't anything major, but this was just a beautiful chart pattern, and I should have given it more time and stayed in it, because I really feel like we could see TLT back to 100, if not, 102. Let's go to Meta. There's a lot going on today too. So Meta, you can see this consolidation area here: support, resistance, support, resistance. It gets a little choppy in here. So you have this really nice gap. You have the 100-day. So this I know it's a little small to see here, but this 50-day, 20-day, and 100-day are all right here at 490. All right, so 490. I'm watching 490 as my level. Any bounces back into 490 on Meta, I want to see if we can get pullbacks down into 480. All right, really 480 and then possibly even 470, but 480 is the bigger level. So you guys can see here, if it's easier, I want to get a bounce back in the prior day's low, 489.50 to 490. This area right up here is where I want to get whatchamacallit, short. And my target is going to be 470. I'd like to get 470. I would. All right, Meta had decent, and look, it's already hit 490 here. Look, you can already see that break and retest right there at 490. Let me use the restroom really quick so I can finish this. I have a few more names. I know you guys know we're watching Google and a few others. Let me know how you're doing today in the chat. Just give me a one. Just let me know you're here.
No, I'm saying
say hello.
By the way,
okay.
will you let me finish just for a second?
Of course I'll let you finish.
He may have been calm on the call, but they have now cut the dividend. They're cutting enormous amount of employees. They're cutting CapEx. You would seem to be saying it's all too little, too late.
I'm quoting another
analyst.
analyst.
CPU business is dropping at a rapid rate. You can only buy so much, and obviously the buyers all want AI chips.
But a lot of people are saying
GPUs.
that Dell and HP can't stay with them. Yes, they're second. No, David, on the going concern, I was quoting Stacy Raskin. I would not have used that term. He says, in other circumstances, we believe we would now be having going concern conversations. That's all I'm saying. Me, no. I think that what...
All right, sorry about that. I had to use the restroom. So, I'm going to look for pullbacks. Let me get this stuff straightened up here, because it's giving me a problem saving it, and I'm already getting frustrated with it. Let's use... So you guys see here, right? Can you guys see this 15-minute chart here? I know it's a little hard to see. You guys see 490 right there? Do you see how you pulled into it? You tried to hold it as support. You put in like a little double bottom here. Then you gapped below it. You came up. You hit it. It tried to hold it, but then it gapped below it. So it's an area of support, resistance. You gapped above it on earnings. And you pulled back yesterday right to that area. And now we're looking for that area to become resistance. Fuck. So, damn, let me see here. Oh shit, the chat is not live. Dang it. I always do that. I always do that. Alright, so, and the other part to this, see, this is going to be really nice. This is going to be nice. So, and look, you have this gap here on the bottom left. You have that gap that takes you right into 473, but alright, but anyway, Meta, you guys, it's already popped and rejected, so I have to understand that. Sorry guys, I'm trying to get this squared away and my stomach's hurting and it's being a pain in the butt because these charts, when you get this type of volatility, it really like throws your charts, like your charts get really stretched. So all right, so you guys can see here.
To the point where they mentioned that NVIDIA's sold out. They're sold out for a long time. They're sold out probably through 2025.
Yeah, listen, the spending plans that we've heard that have been reaffirmed from the likes of Microsoft or Meta or Alphabet or Amazon have done nothing to dissuade anyone from thinking.
All right, so 480 is your support level. I'd like to see a 490 short. Ultimately, I would like to get a bounce back into 490 and short that down into 480.
Amazon, of course, they have to build their own, but that's a defensive move because they can't get enough.
Building their own chips, right? But designing their own chips.
But I mean, when you look at Amazon, here's the way I look at Amazon.
All right, let's keep it moving. Google. All right, Google actually is already at the. It already broke it. Yeah, it broke it this morning. So Google is at a funny area. So there's two areas I'm going to watch for this. Really just one, and that's for a reason. So you guys will notice here. Give me the 15-minute. All right, so
So I'm just trying to find analogies so people understand. It's taking some time. They can't just turn a switch, and that's making people very upset. And the fact that they mentioned the Olympics.
So you guys can see here on Google.
But the country is like in a 2012 mode. They're watching.
I would like to see this 100-day, that blue box, and 170. I'd like to see if that becomes resistance. Now you have to understand, this morning, you've already bounced into 171. You broke the 100-day. You popped into 170 already, and you rejected it. So, you know, I honestly, I'm going to be patient today, because it's going to be tough. All right, it's going to be tough. We're at support, but the fact that we don't have much excitement or a reason to get up off our feet and to go higher after what we just got, you know, so pops into 170 in that 100-day moving average. We'll see if there's a trade there off of the 100-day moving average and trade that back down into, what's that, 167. 165. So yeah, 170 rejections off 170, 171 or 170 in that 100-day moving average. I would like to see if we can get a move back down to 165. All right, that's Meta. All right, this is like your middle. This is your middleman here at like 170. So we'll see if you get, you know, if you get the downside that you're looking for. Here's the thing: is like yesterday, and I'm reluctant. It's like this selling pressure has not had any volume with it. There's not been any volume. So if we do crack 168, then you use 168 as your level to get short. All right, if you break it, then you look for a pop, and then you try to reject it. But I don't think it'll reject it. I think it'll reclaim it and then bounce back to 170, and it'll just waste a bunch of time and not really move. So I think the trade was from Tuesday up there at 166. Excuse me, 164 or 174, 175, 175 to 176. I'm sorry, right here. That was your move. That was your move. And I missed it yesterday, unfortunately. But I traded Tesla instead. It's all good. It's not like I completely missed it. So look for prior day's low. Look for 170, 171. And then if you get up there, then you got to understand that you are back above the 100-day moving average. So Google may not move that much today. That's what I'm trying to say. You know what I'm saying? It's like if you get short at the 100-day, then you're looking at support at 168. You know what I mean? So you're like $1.50. Okay, cool. You know, so if you get above the 100-day at 170, then you're like, oh shit, 170.95 or 171. That's $1. So you're gonna risk 50 cents to make $1. Like you're risking 50 cents really to make. You know, it's just not my cup of tea. But if you get above the 100-day to the upside, you're looking for 172. All right, 172. And the downside, you know, if we can get it, you know, you got to break this 168 level. You're looking for 165. All right, you're looking for 165. So that's that. All right, that is that. And look, again, you got to understand that this volume has not been... Like, you have not been breaking down on an increase in volume. So, it's kind of just like buyers have stepped away, and it's not taking much for this market to pull back because there's just not as... It's more that there aren't buyers picking and holding this market up as it is, you know, people taking profit, and the market's just pulling back. Right, like you had some pretty serious volume up here, but like if I take you guys to the daily chart, you'll see it, and it's on a lot of these charts, right? Like, you know, your selling pressures, honestly, it's up here, you know. So I just thought yesterday again wasn't that there wasn't that much volume. So, and I guess I am wrong, because the daily chart says otherwise. Oh, you know why I'm saying that? Because I was just looking at Meta. That's why. So, nope, I was wrong there too. I don't know. Just never mind what I'm saying. Let's see here. So the Qs are weak. You're getting that bounce back. QQQ, you have a minor level there at 452. Look for the prior day's low. All right, if you're going to trade the Qs or if you're going to trade an index. You want to look for this level here at 455. All right, 455. Let's go here. So we have Meta. So Meta, in my opinion, has the most meat on the bone. Let's go look at some semiconductors. That's one thing I did not do. I did not do that. Let's go watch. What's up, Tyreek? Good morning, buddy. Alright, the vid. Alright, so you got a double top, like this flat top resistance zone down here at $95 on NVIDIA. That 100-day has been a key area of support so far. Like, bro, if I click on the box, like, you obviously should know that... Again, I guess I can't get mad at this thing because it, like, you guys got to understand, this software is very old. It's had updates, but it's still old. Let's see, where is it trading at right now? 104. So we're still right here above this 100-day. I don't know why, you know, I don't know why I thought that some of the volume was low yesterday. I wonder what it was that I was looking at to think that. It's weird. I don't know where I got that from. So it looks like we're rejecting this 100-day right now. You know, either we're holding it. We're going to find out very soon if it's rejecting it. As you guys can see here, in my opinion. That was a mean reversal, guys. You know, bounce backs are going to take you to 108. Really like 106. Gotta watch 106. I just think if you get back up there, because you can see this morning it already hit 106. Like, so if you're looking at charts, pay attention to kind of what it did pre-market, right? Look, it sold off, held. Where was that? 105. What it do? Popped into where? Prior day's low. Already pre-market. So you already have a resistance zone built in right there. So if we start reversing and trying to hold this 100-day, which it looks like it's trying to hold it at 104, you should expect, all right, you're going to look for 105. Okay, cool. 106. All right, cool. Can we hit that 107, 108 and recover prior day's low? If not, then there's, you know, there's your sign. So NVIDIA, man, this chart is wild. I gotta be honest with you. This chart is wild. Like, you know, I would be watching this and seeing if you can catch. What I would try to do, honestly, is today. It's gonna be tough, man. Like, I could come up with a few different reasons here, like to be short at 106, but you know, the market can remain oversold. So the best thing to do is to just, you know, like NVIDIA, use your daily chart. You know, if you break the 100-day, then you're like, all right, I have this gap here at 102, which we're not below it. 106.50 puts you right here and back into this gap right here. That's 106.50. So, and you can see that's pretty much where we're at now. We're pretty much sitting there. So if this 106 breaks, then you're looking for a move back down to this area. And it's just a question of whether this gap right here, right, that little wick, do we get inside that and start to like put in a little bounce back, reject, and then you look for a 95, right? You look to test that level. But we've done a lot in a couple days, guys. Done a lot in a couple of days. So I don't. Here's the thing: when I like to when I trade something or I see something, there's meat on the bone, and it's showing me that like there's a clear setup, right? TLT. Now, why did I trade oil? I traded oil because, or put a position on USO. Because of this Middle East conflict, and I want to have a small amount of risk. And Iran says they're going to do something. The last time they said they were going to do something, they did. So if something happens, I have a position, right? If it goes to zero, it goes to zero. If it goes to 50%, it goes to my stop. I stop out. I look for another entry. You know, it is what it is. But these setups look terrible. I'm just being honest. You know, these setups look terrible, guys. You know, like NVIDIA here at 105. So if you want to trade NVIDIA, 105. And you're rejecting it right now. So I'm kind of curious how small caps are doing. All right, we only have a couple minutes. So Tesla. Tesla, you've already hit 110. You guys see what I'm saying? It's like you get short up here at 215. You have support there at 210. You have to take your money. You don't have much room. Oh, it was Tesla yesterday that didn't have much volume. That's what it was. Tesla didn't have much volume. I like this. We just made a new low here. I may end up looking for a long here on Tesla. All right, guys. Good luck today. I'll let you guys know what I do. I just once again, dude, Tesla is already running back up. Look at that. Tesla's already back. It's ripping. Dude, Tesla just ripped. Dude, why is my stuff not saving again? This is ridiculous. This is so ridiculous. The level I will watch on Tesla is right here, guys. I'm going to watch that level right there. That dotted line. To see if we can reclaim it. Oh my gosh. This is not cool, guys. This is seriously not cool at all. Dude, come on, bro. Like, I saved everything for a reason.
Yeah, but the 89, it kind of, this is what stalled them in 89. You could have gone long, Ardell, and short to eBay. Yes, it was a very, very, very long bear market. They were kings. I do. The enigma of Japanese power. Remember that bomb over? I remember it very well. I was covering banking in the late 80s, and the Japanese banks were huge players in our market. Sumitomo, Fuji, Mitsui, Mitsubishi, long-term credit bank. How about when they bought Rockefeller Center? Yeah. Wasn't that the apex? It was. Movies, they were all the cars. They were everything. I remember hearing Andy Grove talk about...
This is ridiculous. Like, oh, that's why, look. It never... No. Oh my gosh. This is gonna piss me off. Sorry for the language again. Alright, so I'm looking for pops. Man, I wish I could... Alright, listen, guys. I'm going to have a study group that I'm going to get together. I'd like to be able to get, like, 10 people. 10 people in it, and I'm going to give you guys some stuff to go in. We're going to talk about it at lunchtime. Alright, so here we go. Let's see. Pull this. Timex. Did I save it? And look at that rejection. Bang. I forgot about Mobileye. Good luck today, everybody. Sorry, I didn't have the comment section up here. All right, let's watch prior day's close, guys. We've already wicked up to it. Sorry for yelling in the mic. I also am sorry for yelling in the mic. Tesla has a support level down here. I want to see if we pop into 218 and see if we reject because of that daily level there. There's a reason why I'm bringing that up, and I'll have to go over that. All right, let's see here. Man, look at that, guys. The NASDAQ is the... Okay. Okay, Google just bounced into 170, 168, guys. That could possibly be a short that could take you back down to 166 on Google. Just make sure you have, you know, you have to break 168, but, you know, you're going to give it... The stop loss would be up there at, like... Let's see. I'd have to go look at the volume real quick. Shit. But Google, you know, Google's right there at that level. I would give it. See, it's already rejected 170. You can see support. Let's see if it does try to pop up there pre-market right now. You can see it's lower volume. Yes, this is a 15-minute chart. let's see if we can get a rejection up there at 170 on Google. Rejection on Google. The SPY is reclaiming, like I said, walking it up, 535. Oh man, I gotta look at those USO. Man, I'm already down a lot on those. Damn, those USOs are jacked. It's all good. I have time on those. What's today? The 2nd. I still have a couple weeks, so I'm just gonna try to relax on that. I just think that with what's going on, it's not a good idea to be long energy. Like, I'm actually thinking, I'm not sure if something happens that it's going to help energy or raise energy prices. If you haven't heard some of the news, Intel is suspending their dividend. Look for the SPY to get up into 538, 540. All right, 538, 540. I don't have the comment section up just yet. I have the SPY up. All right, so there it is. It is rejecting. Tesla is rejecting 215. 217.50, 218. So there goes Google. Google's bouncing into 170. CNBC is going to talk oil. Come on, please.
There's still a lot of concern about heightened tensions in the Middle East. Iran responding to Israel and what they believe was, even though Israel has not taken any responsibility for Hamas's political leader Nayyib being assassinated in.
All right, Tesla's just cannot get above. All right, so we're below the support level here. You may have a little room to the downside here. Look at this area here at 215 and see if Tesla does end up pulling back. And look, the SPY's already turning back around. This is absolutely crazy. All right, so watch this level right here. Keep an eye on the volume and how it acts. Looks like a double top there. You have some lower volume. Shit. Again, there it is. So, what was that? It's like $5. Damn. Coin. There's some other names that I think I should have looked at and brought up. mRNA. So it's gapping down. I'm trying to look for stocks that are already... Okay, look. Dude, why are my charts not saving, bro? Like, this is going to piss me off. And I'm sorry for the language. But it's not saving my charts. Watch AMD here. Or it's already above it. So AMD's came in with the gap up. And remember, it had good earnings. Alright, I like AMD. Watch this level right here at 135. Fuck. Dude, these charts are pissing me off, bro. Like, seriously? Come on. There's your... Yeah, 136 is actually a level there. That was a little area of support yesterday. Right there, 136. Yeah, there it is, 136. See, I have too many levels on here. I can't even see it. I would... That's not cool. Because it's 137 is really where that takes you. Oh my gosh. I don't know, guys. I might be out of luck today because I haven't had time to... I got to get rid of a lot of these levels here. I don't know if you can get back to 150, but... I would love to know what is going on with my charts. I'm going to make sure...
a.m. Eastern Time. Factory orders for June, minus 2.7% expected.
Remember, they did well on earnings. You have a gap up here. Let me pull up a 15-minute chart here. Let me see what I have going on. Okay, so there we go. Yeah, watch out, guys. 138 is really the level you would watch out for on for AMD. You know, I'm not sure what it has left in the tank.
If that were to be the outcome of the arbitration, the transaction wouldn't necessarily close. We think that's a low likelihood. And underneath, the Hess transaction, as I said.
Yeah, I don't know. I just, the chart's ugly. There's not, in my opinion, there's not a setup there. Like, yeah, okay, it's got strength, but where are we going long to? You know what I'm saying? It's like, where are you just going to go take that long $1 to 137.60? That's prior day's VWAP right there. Maybe you try to get to prior day's high, 138. So I think you got to be careful. It's got some really nice volume. I don't know if it had an upgrade or anything. So, oh shit. Oh, that could be because of Intel, right? All this stuff happening with Intel is going to give more market share to AMD. That's why this is doing that. So I think that's an effect off of Intel. Tesla's not really moving here. I hate the way these charts look. They look so bad. They look so bad. You know what I could do? Alright, so Tesla right here, guys. Watch this level here. This is your level. Alright, so it regains it. And now you're going to look for a move back to 220. You're going to look for a move back to pre-market highs.
Yes. By the way, the target trims on Amazon are not that big. Goldman goes down $20, Piper goes down $5, right? So they've been surgical.
Yeah, so this is the level here on AMD, right there. It's at 137.50. If you clear that, you look for 142. You look for 142. If you can get above that level there. All right, Google. Google is back above the 100-day, and it's at 170. Watch Google. I feel like I should be going long. I feel like I should be going long. Whatchamacallit. That's a really nice break and retest on Tesla, guys, if it can hold that level. Watch Tesla there. Take your money if it pays you as well.
Ironic. So last week at 5 o'clock,
941. Dude, this is crazy. I have so many levels that I freaking hate it. I do.
People rotating furiously into recession stocks. I think that's all right. Are we really going to have a recession? No, we're not. David, people are doing stupid things.
Let's see here. Are we going to reject? Is this it? We just tested the 9 EMA. Is this it? Should we? Damn, that's a nice reversal. Notice how it reversed as soon as I was saying that. So what we have here, guys, like look on the daily chart. Say you have this double bottom here. This level there is your support at like 214.85. Okay, and now we're below it. So you're looking at that bounce back, and we're seeing how it does with these wicks, right, on the daily chart. Right here, look, this whole area here is support. Really, and then we're going to watch the yesterday's close. This whole area right there. All right, and then if you see that we get like this increase in volume, right now the pullbacks are low volume. All right, so here we go. Now you're going to see, do we crack VWAP and start yanking? Do they really start to step in on the downside? And they're not. And they're not. I don't know. This. You didn't. Let's see. You tried to hold that level. It's looking like it's going to try to reject it on a low volume bounce. And there it is. Again, you would look for that 50-day moving average. All right, there it is. Let's see. Here it goes. Tesla. You should start to crank down now. Let's see. Does it? Did they try to suck people? Was that like a suck them into the short side and rip it to the back to the upside, or what? What you gonna do? What you gonna do when they come for you? How could I? You know what? There are surefire ways to tell. Yeah, I think you do get a little pullback. I think you should get a little pullback, which could take you possibly down to pre-market lows. Possibly. But if you get down to pre-market lows, it's just tough. It's tough because I think just because you're oversold does not mean that it can't go lower. Can't get you. Don't want to play these. There's a rejection on Google. There's that Google rejection, guys. 170. Did anybody take that? Did anybody take the 170 rejection? All right, here we go. I wonder if Google has some room. So 168. I may just go ahead and go down to next week. See, I think Google may end up bouncing and consolidating right here for just a few minutes and then start to pull back. I do. I think it'll consolidate right between 169 and 170 for like a couple minutes and then see if we either break out. Because what I'm doing is right now I'm watching that 15-minute trade line. Look how yesterday you got above it and what it do. It pulled right to it. Could not hold it. It breaks down. Puts in a bear flag. You get that entry right there. And then it extends. Look, it just rides it. Bang. Take profit. Bang. Take profit. You take profit on the extensions away. So it's well above us. So we still have room to test, which it's also at prior day's low. We're a bit oversold. So chances are we could look for a possible move where we regain this thing and flatten it out to try to move higher into Monday and Tuesday and next week. Like that's how I view the markets, right? I try to look at what's going on and how between the daily moving averages and everything else. AMD. So AMD, you guys notice how it's like the volume just kind of gave up right there. If you get a pullback and hold on AMD and you want to long it, look at 135. That's what I'm going to say. If you want to get long AMD, see if you can get 135 and look for 135 to 140 type of trade. That's what I would do. If I had to get long AMD, I'd see if I get a pullback to 135. And what do we got? Bada bing, bada boom. Look for that rejection right there. Boom. 136 rejection. Now you look for, you have 135 as well. That's what I'm saying, man. There's not much room on these trades to take. AMC. Oh, they do have earnings today? Let me see real quick.
It's nice to see something very positive.
Let's see here.
Wow, that's like the inverse of Intel. Good.
Let me pull it up real quick.
I mean, is it not, I gotta talk to you, Johnson. How's Disney doing today?
Well, Disney's done extremely well at the box office, as you know.
Yeah.
With
Come on.
and then the Wolverine
Yeah.
team up.
Hey, by the way, David, here's an interesting one. Starbucks, which is up today. What's going on there?
Well, we continue to wonder whether things will be
Sorry, I meant to pull up the IWM.
between their large shareholder Elliott, known for its activism, although not oftentimes going to a proxy fight, by the way, but for its activism. They will have to get a little nasty. I don't know the answer, Jim.
Yeah, well, that's one of the great, Carl, when we have these stories all the time.
I don't know, buddy. Oh, that's easy. Watch $5. That's a nice setup. You hold $5, look for the top end of the range at 550. You break $5, look for 450. That's it. $5 is your middleman. You break it, get short, look for 450. You continue to hold it. You have a little level right there at 522. I'm sorry, 520. So you're pulling back into a support level. You look for a bounce to 520.
I just thought that was just a careless down. By the way, 1.7 real. That's what you're buying.
Worth mentioning that the banks are
All right, let's see here. So yeah, I would use $5 as your level. Look, notice how the SPY hasn't really moved. We do have some data that's going to come out, guys. So don't get too comfortable if you're thinking about taking a trade. You do have data that's getting ready to come out. NVIDIA has room down to 100.
he's talking about his endless talk about that we may have a recession. You're talking about this presidential election thing.
All right, so there's that increase in volume. Dude, what? Holy shit, that was crazy.
Dow is down about 440, almost a 1% decline on the S&P. Bonds obviously will be a huge story today if these moves hold, as the 10-year did briefly below 3.8. Watch the curve as well as we go to break. Be right back.
Yo, they're really trying to just... Market's flat. I can see why the market's flat. You know what I mean? I came into the day like, man, this sucks. Like... Oh shit, Meta. I forgot about Meta. Meta. And look, Meta's already did it. 490 rejection. We said 490. 500. Oh, that's because pre-market we were below it. All right, so let's see if we can regain 490 here, guys. At 10 o'clock, we're going to have some data. All right, you're going to have some data here for factory orders month over month. It's like the market may move off of it, but chances are it's going to be negative. We already know that. You know what I mean? But guys, this was, 4.3 is okay. Like, it doesn't seem that bad because it's really not. But if you really dig into this, that 4.3 could be a lot worse without state and federal employees, guys. I mean, this is bad. That's like because government payroll had a huge jump last month and another jump. Well, I could say 2 months ago, and then another jump last month at 17,000. But manufacturing, everything was negative. Non-farm payrolls, look at this. Previously 136,000. They were expecting 148, 150. It came in at 97,000. Way under expectations. Way under last month. So remember what happened when inflation data came in high? People keep thinking that people thought it was the Russia war. Yeah, it had a little volatility to do with that. But the volatility was more so because they did not know the market didn't know what to price in, because the projections were not adding or matching what the data was coming in. The economists were getting the information wrong. Right? So when there is uncertainty in the markets about what's going on, there's going to be a ton of volatility. And there goes Meta. All right, let's watch Meta, guys. I think Meta's our I think Meta's where we want to watch. You just have to be careful. We have 10 minutes going into this number. 10 minutes till this number comes out. Shit, it's on a free fall. Damn it. All right, guys, I'm watching 470. 470 is the level I'm looking for. I don't like that this thing has like no volume on that cell. Shit. And this is a nice setup here. You guys see how it popped right into that, you know, off. Oh shit, hold on. Where did we open up at? Down here. We popped and we rejected 500. Damn, they're already $10 in the money. All right, so I'm watching this level right there. I'm watching 490. Maybe even VWAP. So like 492. See if we can get that. I think we might have to jump in this a little early at 490. All right. It's a mean hammer channel. Your trade line's down here at 480 as well. 220. Damn, those spreads are wild. Are you serious? You want 20-cent spreads? Yo, Meta used to never be that far apart. That's crazy. Maybe I'll spend a little bit of money for like a 470, because if we get, you know, these will go to $1.50 if you get $10 on there. It should. That's crazy. Oh yeah, and what's even crazier is the amount of options that I have up. I don't want to. I'm not buying that far out of the money. You're just asking for trouble at that point. I think that's. I don't remember Meta being this wide in the spreads. I don't remember these spreads being this wide. It's probably because of this move that we just had there. Look, Tesla still hasn't moved. If you can't get above this level, Tesla's going to pull back. I'm pretty sure it's going to be going to 210, and it might actually happen right now. Tesla's probably either, you know, if it doesn't happen within the next few minutes. Like, look how that volume just fell off. Let's see. See if you get that move back down to pre-market lows. They're chewing up premium right now. That's what they're doing. Like, there's... Look, I'm going to turn away and watch Google, and it's going to start going. Oh, shit, I'm already in Tesla. Fuck. I missed it, guys. Fuck. I couldn't get in fast enough. They're already up 20 cents. They were $1. When I had them up, they were 75 cents. Now look for a bounce back to VWAP trade line. Look for a move back down to 210. Fudge, bro. That sucks. I'm not buying them. It's not worth it. And you're seeing some of that volume dry up. You got to get a bounce back. Look, 24 cents. You're up 20% just on ticks. Like, that's an easy 15 to 25% just on a few ticks. I don't like that Meta's like that. Alright, so we have a gap here. I want to look for this gap fill down here, guys, like I do. I want to look for this on Meta. I want this gap fill down here at like the low 470s. I think this could be a nice trade. It's just we don't have the volume that I'm looking for. Can I get this cheap enough? See, I'm not going to be able to get it. I'm not even going to go for it. Let's go look at, dude, what is going on? Hold on.
We provide our clients
allows them to hedge their risk, to trade, and to thrive. We will continue to be ambitious.
Dude, CrowdStrike is still falling. Still falling, you guys.
This is the beginning of a new chapter.
It's pretty crazy, if you ask me. All right, let's look at Apple and Microsoft. Apple had a nice range down at the, where is it? Did it break out? It's at the upper end of the range. All right, so Apple popped back into the 20-day moving average.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
All right, we have some data here in 2 minutes.
They explain life insurance is a valuable
I'm not sure.
We learned we could sell all of our policy or keep
Oh, that's up to you. I think you.
now we can relax and enjoy our retirement.
You know, you have to understand. You know, if you do, you want to give yourself time. I mean, the environment is in your favor. You know what I'm saying? The environment's in your favor. You would have wanted to get into those right there at 437 on that flat top or that support level there. I have down here 436 or 536 and then 532, and we're already at 533. So you know what I mean? Like, so if you go out time, they're going to be pricing in a move that's already happened, and the thing is that you may not get, you may not make much. You know, I just think, you know, I think you have to wait. Like, sure, yes, I like SPY puts, obviously, but we're coming into the 100-day. You want to be able to get those correctly. Like if you're like me, I probably wouldn't grab puts until we get into 540 or up at that 50-day moving average, because you're just asking for trouble. Because what's going to happen is you're going to pay more to make less, and as soon as it moves against you, you're just going to pay more to lose more, is what essentially happens, because they're pricing in a higher move. So I would find something that, like Meta, that had good earnings, that bounced higher, has meat on the bone, and if the market bounces back, okay, we look for a long. Like, I think it's best to just wait, because the move has already happened. Do you know what I'm saying? So wait for like a bounce back, things to slowly calm down, and get those bounce backs, right? 540, 544. We're already down just in 2 days. You're down. I can't even see it. I can't see it. At least for pre-market. So you're down 4%. From what I seen today, we were down 8% from the high. So, sure, you know, you can grab SPY puts. You just have to get. It's just the thing about options is you gotta, you know, you're fighting time and price. So you got to get the direction right. You got to get the entry right, and you got to get the timing right. You know what I mean? So if you can short, I wouldn't recommend shorting because you can really hurt yourself. But I don't know. You know, if you can manage your risk, wait for bounces. If you're going to get short and buy puts, look for bounces into support levels that should turn to rejection or resistant levels. Sorry, I had some indigestion or I had a burp or whatever. So that's what I would do, right? Like, I'm not buying puts until we are. In my opinion, it's the reward, the risk to reward makes sense. Do you know what I'm saying? Like, I'm okay letting the market do whatever it wants to do and not participate, right? The point, you want to put yourself in the best position possible over and over, and even if that means being patient. Let's see here. Let's go to this daily chart real quick. Damn, JP Morgan already down. That's a double top up there. Shit, man. Watch these financials, guys. Yes, banks. Let's watch banks, guys, because if yields are going to bounce and pull back, TLT is going to go higher and banks should go lower because they're not going to be making as much money on their yields. So, JP Morgan, like, that's where I would like to be short on a news-driven sentiment that will give me a move because there's a reason. So we just had the factory orders that just came out as I was talking there in Google. Like, you see how Google, like we said, 170 rejection, and like you see how you tried to reject 169 and like you don't have like you're going short at support levels. So and there's not enough volume or a reason to get into calls. So it's like you got to be careful. You know, I would try to find something that has news that's either separating itself from the market or a name like TLT. And look at TLT today. There's a news-driven cycle that's causing this to go higher. And if you don't know, we got into 95 calls. You're already $4, $3 in the money. All right? So, if for anybody that's still in it, great job. So I knew it was coming, guys. I knew the timing was good. I was just a little early. I'm like, guys, I think yields are there. I think we're there. I think now's the time. So I'm going to look for, as these yields rise, I'm going to look for, or as yields pull back, TLT will go higher. I'm going to look for banks like JP Morgan up here at this area. See if we can get JP Morgan down into like 200. All right, so that's that's a catalyst-driven type of trade. All right, so that's what I'm going to look for. If I go to the daily chart here, and I already drew out this wedge, like, man, something's coming here for banks. You see how you have an increase, you're starting to get that increase in volume to the sell side. There's our 50-day also right there. So we have a flat top support here at 200. Damn, that's already kind of taken. I'm gonna look for. Man, see, I think it's early. I would be careful if you're gonna trade today, guys. Like, make sure you have a setup. Like, make sure that there's a trade because we did a lot of damage yesterday and pre-market, so the trade's kind of been taken away, in my opinion, on a lot of things. If JP Morgan can get going, this could be a swing trade back down into the 100-day moving average and like 195 to 200 on JP Morgan. I'm actually going to look here now and look at the volume already today. And as yields, so here's what we're going to do. Here's what I'm doing. Solar names. Didn't they bounce yesterday? Look at the MPH. It's trying to, it's gapped down. Yes. We should start looking at solar names, right? Because as interest rates ease, this helps solar, automotive, like anything that is interest rate affected is what I'm wanting to look at. Rates go up, banks make more money, yields go down, they're going to make less money, right? There's less money that they make on the spread. As yields come down, TLT goes higher, right? As bond prices go up or yield prices go up, you know, the bond price goes down, you're collecting more of a yield than the ticket price. So let's see here. So now, right now may not be the time. Let's see, FSLR, and look at First Solar. And Bank of America is still selling off, man. I should have taken that swing trade. Another trade I didn't take up here. Right here, guys. This trade right here at 41.50. I said Bank of America is short. I never took it. I should have. I should have just put something light on it. And that trade was to be 2 weeks out. Fuck. Rivian. TSLA. So Tesla's pulling back there. All right, so those 210 puts are at $1.35, $1.33. Good job if you ended up, you know, taking those. Take your profits. The target for this would be pre-market lows. I tried to take it, but I was kind of it sold off in front of it. I was not willing to pay up for it. I was not willing to pay up for it. But this could be a nice trade here. It's all. My point is that this thing's already up 30%, 30% from 214.60, 214. So, you know, it is what it is. You know, it could still have 100% left on it. 50%. Oh my fucking God, I missed it. I swear to God, bro. I swear to God, man. Unbelievable. I know it. Google had some room. I should have gotten on it. I don't know why I did. And I've had a bad week. I'm going to say it now. I made money. I'm green on the week, but I did bad this week. I did bad. That's crazy. If you get a bounce back on Google, that's crazy. I can't believe I missed it. And I fucking called it out too. I said 170. Google's into 170. I just sitting here saying it. Google 170, 170. Short at 170 Google. Prior support, now resistance. Boom. That's your entry. Look for a move back down to pre-market lows at 168, now 166. So what will we do? We're going to look for a bounce into 168 to try to take that to the downside if you want to. It's got a little room left. I would be careful because you could really get caught. You know, it's like made the move and people are going to be taking their profits. It may not give you the extension you're looking for is what I'm talking about. That's what I mean. You know, you had to have gotten it there at 170. Anybody that took that, nice job. Good job. We called that out perfectly. 170 shorts up the 100-day. You got that 100-day support level with the 100-day moving average. You bounced right into it. Fucking two. I missed so many trades this week. I did. I missed so many trades. I missed so many trades. Is Meta selling off? It did, didn't it? That's so funny. It's already down into 178.
Meantime, big cap tech, a major story as well today. A big part of the sell-off. Apple's trying to hold on to gains. Amazon on pace for the worst day of the year. Dan Ives joins us here at Post 9, Wedbush securities analyst.
Just going to have to do better. I don't know.
Apple, you seem relatively, the phrase that's been tossed around is good enough for now.
I don't know how. I should have just taken both of those, but whatever. It is what it is.
Shares are popping here to new highs, $3.65. Delta Romeo Michael Alpha, DRMA.
Did anybody take Tesla? Did anybody get on that? If you did, congrats. You know, it's already up to 220, so you're up, let's see, 150, so you're up 100%. You're up 100% on those 210 weeklies, even if you got in at 220, 215. See, that bounce back really kind of hit you there. That's why you got to take your profits. But
80 million units is what we started for iPhone 16. Now it's up to 90. So this is going to be a balancing act, as we've talked about a lot. But in terms of the data,
JP.
in terms of what you saw from Microsoft,
Let's see here.
from the Azure perspective,
Trying to think of
from an AWS perspective for Amazon, the AI revolution story, I believe, is well intact. And all
Cloudflare reported they had a gap up.
despite the white knuckles that we're seeing in the market.
The FT is reporting the Elliott Management
Amazon.
investors recently that NVDA is in a bubble and the AI technology is overhyped.
I could just
and
get
that the
sick,
analysts
man.
not matching the hype.
Not really. I don't care. I don't care. I called it out for you guys. I called, you know, Tesla and Google out and Meta. You know, if you didn't get it, you didn't get it. It's all good. I understand. You know.
Look at what Lisa Su talked about from AMD. We saw
All right, let's go to the Qs.
in terms of the acceleration
And we'll look here.
for second half.
So the Qs are extending. SPY's extending.
And my view is, look, the haters continue to hate. The bears have been there for the last
Okay, so why didn't you take them then, dude? They would have. What do you mean they would have? Like, but what if they didn't? That's the thing too. Have you looked at the option prices? Let's see here. I'm going to go to the SPY right now. I'm just going to go to the SPY right now. All right. So you said this. I know. Here's the thing, man. Here's the thing you have to understand. And I'm not yelling at you or mad at you. Like, you see that we're like right into the 100-day, and we've only went a few points. I mean, I guess we have moved a little bit. We were up, like, that's what I'm saying. You had to take it at like 540, 538, because you're into the 100-day. So this was a support level here. You know, you want to look for the bounce back. So here's what you would do, or I would do, or what someone should do, is look for the bounce backs. But you're at this moving average. It's like the move's already been taken. So if you were to have gotten short, I don't know, like, this is a nice setup, right? You tried to hold VWAP, it breaks down, you bounce into it and reject. I mean, I told you, Tesla short, Google short, Meta short. I just gave out those 3 trades. The overall index is like let's go look at the 532 puts. Let's look at the 532 puts. They're 375 right now, right? That's for, what's today? Today's the 2nd. That's what I thought. I don't know why the 1st is still up there. So what I'm going to do is, let's go pull these up. We'll go to a 1 minute. Okay? Here's the thing. I'm going to ask you if this was worth it. So when we were talking about this, you would have paid $200. Like, right now, you're paying $200, right? Anywhere up in here. Yeah, you could have got it at $1. But when we were talking about it, they were around $1.95, $2. Now you're getting the extension. That's what's going to happen. It's going to extend. So they're up 100%. You could have paid less than $200, paid $1, made $2.25 or so on Tesla. Google 60 cents to $1.50, 40. But any bounce backs would have murdered you today, on today's at least. Like, look at this little pullback. Go look at the stock right now. It went from 415 and it went to 350. It just took 25% away right there, just on a wick back up. So that's what I'm trying to, like, what I'm trying to get at is that any little bounce back, if you don't take profits, those bounce backs are going to hurt you even if you're in the money, because the volatility has already been priced in from yesterday and pre-market's move. It's already priced in at 10. It's like paying $10 for a $10 move, and the stock moves $10, and you're like, damn, I'm flat. I haven't made any money. Why is that? Well, you paid $10 for a $10 move. It made the $10. You're break even. You lost money, right? So it has to do $20. So the stock needs to do $20 for the $10 move you paid to actually make it worth it, is what I'm saying. So, you know, so still, it's like, you know, if you want to grab puts, that's fine. But listen, when I trade, I worry about how much I'm going to lose. You know what I'm saying? To me, down here at the 100-day moving average, I'm not taking it. You know what I'm saying? I can't tell you guys what to do. All I can do is just say, understand the risk. Because any bounce backs, right? Because this is how I started to stream out today. Is just so people that haven't been through it, to understand a bear market, is you have to understand you're going to pay more to make less. It is what it is, right? Because you're going to have big moves. So the SPY's down to, you know, we'll just say 10 points. You're going to be paying for a 10-point move, and if it goes, you know, 3 or 4 points, 5 points, as in dollars, $3 or $4, $5, and you're paying 10, and then it bounces back on you, you're down money, right? And you're going to have to give it a room. So it's a risk to reward. To me, is it worth it? No. But was Tesla, Meta, and Google worth a short? Sure. You know, I just think the SPY, you know, that's just, I can't tell you guys what to do. Just what I would do, right? If I'm not getting yesterday's close or 540, I'm good. I don't want it. I don't need it. You know what I mean? I'd rather wait. I've made money this week. I made money. I have had a good month. At least July was a good month for me. You know, it's not worth it to me. It wasn't worth it to me to pay $2, and then the stock bounced back, and now I'm down 50%. And then it's like now you're getting emotional because the stock bounced back $2, and you paid a $5 move. That's all that that's where I'm coming from with that. That's all. Is it worth it? Sure. Would it have made you money? Yeah, now. But do that 10 times. 8 times out of 10, it's going to bounce back to prior day's low, prior day's close, and you're going to be down 50%, and you're going to just start getting emotional, and it's going to get frustrating. I'm just saying it from examples. I've only been through a few different, like 2 different cycles of bear markets, and you have to understand, you're going to pay a lot more. You're paying a lot more for a price that's already happened. And you get bounce backs and it goes against you even just a little bit, you're going to be down 30%, 40%. So, sure, it worked this time. Yeah, sure. Where would we go? You have the 100-day moving average here. You know, if you want to go out 2 weeks and try to get a 520, you know, you think the SPY can get down to 520? Sure, that's an easy. I think the SPY could get to 520. We start breaking these levels, I'm going to tell you right now, if we start breaking this support zone, which it looks like we already did, you could look for a bounce back into this. What are we down already? See, look, the SPY is already down 2%. That's the other part to this. You're talking about getting the short the SPY when it's down 1.5%. That's just, yes, could it sell off? Sure. But I think I've only seen the SPY go 3%. Maybe 4 times. You know what I'm saying? 4 times. So maybe we'll just say a handful of times. Look at all this buying in here. Look at all that buying. That's because it's down 2.3%. It's just, I don't know. This could be a really nice reverse. Look at that volume starting to come in there. All right, you know what? This could be a nice double bottom here. I am on SPY, right? Yeah, look at this nice little double bottom here. Hold up. We could get a nice reversal here. Let's see. So again, Ding, I'm sorry about that. Me personally, I can only speak for myself. You know, sure, that's a nice, you know, you broke, retested pre-market lows. I asked myself, is the move worth it? Do I have enough meat on the bone? You know, this is ugly. Might as well look at 520s. Just be careful. Dude, this thing's just getting destroyed. Look at can you guys see time in sales? Look at the amount of buying that's stepping in here though. And it's still flushing. So, look for 525 as your next level. 525 is your next level on the SPY. If you bounce back to 532 and you cannot get back up through 532, I think that would be an area to look to be short. But I'm not shorting the SPY when it's down 3%, 2.5%. I'm good. You know what I mean? You guys can have it. And if you know, I just can't do it. I'm not doing it because I know the repercussions. I've been through the repercussions. I'm good. I'm not doing it to myself. I've made money. I'm not giving my money back. If this thing sells off 4 or 5%, what is the record down day? Let's go look at that real quick. And we said, what, 532, right? What is the biggest percentage day the SPY was down intraday? So 4.3%. We're halfway there to the biggest down day. Single days movers over the last year, SPY and stock average move was 3.4 with the SPY. Single largest daily move 3. So like 3. That's what I say. 3% is about it. That's about all you're going to see unless something crazy happens. But I guess 4.3 happened September 22nd. See, no, this had to be from the gap down or something. That had to be from a gap down. I'm talking like intraday. So that's our record is 4%. And we're at 2.5. Could we see 3? Yeah. I don't think you see anything more than like 3.5, 3.10, 3.4. I don't think you see anything like that. Like even seeing 2.5 on the SPY is actually pretty crazy. See how that selling just stopped? That's why. Because professional traders are like, yeah, this area does become resistance. You know, because look, we are underneath 532. Is that what that is? 532? Yeah, right here. Flat top resistance. Right here. All right, right there. You got some support. You got a little bit of resistance here, but more so the support. You're under it. So bounce backs into 532. Look at these. Look at this. This is insane. Look for moves back down to 525, but I think this might be your new range for a couple days. Anywhere from like 529.50, 530 to 532.50. Maybe even back up to prior highs at 538. But you know, I'm gonna be patient. I'm being patient. I'll wait for bounce backs because we're gonna bounce back to this level. We'll be back there. Whether it's Monday, Tuesday, we'll be back there. And those puts will be a lot cheaper. That's crazy. We do have volume, guys. This thing could extend. That's one thing that we do have for the bear case is you have a massive amount of volume, even more so than you did. Look at that. You're double, tripling the volume from yesterday. Great job, bro. Great job, man. How much did you pay for those? You had to have paid like $1 something. That's crazy. Well, nice job, man. Nice job. Just anybody that's watching this, if you guys see these people, yeah, see that's so crazy. For a 10-point move, you paid $1. Exactly. That's so crazy. Because think about if that bounced back 50 cents, bounced back $1. You're down 25, 35%. That's why you guys got to understand. Just go in small. If you think you see something, take it. Don't wait for me to say it. You know what I mean? I'll give you guys what I see and what I like. I'm not shorting the SPY when it's down 2%, 2.5, 2 or 3. Can it go further? Sure. The probabilities of that though are slim because you rarely see 3. You rarely see 3%. You have a reason to see it today. I will say that. Right? That's why you're seeing the volume and everything else. Let's see if we get a bounce back. This ain't good, man. I'm telling you guys, the Fed's this is exactly what we talked about, that the market's going to start pricing in a recession because the Fed did too much, was too high for too long and ignored what was really going on. Okay, so 532, more so 535. So that's what I'm going to watch for, guys. I'm watching for bounces into this area here that was resistance, support, and that level is right there at 532. So if you bounce to 532 and you can't seem to get above it, then we'll look for, you know, some further downside, and maybe we do get a 3% type of day, which is very possible. But look at this volume that's coming in, right? You see that increase in buying here? You're starting to see a bit of a double bottom trying to reverse, but this would have been nice right here. You see how you have VWAP right here? This would have been a nice setup that I would have taken. This is the stuff that I feel comfortable taking, right? You see how you just have this double bottom right here? Say you have a double bottom right there, an intraday. You have a gap down double bottom. Boom, boom, you break it. So then you look for the bounce back. What else do you have? You have VWAP, right? You have VWAP. I have a double bottom intraday. I have pre-market lows, support and resistance. So me getting short would have to be right there. Why? Because I have a ton of reasons. I broke this double bottom with an increase in volume. So that's where I would get short. I would not get short, you know, maybe if you get on the short, like on the breakthrough 434, like you said, Ding. So just, guys, be careful. We can always go lower. We have a reason to go lower. Listen, the market's pricing in a recession because the Fed has done too much. They've ignored the fact that we've been in, the data has told you we've been in a contracting GDP, contracting employment area, employment market. So bounce backs, look for bounce backs, low volume bounce backs, and see if you reject, and that could be a level that you could look to get an entry for a 524. Listen, the SPY is going to be pretty liquid. Go small, because you have to understand, if you get a freaking 50 cent, a dollar move the opposite direction, are you going to be able to hold on to that? Can you handle being down 30, 40, 50%? So don't go in with like, oh, I'm just going to throw, $800, $1,200, $2,300, $5,000 at this. I'm not saying you guys would, but I don't know. I'm just saying, make sure you can handle it. And if it reverses, just understand that it will and can go to zero. Understand that the SPY, on average, is usually, even in a bear market, you see 1.7 to 2% on the SPY on average. You will hardly ever see the SPY 3%. Could you see it today? Yes, because we have a reason. Will you see 4%? I would watch out if you see 4% on the SPY. I'd start selling my long term. That would be a deadly sign that something's really wrong. But here's what I would say on that. Just understand why I'm telling you the percentages. You know what I'm saying? Just look at the percentage. If you're down 0.8%, sure, you got some room left. You're at 2%. It's like what the risk to reward. Remember that, the risk to reward. Like, I'm going to risk like a potential bounce back for 1% to make what? Like, yeah, I don't know. You know what I'm saying? It's like, I don't know, to explain it to you guys. Just the risk to reward doesn't make sense when the SPY is down 2%. If it's down 2%, then it bounces back and it's at like 0.8, 1%, sure. Then you look for that move back to 2%, back down and see if you can't have another down day. And watch the time on the clock. Notice how we are not making progress. Even with volume, we're not making progress. So if we sit here for a little bit longer, you could see a really nice, just give it up, rip, boom, back up there. I don't know. We have a reason to sell, so this thing might get to 3% today. We have room here, guys. Here it goes. That's a nice bear flag. Are you going to get an extension lower? Watch out for a failed breakdown. Something like this. Boop. And then it just flips back and reverses. Sucks people into, oh, I got a bear flag. Then it tries to flush, and then it flips and reverses. There's a lot of selling. Not a lot, but you're seeing those mean flashes of selling going through there. I figured they were about $1 for a $10 move. That's crazy. DJT, hold on 1 second, because I might try and get a move here. See, the volume just gave up right there. Look at that. Notice how the volume just gave up. All right, so.
But as I said, particularly for our young fans and the morphing of all fans to streaming, that was a critical component of these deals, as well as our ability to reach more people through traditional broadcast television.
Oh, dude, where did my options go? Bro, dude, I gotta do this again? You gotta be fucking kidding me. You gotta be fucking kidding me, bro. Sorry, guys. This is fucking ridiculous. So tired of this. Let's see. What is that? 534.
Twitter can sometimes do that, and Simone Biles has now taken to Twitter. She wrote this. She wrote, "I love my black job," seemingly taking a jab at former President Trump after her Olympic win. It's getting a lot of play here in Paris, and that, of course,
I'm so tired of this black-white shit that's going on. Sorry, I just hear CNBC. Let me.
Vice President Harris and her overseeing of the border at the time. He was saying that
RKT rocket companies, RKT at the highest volume earnings.
Watch, guys.
Tango of about
See if 530 breaks and how it breaks. I got a lot of volume here. I just got to throw up Delta. Man, this is such bullshit, man. I cannot believe this.
here in Paris today.
Yeah, she's been someone else. You mentioned, of course, the GOAT. I guess she believes she has some haters. I don't know who they are because she's a unique talent. We're jealous that you were able to watch her live. Yeah, I mean,
It was pretty cool.
she is the GOAT.
It'll take me 1 second.
But yeah, I think she is. Andrew, you also met with a lot of business leaders out there. I mean, any sort of broader takeaways in terms of confidence, for example, and things of that nature that are important to our viewers?
Well, so I would say actually that remarkably, and I wonder whether it's just the spirit of the Olympics or not. We've been seeing these reports come out, whether it's Amazon or others, that have actually led the markets down. We obviously had this jobs report this morning.
Sorry about that.
Concerned, but when you talk to the CEO community, there was actually a remarkable confidence. Now, maybe there was misplaced confidence, but you did not hear the kind of hesitation that you've heard now even in some of the earnings reports this past week. And I don't know if that's a tale of two cities. I don't know.
All right, watch this breakdown here. See if it kind of like sucks some people in there and fails to break down on low volume, which it looks like it's doing. Kind of like what we drew out right there.
What the markets are doing right now, I think.
Oh my God, bro.
700 points. Is that indicative of what's happening in the real economy? Is that something else? It may also be.
All right, man. I missed a few trades today. I did. I missed Google. I missed Tesla. Well, Tesla I didn't really miss. I just didn't want to pay up for it. And look, Tesla's bouncing right back. Let's see here. Let me look up DJT for you. Is it doing anything? It is kind of bouncing. So Monday, remember Sunday night, we called this out up here and said, oh yeah, it sold right off. Bang. It's a nice short. GME, AMC earnings, right? AMC has earnings. Let's see, Tesla. Great job, Bingo, though. Ding, again, I'm sorry, bro. If you ask me a question, I'm going to be brutally honest with you. Whether I'm right or I'm wrong, I'm going to be brutally honest with you guys. Like Tesla now, let's see. Do we get some volume in here? Is this an area that we could reject? That's a nice trade line VWAP cross. Can we get another? Man, this is absolutely insane. I don't know what to do. I really don't. I feel like I'm just getting suckered. I really do. I feel like I'm getting suckered into something. Because the thing is like I'm up this, well, we're in a new month, so let me not. I'm up this week. So actually I might be down because I'm in a USO. I've only got a couple contracts though. So I do have a position on just in case like that Hamas war and stuff like that happens. Yeah, it is. I just feel like we're at the levels though. It's like it's really hard to go short because my Meta, we were looking for 470 up there at 480 or 490, I'm sorry, right here. And you know what I mean? It's like I needed it at 490 because that's $12 already. You know what I mean? So it's like, what do I do now? Do I wait and try to get a bounce back? Because the volume is everything I'm looking at, like Meta. Like, look how the volume has fallen off. That sell side volume's fallen off, and the increase in volume to the buy side's popping up. What about Apple? Apple, if the market tries to bounce. I feel like I failed. I feel like I failed. I do. I mean, I did call these trades out. I will say that. I called them out. Google, Meta, and Tesla. They were nice shorts. I tried to take Tesla, but You know, it took me a little too long. Like it just went. You know, and I try to be. I'm a person. Again, I want you guys to remember this because I say it all the time. I'm a person that like I'm a little bit and it affects me because I try to be a little too perfect when I do stuff. I want to say I'm with you, but I don't know. I actually don't even know if I want to do that. I wouldn't mind it. It's got. I just don't know if we're going to get that explosive move to the upside. That's what's worrying me because we could see a 3% down day. Look, we're going to break this level. So let's see. Is this bear flag going to work? You're going to get an extension lower here. Or are they just going to trap a bunch of people in this? We're down 2.5%. Feels like it doesn't want to break down. I'm watching level 2 in time and sales, and it just looks like everybody's playing the bounce. Let's do it. Let's look for a bounce back to 530. That's the other part to the, especially daily options. You're gonna have to get the timing right too, because if it just pulls back and wicks down, you might get cut, and then it you know, it goes past where you bought it and you're still down. So bear markets are tough. I started the stream out today talking about that. That's the first thing I talked about. Understand what happens. You're going to pay more to make less. There's times like today where you're going to make some money, but you paid 100% to make 100%. Technically, right? If you bought these puts at 538, you got the 530 puts, you paid over $1 for them. It made that $8-10 move, and you didn't get dollar for dollar. You know, a 10-point move, and you're buying $10 out of the money. You should be up 800 to like 600%, right? Normally, if that was the upside, and those calls or puts would normally be around like on a $10 move, like even $8. They would be like 25 cents. They'd be like 35, depending on the time of day. 35 cents to maybe a dime. You know what I mean? And you're paying $1 for those. So, all right, here we go. Is that a failed breakdown? This is exactly what I drew on here. It looks good. Let's do it. I'm not even in SPY. I don't even have the SPY up. I mean, I have it up for you guys. I just don't have it up for the options chain. 32. Just be careful. That's all I say, guys. Even myself, like. All right, 532s. I wish I could move this stuff. Dude, why is there not that many people in these? Why is there like no volume in open interest? Like, look at that open interest, 189. Do you guys see that on the options chain? You guys can see that, right? Look at this. There's nobody that even wants to sell or make any type of calls. I don't think I've ever really seen that. That's crazy. We could see a shitload of people start jumping in on these. Like that open interest to be 294, when something's not right here. There has to be more than that. But if you go over here, you see 3,000, 7,000, 5,000. You should normally at least have like 1,200 to 2,000 in this area here. And you don't. Here you go. Watch that trade line. You broke the level. Watch 530 in that trade line. I want to see, for me to get bullish, I want to see us rip through 530. I want to see us rip through the trade line and rip through 530. or else we're going to see another 3% day. And we're going to end the day down here at 525.
More concerned right now, and maybe the Fed moves to where the market is and is concerned about the economy.
On that point, Steve, thank you.
Let's see. I want to see it rip through it.
Joining us here at Post 9 today is Jan Hatzius of Goldman Sachs. Great to have you in, Jan.
See what I mean? Trade your plan.
Rather than last, they would cut, yeah?
Dude, they're already up. Dude, there's so much. They want so much for these.
As Chair Powell said in the press conference, there was a large majority for holding, but with this information, I'm pretty sure they would cut.
Are any wrinkles in this particular print that make it less concerning than face value?
What did AMD do? Is AMD... Remember how AMD was strong today? Look, AMD is still green. So take this for what it's worth. If the market turns around and AMD is not down and it's actually green, you want to see if that strength can go into AMD and that thing has some momentum to the upside. I'm not saying that it will, but, you know, ride strength with strength. Ride weakness with weakness. You know what I'm saying? TLT. No, hold on here. AMD. Tesla's down 2.5%. I knew I should have taken that second leg down. I knew I should have taken that bounce back short. I would have made a little bit of money. I'm done. I'm just going to start doing shit. I'm done. Alright, see like Google's like right in this level of support. Could it break? Sure, yeah, it could. Let's see. Here we go. Fuck. So I'm wondering if it's going to be hard to get the SPY to go higher because there is like nobody interested. There's nobody making contracts for the upside. There's a lot of volume. It's just so weird. Look, and VWAP's going to be coming up here in the 532, so be careful. Here it goes. We're going to sell off. Here's your next leg. See if you put in a new low here. Let's see. Let's see if we put in a new low. No, there's still buyers, but yeah, look, 1,200 to the sell side. I haven't even seen $1,000. I haven't seen 1,000. I haven't seen 1,000 shares filled to the upside. Like people are still loading onto a short position here. Some, you know, you're getting a lot of taking profit, but they're not taking a lot of it off. Like, look, there's not. I still haven't seen one position over at that. Now you should. Now you should see like a 12, maybe a 2,000 fill to the buy side after you broke that level to lock in. If you were short from yesterday, still don't see it. But I still see. Look, yeah, I think I just seen a. Did I see a 3,000? I know I had to have saw it. I could have swore. So like, so 532. They're damn near $2. So we're paying $2. Well, yes, that's what I said that this morning. I know because of taking market share, but we know why it's strong, but it's not about why. You know what I mean? It's more so identifying what is, you know. There's obviously a reason if the overall market's down 2%. You know, but just finding the strength, and when the overall market reverses, you're in. No. Wait, so I almost got into some SPY calls here without even knowing, because I had the orders up. Damn, I wonder when I hit that. Anyway, So yeah, I know it's just eating up market share with Intel and stuff, but just identify that, right? And if there's anything else out there that I may not know of that's, holding up strong. And also, they had decent earnings. They were actually one of the stocks that didn't go down on earnings before Intel reported. When AMD reported, they went up on earnings, just like Meta. Meta also went up and had really good earnings. So we could see, AMD and Meta, we could start using them as hedges. And look, Meta, I think was red. Yeah, it is red, but it's like, so you can see here when the market starts to bounce back, you can see Meta is really participating in the bounce back. It's got a low PE. It's really starting to extend higher. So just use because here's the thing, when you get into these markets, you want to be able to learn how to hedge because it'll help you manage your risk, right? Identifying what's strong, identify what's weak. That way, if you get these big reversals, you cut the short, you ride the long, and you look to take advantage of, instead of, you're being reactive instead of predictive is what I'm getting at. I did look at Apple. Apple's another one. Exactly. Apple's another one. It's just hanging out up above that 20-day. It's above the range. I was looking at the initial morning lows here, which is that 220 level, and this initial morning high at like 221. So let's see if the market does bounce. How much room does Apple have? Where could it go? Is it going to break out to all-time highs? No. Let's see here. Let's see if Apple can break above here. It's up 3%. So maybe you have 1% left. I'd look for like 226 on Apple today. 226. The top end of that range is at 228, 230. You have a gap up here as well. Remember we called that island reversal out? Remember I said, hey, let's see here. You might start to put in an island reversal. Upside on Apple you have is 230. I may end up trying to take it. What's this? Is the SPY still going higher? I wonder if it's probably is because these things are moving now. That's another one. So we have AMD, Meta. Even though Meta's red, I'd probably exclude Meta because it is red. But AMD, Apple, we could look for these names to ride to the upside if the market can bounce back. Right? We'll just ride the strength and we'll ride the weakness. And I'm talking, remember this for the next 2 to 3 months, however long this takes place. We could be in this for a little while. Man, I really hope we can just like sell off. Like, I still would like to be able to buy more S&Ps. I told myself I was done after 400, and I understand that that's dumb to say, but like it's just hard for me to buy the S&P above 400. It just is. It just doesn't. It's not that it doesn't feel right. It's just, I have to understand that. It's not that what I should say is not that I have to understand it, but like, it's not that I don't understand that, we put in times in our, you got to expect, in your life going down the road 5-10 years that the market's going to, the market should be up, so you should be okay to buy the dip at a higher price and I guess average down on the way up. But it's just hard. It's just hard for me to buy above 400, in my opinion. So that's a sell-off, a bounce back. Was that 223? Did we hold 223? DJT. Nice call out, Ding. All right, here goes DJT. Let's see. What room does it have? It has room to $28. Maybe 29. Maybe 29. Damn. What made you bring up DJT today? Was there any reason why? Like, was it at a certain level or anything? Gap fill? Yeah, that's it. Opened up right below that gap. Not sure if it had volume pre-market or what, but good call out. Watch this resistance zone right here. 2750 is an area I'd be careful at. See, yeah, so you should expect a pullback there. Doesn't mean it will, but all right, so we might possibly have that failed breakdown. 232. That's crazy. Watch these calls if it breaks back down. You've only made 20 cents on that. It's wild. Let's see, Tesla's got some volume still to the downside. Fuck. I feel like I should still get short this thing and look for.
Because I think you have a buy rating on that. That's taking it hard today, down about 11%. AWS was very strong. Typically, we'd sit here if they had an accelerating quarter the way they did, Gil, and we'd be talking about a stock price up. So what happened?
On the consumer side was weak, but
Oh, what are you going to do, AMD? Are you going to go down now that the market's going to go up? Is that what we're going to do? Is that what we're doing?
technology market. Its growth accelerated from 17 to 19%, and importantly, they are catching up.
You got to hold this level here on AMD. Look, it's rejecting it. 235. It's rejecting it. Wow.
AWS is doing phenomenally well at very high margins. The entire value of Amazon can be justified by just AWS. The consumer bit is still a good business, but if there's a consumer slowdown, which it's abundantly clear there is, they won't be able to escape it. They'll do better than
I can't believe I missed again today. I had a really bad week, guys, and I apologize. We had some nice call outs, but
NVIDIA's market cap is bigger than Amazon, in spite of the fact that AWS
Google looks alright.
is a bigger business that will grow faster over the next few years and is not cyclical, is recurring. So just AWS is enough to justify.
So, like, I don't know if Amanda's here, but man, I hope to goodness she sold those NVIDIA puts, man. Or not puts, but calls. She was, I think somebody yesterday here, she was in NVIDIA calls, and I'm like, man, you got to understand, like, what could happen. And what could happen did happen. I haven't looked at NVIDIA. No, I did. It's down. You know, she does have time with it, but
that are not just products in order to keep people compelled within Prime, and internet access is a good one. Strategically, it's an important thing for them.
Rejection.
I think it's Kuiper like the Kuiper belt, and they'll continue to invest in it, but it's a small drive. The bigger items were that international profitability was down. As they expand there, domestic profitability was actually fine. There are some puts and takes around stock-based comp, etc. With Amazon, what we've learned over the years is they don't really care what we have to
all
say
right,
about
look,
long-term
she's going to break down here.
They invest
Let's
in
see.
this. Over time, they can deliver 6+% margins, and that's what they will do. But in any given quarter, especially if a weakened consumer, we may not quite get that.
Yeah, and the time we have left, real quickly, I mean, all the hyperscalers continue to commit enormous.
Oh, that's a nice break and retest on the Qs. That's so crazy. You're down 3%. But the SPY is down 3% too.
Short term, NVIDIA is going to have record results this quarter, probably next one.
Dude, I told myself I was going to sell these at $74, but I got to hold on to these. So I wish you guys to understand, I also, so I have a trade on right now that I'm down. I was down like 50%, but I only bought a few contracts and they're cheap. It's because it's out of the money.
Amazon is now selling services based on its
Yeah, I'm down over 50%.
based on its chips, including to Apple. Microsoft just guided to a decline in margins because
I knew that was a sucker move, but this was the support level I was watching.
a year for every year they
So I put this on. I do have time. All right, I do have time, and I don't know how this trades. So that's why I only bought a couple contracts. But I said, you know what? If something happens, it's, you know, I'm not trying to predict the future, but just in case something happens in the next few weeks, I want to have something on the table. And now that I'm thinking that the economy's slowing down, I don't even know if it's going to matter much if something does happen. So it's probably just a trade it's probably a sucker trade, to be honest. I think energy's going to start pulling back. Yeah, SPY is looking to go down to 525. There she goes again. And what did we say? 532. You never quite got there. I'm not giving up. Tesla broke. Tesla broke down. Does it? Did it break? Yeah, did it break that level, man? 2750. Yeah, this thing's got strength. Good stuff, man. Good find here, bro. Look at that pullback. Let's see if we can hold this level. Yes. Oh, come on, bro. Look, see, I'm not gonna be able to get it. I've already taken too long. Let's see here. Oh, heck yeah, bro. Dude, look at that. There's a massive amount of volume there cutting through that level. That's always a good sign. I guess you would look for the 20-day moving average. Let me go here. Let me pull. I gotta pull up the daily chart because that's what I need to go off of. 2950. So that's the level I would look for. Okay, it's at $30. They're $30. Yeah, let's see if we can get a bounce back to $30. These are all the people that did not partake in a 2% move down on the SPY. And I'm going to join them. Let's go. Oh, damn. Damn, that was a massive amount of selling there. Be careful. Let me see here. Yeah, watch out. 28 may not hold. I don't like that anymore. Let's see, 1 minute. Look, it already gave us the warning. You see the sell? You see that sell side trigger there on that low? Look at that volume. That's over 175,000 shares sold.
The S&P down about 2% plus here, 2.5. Russell with
Bro, it's gonna go, isn't it?
Dow getting off easy with a 2% decline, but yields are the other part of the story in the wake of the jobs number today, which did miss. Unemployment goes to 4.3. 10-year dipped below 3.8 for a moment.
I think that moves over with.
821 is a far cry from where we were
Fuck,
just a couple of days ago.
It's okay. I'm just gonna take it into the next week. Take it into the next week. And on Sunday's watch list, I'm gonna have we'll have up the weekly goal, and we'll do better. Do better. AMD is still sideways. Oh shit, I forgot about Baba. I forgot about Alibaba, man. This was one of those easy money trades that I wanted to show you guys today.
Its worst intraday performance in its history, and then you got to mentioned quickly,
75.50. It's still going too.
closing above 19 was seen as a
It's
big
still
deal
going.
as of the year. Now 28.
All right.
It's getting awfully expensive.
Yep, goes up, volatility goes up as the market sells off. You have a few factors going on. So, not a great market to have a mixed quarter. That's the story with Amazon, and certainly to have a very poor quarter like Intel. You're getting punished for that. But the backdrop here is the economy.
So we have a level here, okay? So you guys see this 15-minute chart? I want you guys to keep an eye on this level right here, okay?
Well, guess what? Now the market is telling the Fed you need to do more. A double in September. That's the odds for that.
76. Watch this 76 level. And look at this morning, how it was also your pre-market low. You pulled right into the level. And I want to see if we break this level. Because if we do, we should have room back into this gap at 74. I'm not saying that it'll fill it today. But if it holds, we could look... Dude, what is up with the daily chart? We would look for a... could get a bounce back into the 50-day, but... Let me see this.
Yes, although people were beginning to talk about whether that earnings growth would come from Mag 7 or the rest of the market and even smaller.
Look, there's your... Let's see, you got a wick already from this morning.
I think that's what you're seeing with the sell-off in the Russell 2000 today, as people are pulling back from the trade that has worked through the last couple of weeks with a slowing economy, with a bit of a concern around rates. Small cap is definitely getting penalized.
So what are you telling your clients about what to do right now? Is it really worth rethinking everything as the market appears to be doing just in the last 48 hours?
We don't think it's a time to be rethinking or completely reallocating or rebalancing. What we would say is continue to reinvest in those names that are delivering growth. What we saw with Meta, what we've seen thus far with some of
Alright, I gotta scalp. I gotta do something here to get some shit going.
healthcare names. So earnings are still good. They're just not great. And so I think right now the key is to try to stay calm, carry on, and really watch to see how we...
He said, try... Look, this guy is worried, you guys. This guy on CNBC is really worried. He said, I think we should try to just carry on and keep going. Like he said something like just keep buying, guys. We'll hold this market up. Just keep buying. Don't let, he's nervous.
It's cooling but not collapsing. We're seeing a slowing and hiring, but we're not actually seeing...
I wish I could play it, but I'll get there'll be a copyright strike. If you guys have CNBC, turn it on. It's pretty... The way he was saying it was like worrisome. It's like, don't worry, guys. Wear the mask when we go into the bank robbery. If we get the money, just keep running, keep running, keep running. You don't have cuffs. The cops haven't got you. Keep running. Just keep running. We'll get away with this. We'll get away with this. You know what I mean? It's kind of like what he was saying and how he said it. Like, I don't think we should worry. You know, we don't hear sirens. We just robbed the bank. We don't hear sirens. They can't see our faces. We're wearing gloves. You know, so there's still a chance we got away with it. Just keep running. Keep running. No, go. More. We got to run further. Farther. To the gymnasium. I'm going to look at the IWM here on an hourly 4-hour chart. Damn. Damn. Look, I was fucking right. I was fucking right. I'm going to, yeah, I'll go back to DJ. Look at this. I was right. I was right. I was right. I was right. And I didn't get any swing trades. Look at this chart. And look at this chart. I knew it. I knew we would have a bear market start to ensue when the IWM got to 230, 220 to 230. and got up into this area, I fucking knew it. I knew it, and I did it, and I did not position myself for it like a fucking idiot. I knew it. Just like we did up here, you had this minor sell-off, which takes you here. Let's look for a bounce back. Let's see if we get that bounce back. We put in a lower high, right? Put in that lower high there, which should take us into September, October in front of the, whatchamacallit. And then, you know, then we look for this move here. At least down to 160. And then we match the SPY and the Qs and the Dow and the IWM finally get matched back up. That divergence between all of them, it goes on, but it doesn't last for very long. Or at least, it doesn't stay like that forever. They eventually meet back up together. Where on the chart, if you put them up next to each other, they're right around the same area. It's not the Dow and the Qs and the SPY are way up at highs, and the IWM is just way like there's this huge gap in between where they're both trading at. They need a healthy market, not really a healthy one, but, you know, I'm just saying, you know, when they get back together is where they should be roughly around the same area and trade within one another. It always happens. And look, you see the sell-off that happened here? Go look. It takes the SPY, the Qs, they all match back up. Then they ride together. You know? And then you get that. So let's see. Let's just see if this happens. This was a 2-week sell-off. So we'll say, all right, let's look for a move back down here to 210 or so, which we're already, or 200, 201, which we're already there. We have the sell-off. Let's look for a bounce back. Just like, guys, this chart is literally, and everything about the SPY is also screaming, you know, the box that I drew. And you guys can go back on my live streams and go back 6 months ago, and you will see this box up here. I promise you. Go back 3 weeks. Go back 6 months, a month, 2 months. I have always had this box up here because I said, when the IWM gets up here, I think is when we start our bear market or our downside. And I never positioned. I gotta get focused, man. I have the worst ADHD. I gotta start getting fucking focused. Like, seriously. Like, there's no look, we already did put in that double top. This guy is such an idiot that works for Biden. They don't want to accept it that Powell, and it's okay. Listen, it's what we need. Like, they should just say accept it. We need this. We need pullbacks, but they won't. We need cool downs. We need contractions. No, everything's fine. You can't just look at one data, bro. Can't just use one data. All right, Meta is bouncing. All right, here's the SPY. SPY bouncing to 530, 530. Affordable housing. We have 2 million.
Something that's important for all constituents across the country.
Jared, the political problem here, though, is that now you have an election where Vice President Harris is running on President Biden's economic record, and at the moment you have inflation that is uncomfortably high, and people feel that, and an unemployment rate that is rising, and a jobs market that is cooling. That's a bad mix.
I think President Biden and the Biden-Harris economic agenda is a very strong agenda for anyone to run on. We'll talk about prices in a second because that's very important. I'm glad you raised it. But in terms
Okay, watch meta here, guys. This could be our low volume bounce back. Let's see. Are we going to hold this level? It looks like we are above it. So, 485 on meta. 485 on meta. 3 minute, 5 minute. Yeah, let me go here.
This president and vice president have an aggressive cost-cutting agenda, while the other side seems to want to repeal that very
Let's
agenda,
see.
especially when it comes to
We break above it. We're pulling back into 585. Oh shit. DJT. I'm sorry. It's already at 30? Bro, what is going on? I couldn't take it, buddy. Be careful. Ooh. Just watch out if they do an offering ding that you have a news, like a squawk box or something that you can, you know, you'll get the alert or something if they do an offering. Because they might. Let's see. Let's see here. Sorry. Let's see here. Okay, so the company announced that it has commenced the phased rollout of its streaming platform, Truth Plus. The operator of social media platform Truth Social said in a press release that it has started moving existing beta testing of its Truth Social TV streaming to the company's new content delivery. Once CDN is deployed and tested, and True Streaming icon on the True Social platform will grant access to the service. The company said iOS users will need to update their app for streaming access, while Android and web users will not require any updates or downloads. Okay, so there is news here. Yep, so they have news. Wow, okay. Holy cow.
But she talks about that in an economic context. The freedom to be able to realize your economic potential. The freedom to be able to upgrade your job, to upgrade your occupation, to get the education you need, to be able to do that. To break down discrimination barriers, whether you want to start a business, which is really big for the vice president. She's paid a lot of attention to small business creation, especially for minorities, or whether you yourself want to get ahead through more investment in your own human capital. That's huge for her. She's got a great tangible feel for those issues, and I'm really excited.
Oh man, my stomach.
Jared, appreciate it. Obviously, a big market day, and a big macro day too with the jobs number. Appreciate the guidance as always. Good to see you, Jared.
Still to come this hour. Is Apple a good place to hide as the tech sell-off continues?
Yo, Carl Quintanilla slobbing on that knob, bro. Yo, fall back, dude. Look at him slobbing. Oh, he just drooling and slobbing on that thing. Democrat. I hate Trump. Give me more. Give me more. Fucking idiot. Anybody who has invested so much in any politic, it's just, I don't know. I mean, listen, that's how you want to live your life. That's cool, you know. I don't know. Let's see. I don't know. Let's see. So Google is putting in a higher low here. 167. Support. The Qs flattening out, holding up. Okay, the SPY does not want to bounce. I think that's because energy is getting whacked. Oh God. Oh, it's been a while since we've seen this, huh? Oh God. Look, UNH is green because that's the only thing that's going to help the market out. Whoo, there are going to be a lot of people checking in and filing claims on United Healthcare for this bloody market. Holy cow. Holy cow. Look. They said it. We're down so bad, you're going to... People are going to start drinking. They've lost so much money. They're gonna drown their sorrows in some cans of Bud Light. Oh shit. That's hilarious. That is so funny. Holy cow. You're gonna, and look, AMT's up. This is so funny. This is so on point with a bear market and people's net worths crashing. Is that you ain't getting your Nikes, number one. You're gonna have to give back that Tesla. You're gonna be upset and become an alcoholic. The land that you do have, you're gonna have to give it to American Tower so they can pay your rent every month, right? So now you're gonna have a few satellites in your backyard. And because of all the drinking you did, now you're going to go to the hospital. There's your UNH filing your claims. You're going to need a Band-Aid for the head that you bumped. T-Mobile, look. AT&T and Verizon's down. You done fudged your credit up. Now you got to go to T-Mobile. Bro, are you serious? Ferrari's just that dude, huh? Look, you lost your Tesla, so now you got a DoorDash. Like, you see? And the one thing they never give up is their Apple products. That's so funny. That's so funny. That is literally, losing a retirement. That is literally how it goes. All right? All this bloody mess. That's hilarious. That's funny. I don't care who you are. And now you have no money, so you're eating at McDonald's. You're hitting that dollar menu up. That's funny. That's so funny. HLN, I don't know what they do. You got that little bit of money you got. You're trying to trade with it. You don't have a bank account. That's gone. That's so funny, bro. You don't have a car, so therefore there's no gas to be bought, so the energy names are down. Right? It all makes sense. So there you go. Bud Light is up 3%. You're upset. You're drowning your sorrows in a drink. You became an alcoholic. You got to file those claims with UNH. You fell because you got too drunk. There's your Johnson & Johnson. You lost your car. Tesla. TM, Ford, you have no car now. So now you got a DoorDash, which is up. You ain't giving up your iPhone from Verizon or T-Mobile that you lost your credit with. Now you got a T-Mobile phone because you ain't got no credit no more. You ain't got no money, so you ain't got no bank account. That's gone. You ain't got no car, so your energy's down. You're not buying gas because you have no car. So it makes sense. It all makes sense. And McDonald's up 1.3%. You're hitting that dollar menu up with the last little change you got. It makes sense. It all makes sense. Look at this. You can't make this up. T-Mobile is up 2%. McDonald's is up. Bud Light is up. UNH is up. J&J is up. Like, you can't make this up. Oh, American Tower. Like I said, the last little land you had, you're selling that to pay so you don't lose your house or your land. Now you got 4 cell phone satellite towers in your backyard so you don't lose your house. It makes sense. Your gold, you went and pawned that. That's down. You had to go get some change for the McDonald's dollar, your McChickens. That explains it all. I love how fucking DoorDash is up because you have no car. That's so funny. And energy's down because you have no car. There is no gas. There is no fuel. There's no energy consumption being consumed. Yeah, and you're upset. DJT's up, so now you're feeling like you need Trump back in office. Swear to God, it all makes sense, bro. I don't care who you are. That was funny. That was funny. Meta's got to start soaring because they're going to spend on their T-Mobile phone. They're going to be spending a lot of time on Facebook. Let's see. Meta is down 2.6. Dash is up 7%. That is crazy. It's down, actually, off of that earnings pop. All right. Let's see. Net. What does that mean for Oracle and others? And CrowdStrike is down, so that's helping them. I used to own this thing, and I might start to buy it again. I might.
But the market's been okay with that with some of the other big cap tech names. I mean, sometimes the market rewards.
Damn. See, it's a good. That's why I didn't buy no calls. I wasn't fully committed. I'm not committed in the downside either. I just don't see setups right now that look good enough to take the risk, right? What's up, Matt? I'm doing good, buddy. I'm just trying to, you know, see if there's a little meat left on the bone going into lunchtime, the afternoon. I don't think that there is, though, unfortunately. Is Tesla going to... Dude, Tesla's still selling off, guys. All right. I think it's time to really... See, it's down 4%. Dude, all right. Tesla's really down. So I guess it's going back to 200 because it's already below 210. Hi, sweetie. You okay? How are you doing today, buddy? How you doing, Matt? All right, so watch this 50-day here. I feel like I failed, but I don't. You know, like yes, the market made a move, but I don't feel right telling people, yeah, go short while the market is already down 2.5%. The SPY is down 2.5%. Yes, we have a reason, right? We do have that. We have a reason to go down. Right, the market's going to start pricing in a recession here. There's going to be recession, you know, fears of a recession, I should say. And I'm just not okay with like saying that it's okay to go short the SPY when it's down 2%, because that's not. It's just not going to. It's not going to make you any money. It's not. Like, yeah, today, sure, would have made you money. But the next time the SPY is either up 1%, try to go long. The next time the SPY is down 1% or over 1%, try and go short. See what happens. You know, so I am okay with like not, you know, saying that it's okay to go short. Yes, you would have made money today, but. That's all. So today I talked about Meta, Tesla, Google. I gave those trades out. I did not pay up for Tesla. I tried to get in. I was trying to take a Tesla short, and it just as I was talking about it, it was like all right, let's start looking to get short Tesla here, and it ended up just pulling back pretty quickly, and I just couldn't pay up for it. I didn't feel right paying up for it. Can we get a reversal? Come on, man. Let's get a reversal, Tesla. Give me a reversal here. There's a lot of buying here. Come on. Let's go. We have a support level here at 210. I know we broke it, but we're so overdone. It's like crazy. And we never turned, well, we did pre-market, I guess we did. 222. We turned that into resistance. Yeah, watch this level here at 210.25. This sucks because Tesla's going to start not moving, guys, because we're going to be stuck between this 50-day and 200-day moving hours, that turquoise box. Like, that could be our range. 204, or like, you know, the low 200s to 210. Well, really 208. I got to do better next week. I got to do better. I'm gonna raise the bar so high next week. Again, it shouldn't surprise us that we get data like this. Let's see, what is this? 215. Yeah, but it shouldn't surprise us. I've been saying it that, if the Fed doesn't cut and we really start seeing these numbers come in and, there's going to be a time when the market starts pricing in a possible recession and we're there. I've brought that up numerous times. Okay, so I think AMD got to 140. Let's go look. I'm not sure. Here's the thing with AMD. Could it, are you asking me, today, could it get to 140? I have 140 as a level as well. Could it get there today? Sure. But I wouldn't, I think the probability of it, I would need to buy it at a lower price because it's already up 2%, and that's another 3% move. So that would mean that Tesla would have to be up 3, 4, 5.5 to 6% today. I don't like that it had earnings and took it back the very next day and then took even more of it back yesterday. So I don't know what's going on with AMD. I know that Intel's shit show of a company or shit show of a stock is helping their market cap and helping their name out today. I just think if you're going to try to long the 240, it would have to be from right here at 134.85 at VWAP, right? Or 133. That's where I would take. Those are the two places I would take it. Because look, why would I do that? Because if I get a long here at 135, I can take a quarter to half that position off on a test through highs. And if I don't get it, if I don't get that bounce back, right? Because you got to think about how are you going to manage the position, right? Because listen, we could have a headline that comes out right now that Hamas or Iran just sent a shitload of drones and a big ass bombs to Israel, and now there's a full-fledged war on the table. So now you had the non-farm payroll stuff, and now we're back in the Middle East, and we're getting involved into another conflict in the Middle East. That could really start to send the market down. That would send AMD down. So we always take some profits as it gives it to us. All right, because we can't predict the future as in what could come through the wire at any time, any random time. So again, VWAP entry, okay, I get a test back to this previous highs. Or if it breaks down, I'm taking it off. I'm taking my loss below 134 if I get in here, or I'm getting back in, or I'm waiting for 133, this level right here, the low a day, to get long, because then I can also take profits going back to VWAP, back to high a day, right? That's how I trade. It's like, like what's gonna protect me, if that makes sense, right? If I buy at VWAP, okay, my risk is going to be $1. I'm going to risk 135 to 133.90, so about $1.10, $1.20. And what am I going to make if I get a bounce from 135 to like 136.75? That's $2 already at high a day. So I've already taken, like, I'm not worried if VWAP does or does not hold. I don't think it does. I'm going to be honest with you. I'm not sure. I don't think it does. I think it kind of chops today. But just getting long at VWAP and risking $1 at 134, I have a 1 to 2 already getting long at VWAP. If I wait, okay, I was wrong. So we test low a day. All right, let's see. Can we hold low a day? The market starts turning around. Where's my stop going to be? My stop would be right here below this level, right there, just below it, in case it wicks into it. So that's 133 to 132, 131.90, 131.85. So that's $1.15. And what's the bounce back? The bounce back is Come on, give me the... It's, again, that's $3. That's, again, both of those entries give me double the risk. That's the point, right? That's the point. Like, always, that's got to be the first thing is, how much are we going to lose if we're wrong? Where's our stop at? So if I enter at VWAP, if I think I want to see if VWAP holds in this little area here in initial highs, that pivot high from this morning, okay, cool. I'm going to get out. I'm going to give it about a little over $1, about $1.25, $1.15, $1.10, down to this level here. You know, and maybe you see like an increase in volume where like the volume on the buy side just stop and you don't give it down there. Maybe you just take it off and only lose like a little bit, or it's a break-even trade. But at worst, on both of these trades, I'm risking $1, making $2 to $3 more than I'm risking. So that's how I trade. And that's why, again, I did not think it was okay for me to come on here and say, yeah, I think it's okay for you guys to short the SPY today. Knowing that you're paying so much more to make so much less. Like, it's just wrong for me to say that, even if it works today, even if it makes money. It's not okay. Because who's to say that you can sit through that volatility? Like, you know, you understand that if it, you know, the SPY, it moves, it bounces 75, 50 cents, $1. You're down 50%, 35%. But then I said that it was okay to go short, you know. I'm going to take responsibility for what I say to you guys and other people that watch this stream. You know, a lot of people, when they're wrong, they're like, well, you need to take responsibility for yourself. Yeah, you do. You do. But I want to explain why. You know, I want to explain why, and I'm going to take responsibility in providing what I feel is what is the information that should be provided. And why I would do something versus why I wouldn't do something. Or why I wouldn't recommend it, even if it works. Like, yeah, it kills me to see the SPY go back down another $8 and, you know, give people 75 to 100%. You know, they're risking $2 to make $2. That to me still doesn't seem okay. Nice job, man. Nice job, man. Oh, it's all good, bro. Yeah, we looked at, you know, but what I did say, too, guys, was AMD. Oh, look at this 15-minute chart here on AMD, guys. I would be careful, but look at this. We could get a buy trigger right here. Oh, it's not going to, is it? Let me see here. Let's look at AMD.
It's time to vote for yourself and make your business more successful. Get your books right, grow your business, build your team. Call Zendu, the official bookkeeper and accountant for small business. Vote Zendu. Zendu, making taxes less taxing.
Municipal bonds don't usually
Dude, Drew, nice job, bro. Nice job, man.
don't find them all that exciting. But if you're looking for the
Let's see here.
income that's federally tax-free, now is an excellent time to consider municipal bonds from
So again, though, I'm always going to stand by, and what I'm looking at is I want to see if AMD is going to pull back, or if it could give us an extension. I gotta hurry up, because if this thing's going to go, it's going to go soon.
LYW, Flywire, getting another.
So again, yeah, I'm going to always take responsibility and, you know, actually, whether the information or what I say is liked or not liked, I just gotta be honest. I gotta be brutally honest, you know, because it's not about one day. It's about the course of 10 years, 5 years, 15 years, 20 years, and what you can do for yourself and other people around you if you're consistently correct and make the right decisions day after day, month after month, and year after year. You know, you can use the markets to, you know, really just make money and get stuff out of life that normally you might not have the opportunity to. You know, this is the market's the greatest equalizer. It's, you know, it's a known fact that if you consistently do the right things, you'll be rewarded. So that again would be our target. You have to watch that level there. That's the first area is like 138 here on AMD. It might have a little room to the upside. It's already a little oversold and a little overdone on the 15-minute chart. No, I think the SPY has more room. At least, talking the overall markets, I think the SPY has more room. I think you see 520. You could get down to that 100-day. We are at the 100-day. We'll see. But again, I've been saying this, that if the Fed, if the numbers start really ticking up like they have been, the labor numbers and the job numbers and GDP contracting like it is, the market's going to start doing what it did in 2018, and that's price in a recession, right? And it could get to a point where the market sells off, and forces the Fed to have an emergency rate cut. So, and once again, all the charts that I've shown you go back to that same setup from 2016 into 2018. The IWM, they all go back and they look the same. Right, so if I go to the IWM here, I gotta watch AMD because I gotta make some money here. All right, so it's still rejecting here. So it feels like it's gonna pull back. You see, AMD's just gonna stay flat. I gotta be honest with you. Yeah, I would watch 135.50, 135.50, and VWAP. But even if you sell off here, I just think you're like stuck. I think you're stuck like right in this area right there. From like 134 to 135.50. Unless you can somehow break out and get some volume here, it's not moving. So therefore, we might get a pullback. That's it. You know what? Let's look for a pullback. Let's do it. It's got to go higher though. Wait, maybe it doesn't. Alright, guys. You know what? I might look for a pullback. It just doesn't have the volume. Doesn't have the volume for it, though. Prior day's low and pre-market lows is what I would look for. 527 put. Yesterday it was she with nice delta. Nice. Yeah, nice job, man. That's nice. Got some time on it, which I think would be for Monday. I was thinking Wednesday, but fuck.
Meantime, we're starting to have conversations this morning about Jackson Hole and the.
Oh, that's right. We still do have Jackson Hole. I forgot about that.
We can read the room. We are on the case.
Yeah, I think that's right. I think Powell will probably send a pretty strong.
All right, watch AMD. It keeps rejecting here. Let's look for a move back down to low a day. We could probably get a little trade here on AMD. I'm going to go over to this chart first because I want to watch the overall markets. Okay, so there goes the Qs, and the overall markets are bouncing back.
Is it more about, as some have suggested today, about a wave of nice participation taking shape?
So there definitely was the best.
Qs, I would look for 455, and the SPY is pretty easy as well up there at 538.
In unemployment, so and I would also couple
Yeah, 538.
the fact that the work week went down at the same time that
So next week I have to work on. I have to work on some things next week. Okay, look, that's a nice reversal on Tesla, guys. Tesla has a nice reversal coming in here. What's Meta and Apple doing? All right, Meta's still strong. All right, Meta's reversing here. It recaptured that level. And look, you have a 15-minute trade line cross coming up there. Tesla coming into the trade line. What was the stock? Was it AMD? It was AMD. Right here, 15-minute chart. Look at this level here and see if it can extend. I just don't think AMD has the volume. It's just naturally weak for whatever reason. Right there, guys. 134.75 and 134.98. That high, like just under 135. Let's see if this thing can hold this thing and just blast off. If it doesn't, I think you get a pullback to yesterday's low.
Rate cuts and pushing the Fed to cut rates, and now that we're pricing in even more.
Yeah, look, 4,000, 6,000 sell orders. This thing's going down. There was just huge orders to the sell side there.
In the market, and ultimately it's going to be this self-fulfilling prophecy.
I mean, this is a cheaper stock, but let me see. Look, 3,000 to the sell side. I'm not seeing. I haven't seen any 1,000 order to the buy side get filled. Wait, yeah, 3,000 there to the buy side. 1,500 to the sell. So you get an understanding in depth for where this look. So there's 2,000, two separate. Oh, so 3,000. So look, 3,500 to the sell side. So that's another one. Another one. This thing is still. It doesn't have its mind made up. It's still.
We're pointing to what it might mean for housing, right, and housing supply. And then I am curious to get your take on.
That's awesome. I'm glad you guys were able to make some money. I wish I was a little quicker on Tesla's downside action today. I had that one in the bag. We had this move in the bag. Both of them. Even both of these in the bag. Google also. Google was another one that I wasn't quick enough. That popped right in the 100-day. 170 short. 170 short. I have it all written down as well. Let's see, Meta. I have a 490 rejection, 480, and then 470. Upside is 500, 508, 510. Let's see here. So 490, 500. So is there some meat left on the bone here? Let's see. Can we get something going? All right, I'm going to throw up the SPY here. I'm going to look at Meta real quick, guys, and see if I can get a little trade here, even if it's for a couple minutes or so. Let's see if we get a pullback. Yeah, it's getting ready to pull itself back. But it could just continue and continue and continue. Okay, if we get a pullback here, I'm gonna look for a bounce higher. It may just keep going. It may just keep going. This is a mean level right here. I missed that move. Jesus Lord. Dude, the spreads are so wide. Why are they so wide on Meta? Guess I'm going to have to try to limit order in this thing.
Overall, John, the story is the AI build-out. So I'll say everybody is still pretty focused on their...
Meta's spreads were never this wide. They were a little wide. They were a little wider, but they weren't like crazy wide. Like I understand it's $500 now.
Our products are getting stronger, but the story is still one where the data center and the cloud is driven by the AI investments as the primary ones. Obviously, for us, we need to get our AI accelerators, our Gaudi 3, launch this coming this
You know, the volatility on the SPY. I'm not looking to trade the SPY because it's got so much volatility priced into it that I'm good. I'm not paying $10, $15. I'm not paying for like a $10 move and get, you know, a $2, $3, $4 move and get paid like nothing. It's got to be worth it. Let's see. Are the banks bouncing at all? Or are they still selling off? Look at JP Morgan still. Oh my God, guys. I knew it. I fucking called it out this morning. God, I'm fucking up so bad. Oh my God. I said the banks. JP Morgan. This is a big move. So listen, I want you guys to understand. If we continue to see yields pull back, these banks are going to get hit. And you're going to want to be short the bank stocks on bounce backs. You bounced into the 50-day. I don't know how I did not see this earlier when I looked at it, but you're already back down through this level, and we talked about 200, and the target's going to be 196, which you're already at 198. Look how hard these things are getting hit, guys. They're going to hit these things hard before they really sell them and retail finds out. Okay? Because again, as yields start to pull back, as in lower, the banks are not going to make as much on their loans. That's why you know what I'm saying? You're going to start seeing TLT. That's why I went long TLT. And I told you guys that we could trade. Dude, it's at 98. You're $4 in the money, and they haven't expired yet. So nice job. Nice job. So those TLTs that we got for 20 cents, right? 20 cents are now $3. 20 cents to $3, guys. Nice job. Congrats. This is what I mean by, like, I can't get upset over a day or just 1 week, right? I've made money, but just because I haven't, like, crushed it doesn't mean that I haven't crushed it. You know, we've been giving out a ton of just bangers after bangers. So now that this is played out, we're going to look for banks. Literally everything that I've, like, thought that's coming or could feel that, like, you know, that switch in sentiment was coming, like we're getting ready to cut rates, things were about to start popping off, we're here. And that's why we started to get long. We got long down here, guys. Fucking $3, man. $3. Nice job. Nice job. Let's see here. So I'm going to be looking at bank stops. One stock I did not take was Bank of America a couple days ago. And that was a short that we gave out up here at 41.50, and it's down to 38 now. That was just last week with a 2-week time, 2-week, you know, option on that. So, all right, let's see. Can Meta recapture this? This level here is, you know, kind of important. This is a nice support level here, so watch if Meta can hold this level, and if it can't, you want to look for a move back to 480. Okay, see if we can hold, which I think we can, and let's look for a push, you know, back into yesterday's low and 500. So that's like 495 to 500 is what I'm going to look for with Meta. And look, that's a nice break, low volume pullback. And let's look for an opportunity. I think you might pull it back to VWAP. This thing might consolidate. I don't know though. Depends on it depends on the overall markets if they want to keep climbing or not. Boom. We're down 1.5% on Meta. Watch VWAP. SPY is at VWAP at 532. The selling pressure could step back in. Sorry, I just went and grabbed a bottle of water, and let's go see what we can do here. Let's see. Let's see. I don't know if we have. What do we have here? What do we have? 3. Man, I don't want to bother you guys with that.
You do raise a good point, and anyone who's followed the industry for long enough has seen just about everything. It's awfully hard to surprise.
Let's see here. Yeah, I feel like Meta's going to break down a little bit. AMD. What's Apple doing? And look, Apple's breaking down. I would look for low a day with AMD. I just don't know if it's going to give you like the momentum move that you're looking for. Maybe it could, right? You have that nice wedge there, and it breaks down. It's breaking down out of it. I would use the wicks is what I would use. Something like this. Right there. And right there. Boom. That's perfect, right? Then you look for a bounce back into it. The break and bounce into it. And you look for possible downside. I'll let you guys know if I get into anything. I just want to eat this snack real quick. Okay, you okay? What's wrong? And I don't want to like chew it on the mic. But if you guys still have questions or see anything or news or anything, DJT started to bounce higher. It had some news this morning, I guess. He'll watch that 675 level on SMCI. If you get a bounce back to like 620 or so, see if you get a bounce up in the yesterday's close. Damn, those spreads are like 50% here on the SPXL for the options. I don't know if the spreads get any better as you go out. A little bit. There's no volume though. There's no volume on these. Fuck. What's another triple or double leveraged ETF here? Let me see. I still can't believe that we that I found this David Boyes guy yesterday. that Delta hired him, and I just randomly looked him up, and he has just been a person. He's a lawyer who has been in a lot of stuff. So Delta and CrowdStrike, Delta Airlines is possibly gonna put out a lawsuit on CrowdStrike. Okay, come here. She's wanting to eat again. So, fuck, I forgot what I was saying. Shit. Dang it. Sorry, my cat came in. Abby came in here and...
Thank you for joining us. Really appreciate it, especially on a day like today where the S&P is now down 2%. We're off the lows just a little bit here, but look, we've got...
Damn it, I forget.
Like Amazon, like Intel, that are big weights. You have economic worries, and you saw that where...
I forgot.
...coming in, consumer...
Oh.
...more defensive places to hide when you're going into tougher economic environments. Even they've turned lower on the day. Tech is getting hit pretty hard. Yields are sharply weaker.
ETFs. ETFs.
From what we've seen all year.
Meantime, moving to the earnings calendar for next week is going to give us a lot more opportunity to talk and hear about the consumer, Disney, Uber, Shopify, Airbnb,
Okay, TQQQ.
CVS, in addition to the lilies of
It's another one.
Senior loan officer survey will give a snapshot into lending, but you're going to Paris.
We'll see how much I get on. If this
Wait, I thought QQQL...
good weekend. Let's get to Brian Sullivan in the half.
Welcome to the halftime report, everybody. I am Brian Sullivan in for Scott Wapner today. Boy, he picked a good day to be off. All right, front and center this hour, the sell-off getting worse. Really, it's after a bad jobs number, more lower jobs revisions from previous months, increased fears of recession. Oh, and Amazon and Intel posting huge losses as well as their stocks anyway. All this as fear rises. One of the biggest jumps in the VIX that we've ever seen. Needless to say, it is a nervous time. Don't worry, we've got the perfect crew for you to handle it all. Joining us for the hour is Bryn Talking, Jim Labenthal, Jason Stipe, and Rob C. Chan, all on set. Thank you, everybody, for schlepping down here on this beautiful fall day. Anyway, let's get to them in moments. Don't worry, we've got the perfect crew for you to handle it all. Joining us for the hour is Bryn Talking, Jim Labenthal, Jason Stipe, and Rob C.
Can you
Chan,
guys
all
hear
on
this?
set. Thank you, everybody, for schlepping down here on this
Can you
beautiful
guys hear
fall
it?
day. Anyway, let's get to them in moments. Here's how your money and the markets look right now.
I'm trying to figure out why I don't have any sound.
Turn away. Nasdaq and the S&P
There we
500
go.
all down right around 2%. The Dow Industrials tumbling more than 800 points, as that big red banner there says on your TV screen as well. Small caps taking it on the chin. Banks getting hit as well. There is a lot to discuss, so I'm just going to shut up and we're going to jump right into this. Jim, I'm going to start with you because the VIX is up 54%, which makes no sense.
I'm
to
gonna
me.
look
We
at
can get into
TQ.
that.
I'm gonna look
There's
at
a lot of fear out there.
TQQQ calls.
Is this an overreaction?
Yes.
Thank you, and that's your show for today.
Is it an overreaction? No, the
Final
market's going to
trade
price
is-
in a potential.
No,
Short
it's-
VIX.
and look, I'm generally optimistic when I'm on the show. People know that, and I don't want to be accused of being blasé or missing what's going on. But look, the jobs report, you want to look at the unemployment rate and freak out about it, that's fine. You have to note that the response rate to the household
It's the rate of
survey has
change
been
in the
going down for
unemployment rate,
years.
mind
There's
you.
questions about its accuracy. The institutional report or the institutional survey still shows job growth. You know, you look at weekly jobless claims, yes, they've popped up, but they're at an extraordinarily low level. You've got GDP growth, you've got profit growth.
No, you don't. You have
Calm down,
GDP contraction.
okay? Now, when a correction happens, which is what I think we're in, and we can debate it, okay, but when a correction happens, it always feels like it's something worse. 100% of the time, it feels like it's going to be a bear market. There's always a reason for it. This time, Brian, it's the kind of lousy spate of economic data that we've had.
Yeah.
This is what a correction looks like. When you
All right. So we have Fed Goolsby right now.
Bank is to move in a steady way.
Two things, guys. It looks like tech is going to be leading us. We're already look at the cues, right? I'm gonna show you guys something.
Yes, well, in early July, you had valuations
Not 4 Qs. QQQ.
Have to think about the employment mandate.
Look, they're talking about the employment mandate right now. All right, so the QQQ, right? If I go, I just want to go so you guys can see it. Bro, come on. This fucking charting software sucks. I mean, it's okay for a broker. So look, you see pre-market lows? See how we're above this pre-market pivot low, the low of pre-market? Right? And we're starting to make this area support. We're above VWAP and the 9 EMA. Boom. All right, where's the SPY? Where's the SPY, guys? Where's it at? It's below that pre-market low. Where do you want to be long? Tech is bouncing back. Look, the Qs are already up here above the SPY. So that means the Dow or the IWM is lagging. Look how far down the Dow is. Why? Because again, I told you banks. We're going to look to short banks for the next month or so. I'm going to. And we've already went long TLT. You've gotten rewarded on that. So as yields pull back, banks don't make that much money. TLT goes up. Tech names should go up. So let's do it. We're going to go to tech. Look at NVIDIA, break and retest. Snowflake, break and retest. Here you go. Let's do it. It's very clear. Very clear. Bang. High a day hold. Let's look for a move back to 110 on NVIDIA. I'm actually going to go look at this right now.
Period. It is rapid. That was consensus. It is rapidly unwinding. And are we caught in this consensus vortex for a period of time?
We still need a little pullback, though.
Let's talk
You need a little pullback.
Right,
so like 106.
I'm not saying that that's the camp we're in. I'm saying,
listen, I don't know how many of our viewers and listeners are shorting the Japanese
and
yen.
I'm going to get this trade for next week. You're seeing the Qs start to leave, guys. That's your first line of starting to figure out how to trade next week.
Smells like panic. Panic can often mean opportunity.
Absolutely.
I mean, I'm not saying to be long or that we can't pull back further, but
just talking about
give me 1 second.
That the Fed doesn't need to be in a hurry because although the economy, unemployment specifically is moving higher, and
but we're reading the board.
Trend to continue.
We're reading the board.
Like the Fed has
short
plenty of
banks,
time to cut, no problem. And then all of a sudden, it's like everyone's pivoted, and now you're seeing the probability of a 50 basis point.
But if the market isn't going to go higher, then you know you're going to have to wait.
Few days. And so I definitely think we have a jittery market. I think also on Rob's point.
I'm just saying, when the market bounces back, tech should perform the best.
Individual investors, we as investors are not trafficking in the yen, but hedge funds lever that. They borrow yen, lever it up, and then they go buy what? They buy tech. They buy what's moving, and I think you're seeing the mechanics under the market, a massive unwind of that trade. But it's like nothing's changed in the economy except we've had a slight tick up in unemployment. And as
10 of the last 14 jobs numbers have been revised down.
Right, and so that's why unemployment.
I mean, it's not just about July, because you're from Texas. You got hit with Hurricane Beryl, that storm messing with the numbers. But to Jim's earlier point, if it was just 1 month, but I wonder how much we even needed. Honestly, trust that jobs number anymore.
Well, and it was still positive.
Jason, jump in here.
Yeah. So I think for me, you know, it's interesting. I look at the GDP print, which we just had a couple weeks ago, which is 2.8%. It's like that was 3 years ago, right? So the economy is still chugging along. I think when I look at the consumer and analyze the consumer, I think it's more of a normalization than this obliterate slowdown. You know, so for me, as I look at these prints that we saw yesterday, ISM, obviously the job numbers this morning.
Let me look at the daily chart real
and then
quick.
We saw this rotation trade a couple weeks ago, which has obviously stalled since then. I also look at it to Rod's point. I think there's an opportunity here in the market, right? We've been top heavy all year. You know, it's been the AI trade all year. We saw a little bit of a rotation. Now we're seeing a little bit of a pullback through seasonality. That this is what the season becomes. I think there's opportunities to kind of, from a positioning standpoint, looking at growth in other places in the market.
And we're still in an uptrend.
Yeah.
64% of the names in the S&P 500 are still above their 50-day moving average. Right. So that is technically we are in an uptrend. So if you don't get a breakdown in growth, if you don't get a breakdown in earnings expectations, you should be buying this dip. It's a question
give me 1
of
second,
where.
guys.
Okay, because we are in a slight vortex right now where markets will recalibrate to this, and investors have to be positioned at the ready to do something.
Yeah. Well, NVIDIA's, listen, let's be a little positive. It's Friday, right? I know the markets are down, okay? Markets go down, they go up. NVIDIA's down 2%. Apple is actually higher. Tesla's down about 3%. You've got some disasters out there. We'll get to more on Intel later, maybe a little bit more on Amazon as well. But it feels like, to Rob's point, Bryn, this is massive, rapid unwind of certain positions that 99% of our viewers and listeners at home are not doing.
Right. I think
this was an institutional move.
Correct. And then what you don't want is then you don't want retail to follow, right? Because that's where, does this move then end up having legs? And I think that right now we have an unwind of things that were happening, as we talked about earlier, mechanically. Look, NVIDIA is still up, what, 113% just for the year.
Damn, they want so much for
did
that.
it really make a ton of sense that it went from 100 to a 130 in like a week, which was what, $1 trillion in market cap? Is that normal? Did something change in NVIDIA to make it go to $1 trillion? No, and so I think you see a normalization of that.
Okay, now let me hold on, Jim. They want me to move on to Amazon,
there's a
which
lot
I agree. So I'm going to flip it a little bit.
of
I'm trying to have a
volume
little
at 30.
optimism to kick off the show, but
I can live with that.
yeah, why not? Right?
Let's do it.
To
Amazon.
Rob's
Right?
point,
Yeah,
but Amazon today, that, to me, I know everybody, all due respect to everybody else out there is saying it's a Fed-related move, and maybe it is. But I wonder how much Amazon is playing into the whole thing as well, because their numbers, web services was great.
Yeah.
But the consumer side, I think the technical term is stunk.
Yeah, and the guidance wasn't terrific. Now, I own the stock. It's a recent position for me. I'm basically flat on where I bought it. I'm not looking at this and saying, oh my God, what did I get myself into? This is Amazon, okay? Whatever, let's just say for a second that my opening soliloquy was wrong and we're going into a recession and the consumer's going to fall out of bed. Do we really think that on the other side of that, Amazon isn't going to gain market share in everything it's doing and thrive?
Right.
I would be buying this today if I hadn't already built a large position, and I think this is absolutely a great entry point. This is where I was buying it in February. Look, it's a miss on the guidance. We got that. The stock's down 8%, and that's your buying opportunity.
My wife's consumer products exec, Jim Cramer, said it this morning on Squawk on the Street. My wife will tell you this straight up. Amazon is killing CVS, Walgreens, Rite Aid, Duane Reade, and others. Right? So they're win on the consumer side. They're going to win on that side. But let me ask it even this, a little more of a hot take. Sports style, Rob. Do we care about Amazon's consumer business? They sell more shampoo.
I think you care about this in that earnings report. This is the Jerry Maguire moment for tech. It's the show me the money moment in monetization of AI. And what Amazon told you, and I think what was disappointing in this report, is they're going to have to spend a heck of a lot more, and it's going to take a lot longer to monetize that. We don't own it. But there's going to be haves and have-nots.
How do I do
obviously, NVIDIA
Market
is a current
is pulling back
beneficiary.
now.
It's a significant beneficiary, and we don't own it.
An amount of
we
crackers.
Are not saying.
Why don't you?
Hold on. We are not saying that this is Cisco in the late 90s. Okay, we are not saying that.
You just quoted. That's my tweet from 2 nights ago. You saw that before I got stung in the face with hornets last night. You saw that. I was not saying it.
Right.
Excellent pickup. 2 points.
Can I jump on Amazon?
I'm winning the game, Jimmy.
I don't know what you just said.
Yeah, I think.
This is like the presidential debate.
I'm not saying it. I was trying to warn people about NVIDIA, but that's not my job, so I
I'm
have to
passively saying it. So I think as it relates to Rob's point on the AI spend, you're already actually seeing companies monetize it, and especially Amazon and Facebook are going to see that in ad spend, because that's a really good way on a meta to have the creator economy.
Oh, now they want to
more
talk
sticky.
the talk.
And I think as it relates to Amazon, if you look at like the individual investor, or the individual retail investor, fine. But look at this. Their operating cash flow was up 75%, up $108 billion, and their free cash flow yield, so saying they're not making any money, free cash flow was $8 billion last year. It was $53 billion. This is a cash machine. And so I think to Jim's point, I think this is where this is an interesting name to actually get into. I think the market's totally misreading their numbers. And just it's a bad bad day. And I think the retail numbers don't matter for Amazon.
I agree 100%. Especially as it relates to the operational margins. I mean, they've been growing like crazy under Jassy. And listen, to your point, Brian, AWS is the part of the business that we all should care about. The margins are 35% on AWS, right? And that was the one that we saw a re-acceleration, right? So the e-commerce business, yes, slight miss. The ad business, slight miss on the top line. But the EPS growth is still trending higher. So I think this is actually an opportunity more than anything else.
Is it hard to get a read, Jason, on the consumer? And because for every stock that falls, and I'm looking at them right now, a bunch of retailers, restaurants have collapsed. I could flip that and show you a stock that has done well. I cannot, for the life of me, figure out what is going on with the consumer.
Yeah. So, I mean, I'm sure you're here to talk about a little bit about Apple, right? Apple's
which is up today.
Revenue beat on the top and the bottom line. Revenue and EPS are up around close to 5%. China was down a little below 5%. This is a safe haven stock, I think, in a tape like this. Apple has played this position before. This is not new to them. And I think the services businesses, they had a record quarter, for services. And again, when I think about the buyback, listen, that will continue to grow over time. They have a ton of free cash flow. And then we obviously have the new story with Apple Intelligence and what's going to go into the phones, which will be 2 quarters from now, which we'll kind of see what the results were on the iPhone 16.
Laura Martin of Needham, who was on in the previous hour and one of my favorites out there, put out a note today, Jim, and just said Apple's a good place to hide. And I think to Jason's point, are you selling NVIDIA and you're selling Intel and you're selling it, not you, but people selling those stocks and just parking it in Apple today?
I can live with that assessment. I'm gonna throw just a little bit of cold water on this, just a little bit, okay? Earlier this week, we got reports from Qualcomm, Qorvo, and Skyworks, 3 companies that provide the innards to the iPhones, okay? And frankly, Qualcomm's report, they were pretty dour on what the rest of the year is going to be as far as iPhone sales or smartphones in general go. Qorvo and Skyworks were okay. They were okay. And the only reason I'm bringing this up is because I think with the rally that you've seen in Apple since the Worldwide Developer Conference, there is one heck of an upgrade cycle that's built in at this point in time. I think you're going to get a good
I'm watching the 100-day. I'm watching this level here. I want to see if we hold it or we break it.
But I just worry that maybe Apple's priced in
like
a touch too much. Let me be clear. I am not saying go sell your Apple. That's not what I'm...
And by the way, I'm looking at next week calls. Okay, next week. I want some time on this thing. Are they seriously up already? And the stock is down? What the fuck? Oh, that sucks. That's bullshit. That's bullshit, guys. That's bullshit.
And that's always been the case. The high end will spend. I was at a boat and RV dealership last week in Wisconsin. I'm walking pieces. We have to talk more.
You're okay. Hi. You're okay. Come here. Oh, come on. What is...
Different story, but just getting these little anecdotal pieces. We have.
All right, so this is the 115 calls right here.
In fact, somebody knows exactly where I was. Is Bill Baruch, because he was around the corner.
You're gonna have to wait a minute, love.
Intel having its worst day.
You're gonna have to wait
since 1974.
You've had food. You don't need to eat again.
I wasn't.
Bill Baruch.
You still have food in your bowl if you're hungry.
A few weeks ago. Not trying to rub that
you
in,
have
Bill.
Treats,
He joins us
you
now.
You have yogurt. You have food. You got water.
Intel
you got dry food.
A third of its value in 2 days, Bill. And happy Friday on that.
Yeah, happy Friday. I'm going to enjoy it a bit more here. I'm heading up to Wisconsin right now myself. So, great. We sold Intel today. And this was a tactical play, a little bit of looking at foreign policy, potentially the probabilities of Trump in the White House. We bought this at about $33 a few weeks back, and it was our smallest position in the portfolio. And so 30% down today, I'm looking at it as the numbers don't make sense from a portfolio position anymore. Even if this thing gained 20% tomorrow, it just doesn't even move the needle for us. I really echo what Jim Cramer said this morning. The conference call, Gesslinger was just monotone, a lack of enthusiasm, and you know what? This job cuts, no dividend. It's all a little too late, and it's just, you know what? It's just a disaster. Let's just call it a disaster. I want to get away
Bill,
from it.
Let me be direct. And I know we got an interview coming up, a taped interview with Gelsinger. They rolled out a little bit. The whole thing will be on Closing Bell with John today. Pat Gelsinger, I don't know the guy. I don't have anything against him. He's made, what, hundreds or over $100 million in compensation in the last couple of years while they're laying tens of thousands, more than 10,000 people off, and losing a third of investor value. Bill, Intel, and check this out, guys. Intel is worth 5% of NVIDIA. That's an RBI, random, but 5% of NVIDIA from one of the world's formerly greatest. Does Pat Gelsinger need to go?
You know, I don't want to make that call. I'm not even a shareholder anymore, so that's not my thing. I'm just going to step away from it. It's a disaster. It's not what we expected, managing our risk, and it's about a 30 basis point hit to portfolios. I took that cash today. I think, as you echoed what Tom Lee said, with the VIX jumping like this, there is opportunity out there. I've taken a little bit of that cash and reinvested it already somewhere else.
So RBI, all right, the stock price of Intel is now where it first reached in 1997, 27 years ago. Again, RBI. Now, what's happened along the way? You go back 10 years ago, and I forget the CEO's name, Kazanich, something like that. He got into trouble with the board. While that was going on, operationally, Intel took its eye off the ball, and AMD ate its lunch. Couldn't get those 10-nanometer wafers out. Now we're at like 3 nanometers and going lower than that. What Gelsinger did, and I want to give him credit for this before I kind of sweep his legs out from under him.
We could see Intel not be here anymore.
Catch up in that race, so we're going to get in the foundry business. Look, he had.
There's a chance that thing is gone.
He made a choice. I compliment him on that. I think we're seeing that it's a.
Anybody get that NVIDIA long?
If you're building a
if
foundry,
you did, great
while
job.
You're still a chip designer.
Nice job.
You are in competition with your customers.
Nice job.
That's very, very difficult. If you're a customer going to Intel for foundry work, how do you know that Intel isn't going to prioritize its own chips over yours? How do you know Intel?
Looking for a move on NVIDIA to 110.
So look, he made a choice. We're clearly seeing it was the
all right,
choice,
I'm in NVIDIA, guys.
He didn't have much options.
Damn, I got
don't know
fucking
that
so
somebody
many
else would have done
positions
a
on.
better job with what came out of
And I want to be clear, too, a lot of that compensation is tied to stock performance, so there's a chance. I don't know how much he'll actually end up with. But I think the broader point is he's making big, bold bets. If they were paying off, and maybe they will, but right now, Rob, you got Intel shareholders, one of the world's great companies, Intel inside. Dude, you're getting a Dell. And the stock's down, saw a third of it.
Just so you guys know, I am in NVIDIA, okay? Next week calls. 115.
So maybe it was a year and a half ago. And that was the notion of getting out of capital-intensive businesses, of which Intel is one. So we are in the semi space in a capital-light way. We own chip designers, equipment manufacturers with higher margins, stable profitability through cycles. All these are still cyclical, but if you're cyclical and you're making these big CapEx investments, you are absolutely exposed.
Yeah, and maybe just go for the semiconductor. Bill Baruch, we're going to let you go, my man. Thanks for popping on. Maybe I'll see you up in Wisconsin. I'll buy you some beer and some cheese curds. Bill Baruch, thank you very much. All right, we need some comfort food right now.
There you go.
All right, up next, the committee is making moves on this big down day. We're going to get updated trades from Jim, Bryn, all coming up. The Dow off its low, down 737. We're back right after this.
The future isn't scary. NASDAQ 100 innovators, one ETF. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more. Prospectus at Invesco.com.
What's this?
My new pony, and I love him.
Yeah, no, thank you.
I ran the numbers on Quicken. It's totally in my budget. Working tracks all my income and spending, and even built me a personalized budget, so it's easier to save more.
This is amazing.
I know. It is. Yeah!
Do more with your money.
Hi.
Rated the best budgeting app.
It's a lot of money.
I prepare like no one else so you can be prepared for any market. Join the club and let me teach you the right way to invest.
Join the club now. Flash sale offer for a limited time.
So I want you guys to understand, I'm going to put a limit order. We're coming into previous support. So that means the SPY on a 5-minute candle. Okay? Your pre-market low is at 534. You're coming into that. So I have some limit orders out on NVIDIA. If we can break up through this level here, which I think we should still have a little more room to the upside. But it's getting a little overextended here. I'm just going to lock in my money. All right, I have a limit order out. I'll let you guys know if I get filled. I'm watching the level 2 up here. It's acting a little funky. Come on, let's go. I might have to up it a little bit here.
Can we trust Bethany Hall Long? Her record of scandals is clear. No, we can't. Hall Long funneled hundreds of thousands of campaign dollars to her husband and refused to turn over an audit of her finances to the State Board of
That's a nice tail. Low volume on that 30-minute. I might have to up this up a little bit. Holy cow, look at that 30-minute, guys. Look at the tail on that with the volume. Look at that tail. That's a beautiful, beautiful tail. Let's get up there and break up through that level. Abby, come on. What is it, Boo-Boo? Okay, so the Qs are actually starting to turn this into resistance, you guys.
Just joining us.
Boo-Boo, what's wrong?
Down 750 points. The upside?
I think we can get up there, though. I think we should have some upside.
At one point, but let's talk about money-making
upside.
moves or money-saving moves that you can make
Fucking
today.
damn it.
We got a couple of moves on the desk. Jim, you're selling genuine parts. This might be a first reference to genuine parts on halftime ever.
Well, you know what? I'm not going to linger on this because I don't have anything negative to say about it. And my superstar analyst, Ralph, probably wants to kill me for doing this anyway. But look, I needed the money to buy something, all right? Genuine Parts has been fine. I don't have anything negative. I own General Motors, so I've got enough exposure to the auto space. But what I really wanted to do, Brian, is I wanted to buy On, the running shoe company, okay? And folks, this has nothing to do with the employment report. I'm not making some call that people are, you know, and I'm not making a joke either, getting laid off and going running shoes, you know, if that's their first purchase. But this is a very innovative company. It's a rapidly growing company. It's one that I can get behind. I like to run. I don't run as far or as fast as I used to, but I like to run, have a pair of On shoes, and they're really up and coming. I think they are where Lululemon was many, many years ago. They're building out their retail presence beyond shoes. Good growth rate ahead of them, and I'm excited for it. Do you hear the excitement? Because I'm excited, Brian.
You are excited.
Okay.
I'm excited that you're excited. You're not a Hoka man. You're an on what is it? On Cloud,
yeah,
I think
the
is the
Hokas.
shoes. What's it? They want AutoZone?
Yeah.
Are you a buyer of AutoZone?
Listen, I think the commercial
They
business
sell parts, genuine parts, makes parts. Because parts is parts.
So their commercial business continues to grow. I like what they're doing in the Latin American countries. People are holding on to their cars longer. Obviously, that's an interest rate story, which interest rates are.
You've seen my car.
I have seen it. So, yeah, I would be a buyer here. I would be a buyer.
So we own AutoZone, O'Reilly, that whole trade down necessity thesis in that space.
Is that a counter-cyclical trade? Bad times, people might hold their car even longer than they already are.
Do, and expensive financing. There's a whole host of reasons as to why they'll stay in their cars longer.
And so the auto parts, maybe even kind of like an Apple, a place to hide in a way.
They've done really, really well. Both these companies that focus on that space have done really well.
Well, let's stay sort of in the big industrial space because, Bryn, you're all in on copper.
Yeah.
Buying more Freeport-McMoRan.
Yep, this was actually my final trade early last week. I like the stock here. I bought it at 45. I think it's at like 43.25 and some change. It's got really strong support here. But what I did is I added to the stock, but then I sold the January 50 calls. I got $3. And so for a little less than 5 months, I'm going to get 6.5%.
Guys, watch
yield
this.
and
You
call
guys start
premium.
getting your
Plus,
profits
I have
off if you
11+%
took that long on
upside
Nvidia.
from my
God damn it, I'm doing
45.
so
if it gets
fucking
called
much
away,
shit.
I'll have made
Abby, stop fucking yelling, please. So you could have got in there at like $1.50 or so. You know, take some of your money off if you get it. I'm looking for a move back to 112.50, 110. That's just what I'm looking for here. Let's go. Can we get up there? Let's go. The SPY needs to get going. The Qs need to get going here. I told you guys we're coming up into that resistance. The volume is still a bit low. Dude, it's just, they just do not want to fill me. They do not want to fill me. That's so funny. That's crazy, man. Bro, I was just a few cents from getting filled. Like, that's crazy. Like, we have no support here. This is dangerous. This is dangerous, you guys. I want to try to get to 110. I think this is dangerous. We need to bounce back and test 110 or so. You gotta be fucking kidding me, man. The thing is like, you want to stop out, like, when you know you're wrong. Like, as soon as you know you're wrong or it's not going your way, keep your position size down, because you're still going to be able to make a good amount. But you got to give it the room that it needs and give yourself time. So, like Nvidia, look at this. We have nothing holding us up here. If something happens and we can't hold that 100-day, right? Look at that. You start breaking below and get in that gap, you know. The only thing that's holding us right now is that 100-day, and I want to test. I want to get back up to yesterday's close and start trying to make some progress. You guys can see how much that level is resistance right now. That's a break, a bounce into this level right there on the daily chart. That's your gap, and now you're turning 110 into resistance. So I may have screwed up, but again, we're up on the position. I'm trying to get some profits off here. It's just not giving it to me. It's just not giving it to me. I still have that limit order. I haven't moved it up. I haven't moved it down. You know, I want to see us get back to, like, what have we not tested? Let's see. Let's look there. Look, the five. This is fucking bullshit, man. It's a nice double bottom. Boom, boom. This area right here, we haven't turned into resistance at 110. We haven't got to 110 yet. See, this sucks, man. I paid so much more than I should have with this because I fucking fed my cat when she has fucking food. Sorry for cussing, but this shit fucking pisses me off. I don't know. I'm looking for a move back up here, guys, in the 112. See that area? Support, support, support. We broke it. We got back above it. I would like to see if we could run a test back up there. But again, what I'm saying is I'm not blind to the fact that if we cannot hold, this 100-day does not hold us up, we're in trouble. Nvidia's in trouble. Nvidia's in trouble. All you got to do is take a look at that daily chart, and it'll show you everything you need to know. Dude, that's crazy. You guys see that level up there? And even right here at like 110 flat. I feel like bounce, pull back, support, 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 support. Break it, you get up above it, support, 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 you break it, and you never retested it. So I'm watching this 15-minute trade line. See if we can get some buyers here. This sucks. They got 70, 80, 90, $2. Like, you're talking 30 cents on $2.
And Peacock.
I may up the I may up my limit order just because of them making me wait so long to take more on my first piece.
All right, welcome back. It is time now for your call of the day. Wells Fargo downgrading Morgan Stanley.
This is a nice 15-minute chart
which,
setup.
as we know, Jim is
gotta break through this level and hold it.
For sell.
Gotta break up through 188.
It's a lot of attention. Your take on the call.
So we know Mike Mayo. He's a friend of the show. He's a very dynamic analyst. He always says what he thinks. When you see an underweight or a sell or whatever, you often think there's something wrong with the company. That's not what's going on here. I mean, I've read his note, and I don't think any of us are looking around at Morgan Stanley and seeing there's some flaw there. That's not what this note is. This note is simply saying that the re-rating in the multiple on the back of a lot of things that are coming to fruition has run its course. Now, I do think that Mike could have taken it to a neutral or something like that, because that's what generally the analyst community does when they feel like, hey, it's just ahead of its skis a little bit. But it's Mike Mayo. He doesn't pull any punches. So I get it, but I just want to make clear, this isn't like go out and short Morgan Stanley. That's not the idea here.
Just underweight, right? We always call Morgan Stanley a bank. Is it, Rob?
I have an asset management.
I know. I don't like the term
advisors.
bank is overused. It's
Right.
not like I'm going into Morgan Stanley and putting a deposit down and getting a toaster.
Right.
I mean, this is a different type of company.
Right.
To your point.
Yeah, I think also you have 15 years ago, you had so many different wirehouses. You had so much. You've had such big consolidation, and I think if he's calling
This
it for
isn't what I want to see.
I mean, really,
this is not what you want to see if you're bullish.
JP Morgan has
you're down 2%.
Like 85% over the past 5 years.
You're down 2%. You're down 2%. You want to start seeing this thing make progress. Yes, it's in this little range and it needs time to move, but this is not bullish. If you're long, you want to see that stock go. If you're short, you want to see it fall. You know, you don't want to see a double top. You don't want to see this thing just like sitting here short. It's lunchtime. It's 12:30. Yeah, sure, I could consolidate. But that, I don't care if it's 12 o'clock, 1 o'clock, 4 o'clock in the morning. If there's a reason to be long a stock, that son of a gun is going. And this thing ain't going. He had a nice rally. I probably bought the top of it. I probably just bought the top of it. I do not want to test the 100-day moving average again. I do not want to test it. I do not want to test that. And it feels like this pattern's starting to fall apart, unfortunately. So if you didn't take profit on that pullback to 106, you know, this is why you should start to take profit. I'm down on it. I'm down on this position. And I had profit. I have a limit order. I'm just going to stick to my stop loss area. We're above pre-market highs, so you know, you could use that or use VWAP, whatever you want to use. That's why it's important on I don't care how little the money is, because once again, I'm going to go back to the SPY and how the SPY is right back to that 534 resistance zone, and the Qs are rejecting as well. So, you know what I'm saying? Just understand what's going on. The market's selling off. And if you're long, you need it. You want to be long like early, and when it pays you, take your money, because when it reverses, it can reverse pretty damn quick. And you don't want to get caught in that, because just like Amanda yesterday, she was long, she got 2 weeks on it. Think about if she never sold Wednesday and Thursday. 2 days. She would be just distraught. You know what I'm saying? Like, it would be looking real bad. Real bad for her. If she never got out of that position, or, I don't know. Let's see. So it bounced and then reversed. So I also don't know where she got in. But you just got to stick to your stop losses. You got to stick to them. Like right now, 15-minute chart, in my opinion, doesn't look bad on a 15-minute chart, but where the SPY and the Qs are, and the sentiment right now of a possible, market pricing in a recession, this isn't cool. This is one of the stocks that's at highs that's going to get sold. And NVIDIA is 26% of the market. So if NVIDIA is not going higher, the market ain't going higher. Let's see. I don't know. So that's all. That's all, guys. I'm trying to give this thing a little bit of room. I wish I would have waited, but again, I feel like if I wait, I'm not going to get my position on. I took it a little later. I paid up for it. So I'd like to see a reversal. I would. I'm going to go through here and I'm going to look and kind of time out the move. That's our first inclination. Right here is our first inclination of divergence.
Staying connected is easy with Jitterbug Smart 4, and now it has a new low price. Call 1-800-513-7900.
Man, this sucks because because what I would think about right now is that 150, 135 to 150 area when I called this out. Or what was it? It might have been like 140. I forget. I know it was like at least like 150 to like 135. It wasn't 160, 158. I don't know. I forget what I was gonna say. So I look at it and I'm like, damn, I could have got it 50 cents cheaper. 50 cents on $2 is 25%, guys. You know what I'm saying? 50 cents. That's some nice change, right? Like 10 contracts, that's 200 bucks, right? That's 250 bucks. I like to use percentages, but so there's a nice little weekly chart here. I don't like there's a little bit that I don't like what I'm seeing. But I would like to see a little like weekly candle bounce back to like 117 or so. So since I live next, I don't know if that's a fighter jet or if it's a regular plane. Let's see here. Let's go see what the SPY's doing. We are almost at 300. I know we can do it. Nice breakout, SPY. Let's go. And look, the Nvidia's going to go higher. SPY's trying to bounce a little bit here. And I'm going to... and the trade's lower than where I got in at. It might be a corporate jet. Man, that sucks. Because that's like 25% that I could have. I would love to see some of these names go green or just like go back to flat. That would be awesome because you're going to have big up and down moves. Come on, baby. You can do it. You can do it. Let's go. Damn, that's such a big... That's a lot of selling. But again, that is the bounce. So, you guys notice, for anybody that's watching the SPY, you see how far below yesterday's low it is? And it's not even trying to get up there. It's taken forever. It's not like the volume is low. It's just dragging its feet. It's not good. It's not good. It's not good that I paid up for NVIDIA. Looks like I'm going to have to here soon get ready to stop out and take a loss. A little bit bigger than I wanted it to be. I already have a loss on USO. I don't like the way that where this is going. When I could have had a nice little winning trade on Google and Meta and Tesla when I called it out this morning, I was just got caught lacking. So yeah, I did. Google, I think it was what, the 1.7. I can't think. What was the number? 170. I want to say. Is that what it was? Yeah, once the 100-day. So yeah, 170 puts, or or short at 170. I do not want to be down fucking 25% close to it, 15%. Sorry for cursing. Like the SPY has some support here. You have the trade line VWAP cross. Like you want to start seeing volume, bang, rip off this level and just spike really high. Guess what? You ain't got nothing but tails. Like that's crazy. That's crazy. So if I pull this up, Google's down on at the low. Looks like Apple's trying to reject a 20-day moving average up there. That was the level that I gave you guys up here at 226. Put this level right there up this morning, a little earlier. I don't know where I'm going to stop out on this trade. So look at the SPY. Look how it's dragging its feet. Look at all these tails. This is a 5-minute chart. You know what I mean? It's got everything it needs and could possibly want, and now it's going to break down. So this is a bounce above VWAP. It starts slowing up, and watch it not hold. Why? Because it doesn't look. 1, 2, 3, 4, 5. Everything is like overdone. MACD's positive. It's going to sell off, and that's going to fucking look. I knew it. Fuck you, Nvidia. Go suck a fucking dick, you fucking piece of shit. I knew it. I fucking knew it, man. I fucking knew it. You're a fucking dirtbag. They're not buying. I'm just mad because I was literally a penny away from getting filled. You know what I'm saying? So it's a little bullshit. Just some bullshit. Now I have to watch it go 25%, right, to get back to my order. So I'm just like, you gotta be kidding me.
And you know what else should feel easy? Setting up direct deposit to your new account. Obviously.
It's not gonna hold. It's gonna go back to the 100-day.
That's the power of us.
We're not gonna be able to go green. I don't see this. I don't see any of these names bouncing back. I don't think this market's going to go back to green. I don't. I think it's just too weak.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
I got time on it, but you know, here's the thing. This thing gets down to $1. Now I'm down 50%. You know what I mean? I'm down 50%. And then I got to get 100% to break even. That's where most people fail because they don't understand the math. If I'm down 50%, I need it to go 100% to break even. I don't know. I'll give it a little bit of room, but It's not the right call. If I can close the gap and get a, like, if I can get back close to where I was at, even if it's a smaller loss, I'll still take it off. It's just the markets, they're not ready to buy. They're not ready to buy, and I think you see the SPY put in a double bottom. It would not surprise me, guys, if you see the SPY back down at low a day.
Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track. Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement, 13 retirement blunders to avoid, and maximize your Social Security. Call 1-800-759-4477. Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better. Call now for your Comfortable Retirement Kit. Call 1-800-759-4477. If your retirement
See, look, it should be bouncing back right now, but it's not. So for the next hour or so, we're going to sell off even more. I'm going to get hurt on this one. I'm going to get hurt on this one. It's just funny how I could go from one extreme to the other just because, I guess, of FOMO, I guess, because, you know, because I was okay with not trading this morning, and then seeing that we were right on 3 trades, and I'm like, you know what, if I'm not able to take it, like, just go ahead and take it. Everything's working out. And there's the break.
In less than 10 minutes now, 1 p.m. Eastern Time, the Baker Hughes U.S. rig count.
Nobody gives a fuck about the Baker Hughes rig count.
On what second quarter earnings maybe are telling us about the rest of the year. Is there any signal?
Maybe I need to just start trading off the daily chart. Wouldn't that be fun? Just trade off the daily chart.
Expectations. That's about average, but the average beat is below 4%. That's a lot smaller than usual, and only 47% are beating on the revenue forecast. That's a lower percentage than normal for revenue, and it suggests there's some pricing pressure out there. Number 2, the companies are not making very bold calls on the second half at all.
Jesus fuck, bro. $1.39 now. You gotta be kidding me.
So it's a sign that companies are taking a wait-and-see approach here. Third, tech earnings are still growing, but they are decelerating. We talked about NVIDIA a month ago. Other companies are seeing this. There have been an elevated number of tech earnings this season as well. Skyworks, for example, Juniper, Oracle, just 3 of several. More importantly, for big cap tech, earnings growth, as I mentioned, decelerating.
This is ridiculous. It really is. This is so fucking ridiculous. Just everything that's going on. Like, there was no reason for us to not hold that level. There's no reason why we shouldn't have held that level. And here we go. Right there. It's a fucking... I swear to God. Sorry for cussing, but... This is just what happens. Here we go. Now we're going to the downside. Let's see if I can hedge this. I might go ahead and put on... I got time on that. Let's see if I can get... Let me see if I can get some daily puts here. Fuck, it's already down to the 100-day. It's already sold. It's going to bounce. It's going to bounce. See, it's going to bounce. God damn it. I should have hedged it with a weekly put. I didn't think about that until now. Let me see what they want for these, because it's half a day. They're going to be cheap. 104... let's see.
Well, the market's acting like that today. Great. I had no idea NVIDIA was down that much off its intraday high, but that's what you do.
Let's see if we can get a 106 or so. Rejection. So here's what I'm going to do, guys. I'm going to back this trade up with some daily puts and see if we get down to like low a day or so. I'm going to try to get a bounce here because the market's pulling back. It's just not holding VWAP. I am watching on the SPY to see if we can hold like 531 and to try to get something going.
Am I still on
Where's the 15-minute at?
You know, technology can't answer those questions, but RIAs can. And when you're supported by someone who's faced them too, it's much easier. It's more than tech, more than service. What matters is having a custodial service provider who gets you and treats RIAs like they treat
No, hold on. I can't fucking see this. Yeah, again, sorry for the cursing. I do apologize for anybody out there that doesn't appreciate it or whatever. So we are above VWAP. I want to see NVIDIA try to go green. SPY still selling off. Again, if I'm going to be long, I want to be, let's see, the Qs. The Qs are doing alright. As far as the setup, the Qs look better than the SPY. They just do. Where am I at? 15-minute chart, 30, 15-minute, 5-minute, 15. Alright, let's do it. Let's do it. Let's do it. Let's do it. Let's go. Let's get up there. Alright, I want to see if we can get a 5-minute trade line. See if we can get this thing up here. And see if we... See, I don't want to waste that money. Trying to think of how I'm going to do this.
In today's volatile markets, you must learn to trade options. Hi, I'm John Najarian, and this is my brother Pete. Our new book, It's Not an Option, can teach you to become a successful options trader. And we'll send you a copy.
Just give me 103. Just give me 103. 103 puts. 103 puts. 103 puts. 103 puts. Give me 103 puts. 103 puts. 103 puts. Come on, baby. God damn it, they're already up. Like, I can't even get in this shit fast enough, bro. What the fuck? It's... Oh my fucking God, bro. You gotta be fucking kidding me. They're already up to 50 fucking 5 cents, bro. Oh my God, I'm just getting frustrated. I'm getting so frustrated. Getting so frustrated. There we go. Good. Revert back to the mean. Now, like, I want to see the SPY have some type of, like, go. I don't think it's going to. Dude, it just went to... There's already 10 cents right there on NVIDIA. Now I got to make sure when I sell it, I don't sell the wrong one when I do this. I've done that before. Alright, so we just popped in that pre-market.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 100
Oh my God, it's gonna pop. I fucked up. I messed up, guys. I'm such an idiot. I'm just entering this at the wrong spot.
The burning of wood and charcoal are very harmful to humans. LPG is an alternative to solid fuel. It doesn't make any soot or smoke. LPG stands for liquefied petroleum gas. Being able to cook without polluting the air is so important. We have an ambition of reaching 100 million customers in Africa and India by the year 2030.
Wait, is that where my other stuff went? I wonder if that's where my other whatchamacallits went. Oh my God. I'm just getting... Oh, okay, cool.
Data science
All right.
That's some of the biggest challenges in the financial markets.
Hold on.
If we focus on the mortgage market and follow the life of a loan from origination right through its pricing and capital.
All right, so I actually didn't do bad on that. They gave me a really good fill there. They felt my pain. That could be the only thing that's going to help me here. So I actually wouldn't mind if we pulled back a little bit. Just to take some profits on this short-term downfall. So I would target 104. Hopefully the market doesn't quiet down right now.
Final trades on CNBC, MCP, McDonald's, MSFT, Microsoft, RIG, Transocean, NVDA, NVIDIA. Final trades on CNBC.
Throughout the entire economy. So it's more of an economic indicator than a company-specific movement.
Tuesday, Uber, Jason, you own. Yeah, so for me, I think that there's been some momentum obviously lost in the stock over the last few months. You know, they need to continue to focus on profitability. Gross bookings were up 20% in the last quarter. Mobility was up 25%.
I'm hurting. I'm just fucking hurting, man. I'm putting a hurting on it. What's crazy is that Fridays are really good for me.
Transocean, I know you know this space, all right? They've got 11 cold stacked rigs that have been kind of mothballed for several years. On the earnings call, they made it clear those are going to be in play and soon. That's the bull case. That's
Okay, what is that? 104? 104.
Huge fall premium in NVIDIA. You can buy NVIDIA at 105, sell the October 120s at $8.
This is an options action.
It is today.
It is today. I like it, folks. Thanks for watching Halftime Reports, a big market day. Trying to keep it a little light for you. I will see you on Closing Bell. I'm Scott Walker today. The Exchange starts right now.
Brian, thank you very much, and welcome to the Exchange. I'm Kelly Evans. Here's what's ahead on a very busy and turbulent market hour. All going back to the July jobs report.
Wonder what that noise is.
This morning, the SOM rule, a key recession indicator, has been triggered, and stocks are selling off as a result. We were down almost 1,000 points at the low, 989 for the Dow, about 200 off that level right now. The S&P is down 2.1%, the Nasdaq down 2.6%, the Russell's down 3.4%. Look at the 10-year. Just yesterday, we punched below 4% for the first time since February.
Market doesn't want to sell off either. You know, I understand.
-3.
I understand it's whatchamacallit, but it's lunchtime.
Points of total cuts this year with a half point in September, and the market is quickly coming around to the half-point cut view. Who better to talk about this than the economist everyone is talking about today, Claudia Sahm. She's back, and we'll talk to her in just a couple of minutes.
All right, let's go. Let's start getting some. Let's start getting something going here.
NVIDIA down 6. Intel, the disaster du jour.
Oil,
as
no
investors
change.
are bailing on Pat Gelsinger's turnaround story. 27% drop in the stock, worst day since 1974. You'll hear from Gelsinger ahead in this hour. Elsewhere in tech, Apple is managing to hold on to some gains, but big questions remain. Look at almost up 3% in this tape. That's impressive.
That's crazy.
Or I should say CapEx spending more broadly is dominating the tech earnings cycle this week. One of the big players in the space, Databricks CEO Ali Ghodsi, will join us.
All right, so we're bouncing in the 50-day.
Before, let's start with the macro that's driving.
We are bouncing in the 50-day moving average. Dude, this is a shit show performance for me today. I don't know what happened. I really don't. I do know what happened. I mean, let's just be honest. I had a limit order out to get you know, take some profits here, and they want to, you know, not fill me by a penny. Come on. Come on. It's kind of funny.
But now, is the recession actually the case this time? Regardless, could this force the Fed to cut by a half point rather than a quarter in September? Let's talk about it. As mentioned, Claudia Sahm.
I'm going to go over to the other chart. I'm just
Along with CNBC economics reporter Steve Leisman, Diane Swamp is also
wanting to make sure that
KPMG, and Ernie Tedeschi is director of economics at the Yale Budget Lab and former chief economist at the White House
Council of Advisors. And to round things out, CNBC's very own Rick Santelli. Welcome to all of you. Claudia, if I may start with you, just kind of give us the latest you're thinking on not necessarily the rate cut question, but what's going on with the economy? Is it a recession?
If I can take profits on these.
When you look broadly across all the indicators, not just in the labor market, consumer.
I'd like to get a little, squeak a little more out. Yeah, there's some nice orders coming in down here. There's some really nice orders coming in there.
Frankly, it's not good enough. We can do better than avoiding a recession. What is very worrisome, and today's employment report underscored, is the direction of travel. The momentum is not good. We are pointed towards
SAVA Cassava Sciences popping to the highs now, $27. Sandy Alpha, Victor Alpha.
I think you put it best in your note on Wednesday. You know, when you said the
Shares
Fed
up
could
about
go ahead and cut,
13.5%
if they
today.
didn't cut
30.
not, you warned they might have to cut more rapidly in the meetings to come.
Bro, they did not give me the downside. That's crazy. It's gonna start popping now, dude. They're really fucking motherfuckers on this. They are screwing people over left and right on this. Like, they're not giving you the move on both sides. It's gonna rip up now. It's gonna rip up. Oh god, this sucks. Now I gotta watch.
Diane, let me bring you in because you're now thinking that they're going to need to go ahead and quicken up the pace of
I knew it. I fucking knew it. Look, what I tell you. What did I tell you? What did I tell you?
And I think they're probably feeling a little remorse because they did discuss a cut. Chair Powell admitted at the press conference in July.
I'm just
at the meeting in July. And
lost fucking calls here today.
Triggering the sound rule. I agree 100% with Claudia that we're not in a recession. We still got momentum, but it is slowing. And I think actually the third quarter is going to be the weakest quarter out there. The good news is that the bond market is starting to do some of the heavy lifting for the Fed and already stimulating the economy.
I have a feeling
And bringing rates down.
that this is not going to become resistance.
People forget how
I really have just, I don't know what I did wrong today, outside of just not getting filled by a penny and actually taking the trade today. I shouldn't have traded. It was either trade Tesla, trade Meta, or trade that Google. And I missed Tesla trying to get in, or I didn't want to pay up for it. And here I am fucking around on NVIDIA. This is exactly what you don't do. Like, if you don't get your entry or you don't get in and what you see it, don't just, like, trade just to trade. And I feel like that's what's going on right now. Like, yes, I'm set up for a reversal into next week, but I don't think we're going to get it. But we're not getting the downside. It's Friday. So if you're trading options, they're just going to burn premium. Just be a seller of premium and you're going to make money. So if you got 20, 30, 50,000, even 10,000, go do yourself the favor of selling some premium. Which is something I could do. I could do that.
Of the labor market. Just look at JOLTS and some of the stale postings that they, for many months, kept referring to and maybe inflating job openings. What's your thought on the rear view mirror and the stability of the foundation before we even think about what we need to move forward?
Bro, what is that? There's gotta be a whatchamacallit.
So we can't let the perfect be the enemy of the good. I mean, in terms of macro forecasting, macroeconomic policy, investing, I mean, this is really hard. We never have all the data we have. We always want that next data release. We always want that better piece of information. And so any decision the Fed is going to make they're going to have to make it under uncertainty. And this cycle has absolutely tested. I mean, the rules of thumb, the conventional wisdom. I get it. And the Fed has been in a really tough place. I think they
FinTwit. Yeah, Fin News. Is that whatchamacallit? Twitter or
Shares of Dun & Bradstreet popping to $10.93 at the high, and shares are halted on a circuit.
This is funny. He said this because I made a funny joke about the stuff that was strong. Yeah, yeah, it is. Listen, I agree because I've been saying this for 2 months that like, do I think it's the end of the world? No. But do I think that contraction, you're seeing a contraction in GDP, contraction in the labor, well, an increase in the labor market, manufacturing negative, private payrolls was right there negative for the past few months, the past 3 readings, and you're still saying you're not going to cut? Okay, cool. Well, then if you're going to not cut and hold tight, the market's going to start to price in a possible recession. And that's what we have. Earnings are okay, but they're, you got Intel that's getting hurt. Contracting GDP, a Fed that higher for longer, instead of saying we're seeing what we want to see. Inflation's coming down. We are having a contraction. Things are slowing. Contraction in GDP. The inflation isn't going up as much because again, when I see the numbers that are still up year over year, month over month, plus 0.3. That's still really inflation going up. But anyway, and they want 2% or whatever. So I think the market's going to price in for them, a possible recession, a mild recession. And it's what they always do. They always shoot. They shoot over. But I hope we get it. I hope we can get another buying opportunity. I hope we can. I've really messed myself up today. Sorry, casual, that you joined here today, and this is a bad look on me, because I'm a lot better of a trader than what I did today. Let's see. It's Friday. Let's see. I'm just trying to see if we're gonna get back down there. I want to try to get this thing back down into 104. So I don't know. I think it's done. It's Friday. The market's all right. Where's the SPY? Nice, bro. I appreciate that. I appreciate it. So yeah, hopefully we get a buying opportunity here. And you know what? The economy and everything needs a cool down, in my opinion. After, just from like 2008 all the way up, and just everything that COVID did or helped bring, whether it's, the fact that China was shut down, everybody got a bunch of money, and, everybody just spent money all at once, still, prices just got way exuberant for homes and a lot of other things. And at the end of the day, in my opinion, I think it does more good than harm, right? When you get these pullbacks, obviously inflation is not good. It's really, really not good. But we need these cool downs to be able to, have price stability. And so, because in my opinion, I think you're seeing less and less families own homes and families being started because 2008 was like a 20-year, 15-year thing. And you're seeing a lot of people get priced out of stuff, is my point. So, but there's that other part where, you got 401ks, you got all these other things. It's just what it comes down to is healthcare, colleges, ripping higher, not keeping up with wages, and wages are not keeping up with housing, college, healthcare, and all those other things. But okay, here goes NVIDIA. Let's see here. This thing's just going to trade back and forth. But I don't know. It doesn't matter to me. Here's what I'm going to do. I'm going to buy. If we get the discounted prices, I'm always going to buy. I'm going to go long. And, maybe they'll call me Nancy Pelosi one day and say I'm an inside trader for playing the game, for making the game easy. Must be inside information. I say it all the time. I'm like, guys, listen, Starbucks, right? We bought it and we went long. We traded it 4 times to the long side. There's still a balance sheet there. You know, what was I going to say? You know, if you buy good solid companies at discounted prices, go long when you get those opportunities and buy them. And that's literally a lot of what Nancy did. What was it? NVIDIA, Apple, all at discounted prices. And I'm like, that's just play the game. Just play the game how it's meant to be played, and you'll do okay. You'll do all right. And don't trade just to trade, just like I did today. I don't know what happens. Fridays, for a long time, have been my best days. I've crushed it on Fridays. And I am not doing so well today. Alright, I need to see where this August 9th is at. Dude, I'm gonna get crushed.
You're right, quickly on that. I mean, that, you know, even if it's a little bit, we'll take it. You know, may it
2.7 year-over-year is a good number. Yeah, I would take it, and year-over-year looks better than month-over-month, but I really do think that the issue moving forward here is going to be more of...
I would like to be able to get NVIDIA, a bounce back on NVIDIA off this 100-day, just like a nice relief bounce back to like 112, 112.50, maybe even up there, like, see if we can't wick up there at like 114. There's got to be something. I don't...
Because in my opinion, it might have lasted longer, and the COVID runway of every effect we all thought about seemed to take longer, but ultimately, isn't that what's going on? Is that's running out? And what's
Let me go through these charts again real quick, guys, because I want to make sure that I'm and that's like today. I couldn't tell people to go short. At least, you know, even if there's a, like, unless there's a setup, but like when I think about trading, and like AMD as the example today, is like that risk to reward has to be worth it, right? Like my stop and my long, they have to add up. Like it has to make sense, right? If I'm gonna, like AMD with VWAP was up here. It was like right around here. AMD, even for like a scalp trade, it was, hey, you know, if you get long, it's got to be here or here, because, you know, VWAP, I'm giving it $1, and a break through that break back up to highs was $2. Like, you know, I would need $2 to $4 at least, you know, versus my risk to reward. I need 2 to 3 at least what I'm risking. And to say that I'm going to short the SPY when it's down 2.5%, when you barely ever see it at 3%, on average on a big day is 1.8%, I can't tell you to go long. On top of that, if you're trading options on a daily, you're going to pay $10 for a $10 move, and it moves $5, and you're down, you know, because you need 20 to just get above break even. You know what I'm saying? And a lot of people may not fully understand that. And it's important to understand it, because if you buy options and you're not, and like it goes in your position, or like let's say it pulls back when you buy it, you know, it bounces, you don't take profit, then it pulls back, and then it bounces, and it's green, and you're like, hey, the stock is up and I'm down. It's because you paid too much. You're too far out of the money, or you paid too much for the option. You know, if you pay $10 for a $10 move, you're going to need to get that $10 plus 4 or 5, if not 10 more dollars with time. And today's Friday. You're working against time. So I couldn't tell people to go short today on the overall markets. I did call out Tesla, Google, and Meta. All right, I did try to take Tesla this morning. I was a little slow on that. But you know, I think it's important to understand, because you can really find yourself in a hole 2-3 months down the road if the bear market continues and you're over and over and over again buying, you know, options that are 3, 4, 5 times the amount. You're spending more to make less, and you're not able to, you know, give the stock the room that it needs because you're already paying so much, and that little area of your stop loss takes you down 30, 25, 15, right, percent, and you can't sit through that volatility. Bear markets can crush you if you don't know how to trade them. It's just important to pick your spots, be patient, and wait for the setups. It is. It's so important. Come on, Vid. Let's go, baby.
Give us some data on that exactly. We will leave it all here. A rollicking discussion. I feel better, I think, after hearing from all of you, and we really, really appreciate your time. Thank you. Rick Santelli, Claudia Sam, Diane Swank, Ernie Tedeschi, we really appreciate you joining us as well today, of course.
Here, I'm going to put this back up, guys, and I'm kind of just going to manage this position here. Figure out, I'm still in the put, you know, I got it for cheap, so I'm going to, what do we have? It's 120 right now. I'm going to give it a couple more minutes. You know, I'll give it till about 2:30 or so, or if we start extending, I'll just take it off and then just stay inside the call. We'll see what happens. It's a bad day for me.
Hey, Kelly.
It's just a bad day. Just exactly what I did today. You guys should not do it. But again, like, see, I'm okay staying in the put because today the market is not in a hurry to get to the upside. Notice how much time we're wasting here. It is Friday. It's summertime. People are probably leaving the office. But look at the SPY. How, yeah, we got a nice rally there. But we're so far away from prior day's close, prior day's low. You know, this market is not in a hurry at all whatsoever to even just run a test back to 540. So be careful. Here we go. Looks like it's wanting to put in a double bottom just to waste more time and then run the last 15 minutes of the day back up to like where we opened or at the highs. That's what I think is going to happen.
Order to take specific measures to comply
like
with the law. And the DOJ
nice
says they are seeking civil penalties and injunctive relief.
Here.
Kelly? All right, Emily, add that to a busy day. Thank you,
Emily
Wilkins.
The major average is
down 2% across the board. The small cap rallies on hold with the Russell 2000 down 3.5 again.
You have like whoever was short taking like some of the profits and dip buyers. So you get this last like half hour, 45 minute of just like a nice rip right back to 537, but you're still way below that low. So we'll see. It's crazy because earnings weren't that bad. I think this is the market saying, Powell, you know, we're telling you that, you know, you might have did a little too much, and you're just still blind to the fact that, you know, we have had first off, you've gotten the inflation data where you wanted it, and you're still not cutting it when you have what you wanted, and you're still saying it's not enough. And now you're seeing what you said you wanted to see, plus GDP, labor market, you know, you're seeing the economy as a whole start to slow, and we are actually starting to see India, Italy, their inflation numbers just went up last month. So we could be in a sticky situation here. So the question remains, will we have a soft landing? We have a little pullback here. Everybody gets scared.
If you're going to be invested in the market, that's a safer place to be. Because right now, you want something that's a bit recession-proof, because the bond market, with the moves that we're seeing, they're screaming at us right now to tell us that they think we're looking at a recession. You don't see, two-year yields go down 65 basis points without some sort of economic message to take away from it. And that's really what we're seeing these last few days. And so another problem is when you can't price risk-free assets, and two-year treasuries are among the risk-free assets, It's very hard to price risky assets like stocks.
And that's exactly what I was saying this morning. When the data comes in, like it was, like 2022 with inflation, and people thought the bear market was because of a war, or if anybody thought it was the war, it was more so because the market doesn't know what to price in when you are pricing in 175,000 to 190 expected on non-farm payrolls, and it comes in at 114. You're like, oh shit. That's not only is that way below previous month, but that's way you were forecasting more than last month, and it got pretty much double less on what you guys expected. You know what I'm saying? This is volatility. This is when this is when there's uncertainty in the markets, creates volatility. You know, the unemployment rate, sure, was a little bit below. Average hourly earnings, 0.2, 0.33 in line. That's not going to change that much anyway as a data set. Year over year, also not going to change. Participation rate may change a little bit, but not really. Government payrolls, look at that. 17,000, previously 43, forecasting 40. Came in 17. You know, so non-farm payroll private, 148, 150 expected, previously 136, 97,000, way under last month and forecast. It didn't go up, it went backwards. Came in way less, and they were expecting it to come in even higher. So this is volatility when the market doesn't know what to price in, because the economists that put out their expectations and forecasts and the consensus, like what they expect these numbers should be, it comes in way above or way below. That's what I told you guys about inflation. When they were saying 4.5%, 5%, and inflation comes in at 9%, they're like, oh shit, you know. Like, so there's
high interest rates.
That's
some of it's because of availability of capital. Some of it is because of just the fact that,
they usually
these don't have the pricing power or the market power that a lot of your larger cap companies do. One of the reasons people love to invest in
if that makes sense. You see why things sell off, because fund managers are going to take their money, number one, because they've made money. They're going to lock it in. They're going to collect their bonuses. But two, not so many people are going to not put their money to work because they want the market to settle down a little bit, right? They're not going to put their money in and just worry about losing it. Number one, we worry about how much we manage risk first and foremost. You know, that's investing, a little bit different than trading. Trading, we have a number. Our job's to make that number bigger. It doesn't matter how you do it. Just do it. If you can't do that, you find another job. But, you know, that's why today you're not seeing the markets in a hurry to get off of these levels, because nobody's wanting to put money to work because of the uncertainty of what's going on with the economic numbers and the market's volatility because of the economic numbers. You know, if that makes any sense. Because they see that and they know that. You know, they know that. Just like inflation, the numbers kept coming in higher and higher, and they're like, you know, Russia's invading, inflation's going crazy, like, you know, so it just creates a risk-off environment. Let's see here. Come on, let's go. Let's go.
20. The exchange is back after this.
I would like a test of low day. I don't know if you guys heard that or not. I hope I had the mic on. But to me, that's why you're seeing the market not be able to bounce back. It's because nobody's in a hurry to put money back to work. We have some uncertain times coming. And that's the first sign. The data that the forecast comes in and the consensus comes in way above or way below what actually takes place. You know. So remember that. Take it for in the future or whatever, for anybody that has never been, you know, told that, taught it, or, you know, doesn't realize it. I cannot believe my day today. I really can't. I'm usually I'm usually much better disciplined than this. I feel like I should have looked at small caps. I should have never traded, but it's all good. It'll be all right. I do appreciate the sub. We're almost at 300, guys. That's awesome. If you guys could hit the like button. I did say that I was going to do that. I wanted to get back to somebody I talked to yesterday here. I wanted to set up a little session that we can all like have some have a like a study group with like going over charts, understanding options, importantly, and what makes sense, like what making the best decisions, when it comes to trading. I didn't make the best decision, but I was a little late on it, but here we go. I'm backing up that trade I with a hedge. You know what I'm saying? So I'm going to be able to collect like now. Here we go. I'm able to collect on this pullback. Let's see here. Let's go. Where am I at? Wow. They just wasted a bunch of time and a bunch of my time. Dude, guys, I have not had this many positions on at one time in a long time. I have 1, 2, 3, 4, 5 positions on right now. Not like for today. I have a couple swing trades.
50% off.
Welcome back to the exchange. Take another look at Intel, down 27%. It is the worst day in 50 years, but it was already down 40% this year going into today.
There's pre-market, guys. See if that turns into resistance and we start breaking below this 100-day. If we cannot hold 104, watch out. Watch out. NVIDIA could start to really pull back. But I expect NVIDIA to sit here and hold this. I would like to be able to take some profits off on this. I would like another test of like 103, 104. But just because I would like that doesn't mean it's going to give it to me. Let's go look. Let's go find out. Is it going to give it to me? I don't know. Let's go find out. If you don't know. And again, the only way that this changes is if there's news. That's a nice 4-hour pullback to the 100. I just paid too much for these calls. And that's what messed me up here. That really messed me up. Look, it is. It's going to bounce. I knew it. I knew it. I fucking knew it. Reject. 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 There you go. Pull it back for a little bit. Let's take a little time now. Let's go into 3 o'clock, pulling back. Come on. God damn it. It's going to bounce, guys. Sorry for the language. I do apologize. It's going to bounce. That's it. It's going to bounce here. And I'm not going to be able to get any profit off on this put. Watch. Guarantee it. Watch. It's going to bounce. It's going to bounce. It's not going to give me any more downside. So it's just aggravating. It's just really aggravating. I mean, I don't mess up very often, but when I do, I feel like a freaking idiot. Like I just, because I'm doing it in front of the world, and you don't know who comes on here that, for the first time or whatever, and they're like, damn, this dude sucks. He bad. This is it. This is the chance to get your money back if you went short. That's what the market's doing right now. Giving those last little bit of put buyers their chance. I would be very surprised if NVIDIA broke this 100-day. It would surprise me. It could happen, but I don't know if I see it happening. I don't see it happening. I don't see it happening. This is still a nice break. Pulls back, retest. A little bit of resistance. Breaks it. Support. Support. See, I think that's what it may do, is just... God damn it. And to think that all of this because I didn't get filled by 1 freaking cent on my limit order. Discord calls, yeah, doesn't matter who you are. The market is merciless. Yeah, I mean, listen, I'm still up. I've had a great, July was just a wonderful, it was a good month. I had some money today, made money this week, and I've now given some of that back. But again, listen, I'm still in these positions now. Let's not forget that. You know, let's not forget that. I am still in these positions. This is actually pretty crazy if this does pull back. The only thing I have going for me is this 15-minute chart. It might have a little bit of room. It might, but I doubt it because the 1 minute's about to rip. I just don't see the 1 minute breaking down anymore. You know what I'm saying? Look at the 1 minute. MACD, all that, it's already done. It's going to bounce. It should at least. So that was your last little double bottom, I feel like. If this breaks down, that's going to be crazy. Because it's really going to give you some insight to... I just don't think it does. I just don't think it does. This is my opinion, though. And even if it does, it may not give you the extension you're looking for. I want to see this rally, like some of these names go back to break even so bad today. But it's Friday. Things will get a little boring. Awesome, man. I'm glad. I'm glad, buddy. That's why I started it.
Speaking, but the market is unimpressed with what they are at this point. John, thanks. More on closing bell overtime?
More on overtime for sure.
We look forward to it. John Ford. We're continuing to track this market sell-off with the S&P and NASDAQ having their worst days since 2022. The NASDAQ is now down 5% in the last 2 sessions. But it's not all bad out there. Here are some of the names actually hitting new all-time highs today. Oh, yes, T-Mobile, Colgate, Coca-Cola, Con Ed, and Motorola. Congratulations to them.
I would like to see if I could just get like a little, like a little whoop, like a little flush, a little whoop. I'm going to take this off. But it's not going to give it to me. I don't think it's going to give it to me. It was such a weird order. They have weird orders coming in on these things. Look at this. It's like they're doing like fractional pennies on this thing. Like right there. Like look at that. 104.86.84 6 like 2499. Like what? When did, I never noticed that before. There's a lot. There's some buying going on. There's a lot of sizing on the buy side of this. They're going in, I don't know if I'd say pretty heavy, but it's a little bit both ways. I'm just seeing a lot of like 23 to 2500. More so on the buy side than I am the sell, but there's a ton of orders that are... Come on, give us this pullback right down there. Let's see.
Earn up to 90 undergraduate credits for relevant experience and get the support you need from your first day to graduation day and beyond. What will your next success be?
There have been no new treatments for osteosarcoma in 40 years. Osteosarcoma is the most common type of cancer that starts in the bones. If not treated early, this cancer can be deadly. Now, OS Therapies, OSTX on the NYSE American.
I want to see this thing flush so bad, just because I have time on the other side of that call. It's not going to, you fucking jerk. Again, I'm sorry for cursing, guys, and I'm sorry if, you know, that I was a bad example on what to do today. I blame it on Ding. That's all I'm going to say. I'm not going to say that name out loud, but I'm going to blame it on him because I felt a bunch of FOMO after that. After that, man, I would have made so much money. I would have made so much money on those calls or those puts. It's so funny how this is not in a hurry at all to just do anything good to the upside. So funny. Alright. What did I get in this for? 40... What is it,
Welcome back to the
39?
Exchange, everybody. Good afternoon. I'm Tyler Matheson with your CNBC News Update. Vice President Harris has crossed the delegate threshold now, needed to secure the Democratic presidential nomination. That is according to Democratic National Committee Chairman Jamie Harrison after the virtual roll call got underway today. It's not official, though. Online voting continues until Monday. NASA management has been discussing this week whether to bring back its astronauts who've been in space for almost 60 days on Boeing's Starliner capsule or with SpaceX's Crew Dragon spacecraft.
That could be what you needed to get a bounce back. I'm not sure, though, man. Yeah, I think I might hang it up. Not the stream, but I'm just gonna... I have calls on NVIDIA. I'm gonna just try and stay in these for a little while. Because if I can just get back to today's high a day by like Tuesday, I should be okay. Anything later than Tuesday, then I'm gonna be in trouble. So... What's the weekly candles on these things?
I started noticing subtle lapses in memory. I want people to know that Prevagen has worked for me. It's helped my memory. It's helped my cognitive qualities.
And when we go into this month of August, let's keep focused on how institutions are investing. What are they buying? What are they picking up? It's good to identify it early in the month and going into like the third, fourth quarter. How are they going to position themselves for this last half of the year? Last half of the year. And when this money comes out, it's going to go into something else. So we want to find out what that is. 42, 43.
The future isn't scary. Not investing in it is. You're so dramatic, Amelia. Hi, Jim. NASDAQ 100 innovators, one ETF. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
This tiny home trend, not for me. Now this is more like it. The same goes for my footwear. So I went hands-free with Y-Fit Skechers slip-ins. Just step in and go without bending down or touching my shoes. Y-Fit hands-free Skechers slip-ins.
Are you raising the child of a loved one? You're not alone. Like many others, you've stepped up to raise the child of a friend or family member, allowing them to live, grow, and thrive among people they
Bro, that was so quick. I was going to say, yeah, go back down, bro, because I was just trying to get rid of this, and then it just, like, flipped on me.
services, training, and support groups. Don't navigate the journey alone.
People with Pennsylvania taxpayer dollars. You don't need to go to Vegas to get the red carpet treatment.
Anyway. Be careful out there. That's all I'm going to say. Just be patient. Wait for your setup. I don't care if that setup takes you a couple weeks because, trying to throw money at the wall, it's not going to get you anywhere. And I'm going to see you get what you want out of life. The other people may not. The ones that want to upsell you, steal your information, and take you for everything you'll give them.
Welcome back to the exchange. CNBC's Next 7 index is down more than 3% right now amid this market sell-off. CapEx spending remains a cloud hanging over mega cap tech earnings this week. week as investors worry about the massive price tags to build out AI infrastructure and the long road to
I'm not sure what just happened there. I just messed up my watch list. Try to reverse what I did.
Sell-off. CapEx spending remains a cloud hanging over mega cap tech earnings this week as investors worry about the massive price tags to build out AI infrastructure and the long road to profitability on that front. My next guest is one of the big players in the space, and with a $43 billion current valuation as a private company, he's definitely on the street's IPO watch. Joining me now in an exclusive interview is Ali Ghodsi, the co-founder and CEO of Databricks. Ali, great to have you here. Welcome.
Thank you so much. Excited to be here.
Do you want to share any thoughts on the tech landscape right now and the market sell-off that we're seeing, the bad reaction to earnings? What's running through your brain?
Yeah, I mean, I think what's happening, I mean, it's two things, right? On the one hand, it's the macroeconomy, which, has been going, it's been sort of turbulent over a long period of time, and it seems to now come to an end where, we see it on the job market and people are seeing it on inflation and, the 10-year coming down and so on. And on the other hand, we have AI. So people are very excited. They know that it's going to absolutely change the whole world. And then huge investments have been done by the hyperscalers in AI. But for us as a company, we've been investing in data and AI for 10 years. And, we see steady growth of revenue and customers getting value out of it. But there's been a huge deployment of capital. So people are saying, is the ROI going to be there right away or not? So that's the big question. But I think AI is going to be amazing. It's going to continue providing value. The question is, does it justify the massive investments that we saw just in the last year? And what's going to happen, especially if demand comes down now with what's happening in macro.
Yeah. So, and again, to clarify for my benefit, for any of the audience who are confused, are you a competitor to the big clouds like an Amazon and a Google and that kind of thing, or do you run on their infrastructure?
Yeah, great question. So we run on top of their infrastructure, so we don't have to deploy massive amounts of capital to build data centers, cooling, and so on. We leverage what they already have. So we're much closer to the customers and their use cases with AI, so that the enterprises can actually get value out of that AI using us. So thousands of customers, using us to just, for AI use cases.
So then would you be on par with the likes of, a Salesforce? I mean, that's more of a sort of customer acquisition model. It feels to me like you guys are trying to help companies use and optimize and understand and interact with their data and use AI to do so.
Yeah, like for instance, let me give you some examples. Rivian, for instance, uses us, right, in their cars to be able to automatically use AI on the data to optimize the battery consumption of the Rivian car, or to switch lanes. Or JetBlue uses us to make sure that, they can communicate using generative AI with their customers. Or Block, Square, when you go into that app, you can now speak to it instead of having to type, on a screen. So these are use cases for enterprises so that they can deliver data and Gen AI to their customers. So we directly see when Gen AI is being successful and value it's accruing to our customers. But we do that on software margins. We don't have to deploy billions of billions of billions in data centers. We just leverage.
Your biggest investment then is basically your people and the algorithms and the software that they're able to come up with, and then that you hope to sell and kind of lock people in. And look, all of this explains why you're such a valuable private company. I don't know if you saw Rich Handler at Jefferies yesterday just put out a big missive saying the IPO market is back open. Now, we've been in an unfriendly 48-hour period from the NASDAQ's point of view, but it does feel like maybe we've had a series of pretty successful IPOs this year. Is that something that you're watching, thinking, okay, there's, I'm getting pressure from employees and so forth to take this thing public? Or would you prefer to stay out of the limelight, maybe do a little M&A without regulators looking over your shoulder so much, and kind of see where we are in a couple of years' time?
Yeah, look, we are not too focused on trying to nail the timing. We just, Q1 was one of our strongest quarters ever, and we just closed Q2. Again, growing 60% year over year, run rate of $2.4 billion, all data intelligence, right? AI use cases. So we're not seeing a lot of these headwinds that, we see in the global markets. When the timing is right, we will go public. The employees want that. So it's something we're going to do. We're not going to try to time it. And, frankly, you don't need to go out exactly when the market is at the top. When the company is ready, we'll go out and hopefully just continue.
Watch this level. I would think about if the market's going to hold up here. I should have went with the overall markets. I should have went with a double, triple leveraged ETF. I didn't think this through. Fucking stupid decision, man. If I can just get a nice push to the downside, I'll be all right, though.
started that maybe shouldn't have been started. But now I think it's sort of a little bit back to being more rational and looking at where do we have special data? Where does my company have some secret sauce that we can leverage and combine with Gen AI so that we can get ahead of the competition? So there are lots of use cases, you know, of course, in customer service, we're seeing more and more automation there. Seeing in financial sectors, if you want generative AI to sift through massive amounts
Come on. So yeah, I would like to see us pull back just a little bit, but I don't know if we're going to.
Predicting revenue, predicting loss, minimizing risk. So there's massive use cases. They're increasing. I just think maybe it got a little bit overhyped in 2023, and maybe
If we do, because what I would like to do is take some of these puts off. This is bullshit, man. I should have never even. I don't know. I'm just gonna stop because again, I was up, and I tried to take some profits, but nope. We are not gonna fill you by one penny. A stock that's liquid as all heck. And let me find out somebody got filled, or there were a bunch of orders that got filled, and my limit order, and I wasn't chosen. I'm sure that was the case. But I didn't see it get there on level 2. It may have, but I don't know. See, the thing is with Thinkorswim, Thinkorswim has the worst level 2. I wouldn't say it's like the worst, but between level 2 and time and sales, it doesn't show you everything. Like if you'll notice, like, or at least I notice that it shows you what it wants, right? It's like look at these options right now. Like let's just say if we go up and we look at these 31, 33, 32, if I go to a different one, you're going to see that sometimes this is going to show you something different than what, like, it's not going to show you orders like there's orders, let's just say 33, 34, all the way up to 44. Let's just say that this ask will go from like 34, 35, 36, and go to like 39, and it's not showing you that there's orders at 38 when there is, or, you know, 41, you know, say 32, 41, but really there's orders below 41. There's orders at 38, 39, 40, all the way up to that 41, and they're just not showing it to you. And you have also people moving around too, but like, because how do I know this? You're like, how do you know that? How do you know that, like, it doesn't show you all the orders? Well, when I have orders that are limit order, like even on options, and I'm like, yo, how is this on the level 2? How is that the best ask when I'm below it? Right? So that was my first inclination, because I use level 2, and I will sometimes, depending on what I'm trading, I'll limit order in and out. Like NVIDIA, I have a limit order out. It's already set. So that's how I got. That's how I started to notice it at first, because I started to see where my orders weren't showing, and I had a better price than what it was asking for, and it just wasn't showing it. So I'm like, yo, I know for a fact there's other people there too. If I'm there, there's other people there. And there's other people that are trying to probably be like a cent or two under me, that are trying to front run my order, like trying to get like up and underneath of it, so as it comes in, they get filled in front of me, and then maybe it reverses and fills everybody that wants to buy, then I'm stuck still in it. And there's the damn reversal. Shit. NVIDIA is just going to play games. I fucking hate this thing. Sorry for my language again, but this thing's just not going to move. I got to get rid of this shit. Let me see. So yeah, that's Thinkorswim.
Welcome back to the exchange. Markets are kind of heading back towards session lows, frankly, as we move throughout the hour. The session low.
Let me see. I don't have the SPY up. Where are the markets at? So the market's at low a day, and the SPY's holding up good. Or, yeah, the SPY is at low a day. and NVIDIA is, you know, at pre-market highs. So that's a good sign. Let's see if the SPY can bounce here. Oh man, I'm going to get crushed. I'm getting crushed today, guys. I think today was the biggest loss that I've had in a while, and it's not even that big. Like, I'm just... The drawdowns on these are bigger than what, you know, we've been having in the markets in the past couple years. You haven't had, at least the options, move like this. Some people are going to find out, guys. This month, or at least this upcoming week and the next week, people are going to find out. They're going to find out the hard way. Like, if this continues, they're going to find out that they got a whole, like, they're going to find out that, you know, the hard way. I don't know how to say it. That, like, they're going to be upset when they're not making that much. They're going to be upset when they're paying more and they can't hold on to it. Like, I'm sitting through drawdowns right now. You know, my entries weren't that bad. I don't think. Maybe the second one was bad, but yeah, I paid a little bit more than I probably should have for the call side, but so here we go. 15-minute chart. Let's see if we can reject here. We could still get a little more downside on NVIDIA. There could still be a little bit of downside.
Does that tell you the consumer is in better position than we thought, or was that a last year story and are things different now?
So this is a great question, and I think my response is actually over a long time thinking about this. There is macro movement, but it could be 2%, 3%, 5%. And then there are all things the company can do within their control, and that could have 50%, 20%. There's more tangible moves a company can make within their control.
This is crazy.
Outside forces. Movement, but it could be 2%, 3%, 5%. And then there are all things the company can do within their control, and that could have 50%, 20%. There is more tangible moves a company can make within their control that I think there are outside forces. We really decided to reinvent the business during the COVID period and really focus on repositioning the company to exactly the high end of the market, delivering the best programs, delivering the best bundling of services, focusing on customer even more than we started the company, which has been really the initial thought process was member point of view. Yeah. We doubled down, tripled down on that, and it's literally outside factors aren't playing, not at all. We have more clubs on wait list than a month ago. A month ago, we had more clubs on wait list than the month before that. Members love the product, they're embracing it. Team members are happy, thrilled, and they're the difference. Our team members are really the reason the company is doing so great. And so I am blessed, and we are not seeing any of the impact. Of course, I can see the stock market, and sure, I understand there is pressure on everyone, but we're doing great.
So I think it's really interesting that this was a strategic shift, and your upscale, we just showed your average price is upwards of almost $200 a month. Very, very different than a Planet Fitness, which has completely the opposite business model. When I hear people anecdotally who are members, it's often childcare driven. They love going themselves, but they really love having that childcare option. I'm just curious if you think about churn in the next couple of years. People might belong for 2, 3, 4, 5 years and then say, okay, maybe I don't have the family need anymore.
Yeah, that's actually interesting. We are actually seeing the lowest churn in the history of the company right now. And the only trends we're seeing for that to improve. Now, literally. The reason for that is during the COVID, we lost 60% of our membership. And when we sign up new members, those new members are the most fragile for about a year. Once the members stay for 1 year longer, and then they stay for much longer than that. So we anticipate right now, we forecast that the attrition rate, the churn rate, will actually continue to go down for our company in the foreseeable future.
Yeah, no, if there was one a little closer, I need it about 8 minutes away. Think you can do that?
Yeah.
How much more, yeah, how much more expansion, really?
Yeah, we have amazing pipeline. We are, we really balanced our growth to making sure the company becomes free cash flow positive.
And now we are in a position that we can pay for absolutely all of our growth from internally generated cash. So now we're gradually expediting the acceleration of our growth pipeline, because but the pipeline is full. So we just pick on it as we can.
No, and I think people should be reminded you are coming into some spaces that were left vacant and maybe helping fill some of those vacancies. Bahram, we appreciate it.
Look, AMD
congratulations
can't even
really
hold
on
up.
a great quarter and a great
This
week
market's
in a very
done.
difficult market. Bahram Akradi with Lifetime. That's it for the exchange. Tyler's getting ready for Power Lunch. I'll see you on the other side of this break.
What do we have? 2 hours left? Man, I'm fucked.
This bakery needs new equipment fast to keep up with demand. So they're going to
I was hoping for just a quick pullback, and I'm just not. It's just not giving it to me, and I know why. Because if they do that, these puts are going to play or pay. Whoever got long did probably what I did, and they're hedging. So anybody that's a buyer right now is getting cooked. Getting cooked. But there's no reason why they shouldn't have pulled this thing back. Like, you'll notice, like look at these. Like, look at this. If I show you a 1 minute chart, like, look at this. Like, you kidding me? You see how it goes, like, a little bit, bang, takes it all back. Goes down a little bit, bang, bang. Goes down, like, there is no, like, it's okay for us to go from here to here in, like, a half hour, 45 minutes. But God forbid if we go back down to, like, 104, 103, which is, like, that initial morning high. Like 104 would have been the sweet spot. 104.25, 104, and it just wants to, like, look how small these candles are. Like, are you kidding me? Look at that. You serious? Like, look at this candle. This thing is like 104.71. 99, 25 cents, we'll say, right? You have these candles at 103.44. That doesn't look right. Hold up. To 104. It's like 85 cents. That still doesn't look right, though. Let's see. You'll probably go up here, retest 106, and then reject 106. We only got 2 hours left, so these puts are about to be at zero here very soon. I'm going to start losing a lot on these, so I got to get ready to get rid of them. And that's what they're holding out for, right? If they just wait. Yeah, they're
Good afternoon, everybody, and welcome
here's
to Power
the thing,
Lunch. Alongside
too,
Kelly
is
Evans,
that
I'm Tyler Matheson. We are seeing stocks
Friday.
sell off sharply for the second straight day.
It is Friday, so there's not, there is a lot of buying, but they're just pinning it, right? They're just pinning this thing, and look at that yesterday. Look, boom, 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 boom. Like, that's a big premium burn for anybody that tried to trade NVIDIA after hours yesterday, hoping for a bounce back. They never got it. And even worse, they got the move, but they were down money because they just went up and then pulled back the same amount as that up move, But it's okay. I have a swing trade on, and look, they'll get one more pop, and then it'll reject, and then look, watch. Right now, it'll start going. Boop! It'll go down here, it'll hit here, and it still won't be anywhere near where I go.
That's a couple $100 billion of market value,
it's
and
my
Intel
fault.
getting crushed.
So just understand
and
that when you're down, it's probably because you should not have done something. And a lot of you guys have been doing this for a while, so you guys know that. Like, I'm not really speaking to everyone, just the ones that maybe new or wanting to learn this. This is why it is important to, like, if you missed your trade, whatever, just don't even trade. Wait until you see something. If you missed it, let it go. Let it go. Because then you're going to put yourself on tilt, because you're going to go try to do something. You're going to lose money. then you're going to be like, oh, like you're just going to think about it, then you're going to get all frustrated, then guess what? Now you got yourself emotional instead of just doing your job and coming up with a way to make money, make that number bigger.
Been down 10%
So
on
I am
averages
long,
yet. The semis are,
NVIDIA,
obviously.
so
I think I'm going to mix a couple
know
metaphors here, including credence and the Olympics and a couple other things. But the Fed has not stuck the soft landing yet. And I think the important question of the Fed is what didn't they know and when didn't they know it as a Watergate illusion. I think they're missing this.
In other words, what didn't they know that would have led them to cut rates just earlier this week?
Everything. Rates are down. Stocks are correcting. Earnings guidance has been abysmal for consumers in particular across corporate America. Energy prices in the midst of what may be a regional conflict in the Middle East are crashing across the board.
Anything to
whether
not
it's
let this
crude oil,
market
whether
bounce.
it's gasoline, whether it's heating oil, whether it's natural gas, all of these are coming down amid concerns about the U.S. and Iran going to war potentially. It's not happening necessarily, but all these messages.
So the question is, what the hell are you waiting for?
Yeah,
right.
I mean, they should have done it in July. I happen to think they should have done it earlier than that. Now everybody's putting the bet on a half-point cut.
But how do you react to that, Keith? Is it sort of a what are you waiting for here? And is the Fed at the risk of getting behind the curve, to use the cliche?
Well, I got to tell you, I'm all with Ron on this one. He makes some very insightful points. And, to my own credence, I'm playing in a traveling band. I think the Fed has been wrong all along from the very get-go. So I'm not surprised to see this, but here's what gets my attention today is the psychology has changed. And that, to me, is significant. So I'm just going to take a look around. I actually did a little shopping today.
Let's talk about Intel. As I just saw its numbers, they're down 21% today. Keith,
crazy to think
I think of Intel,
might not
and you know
be a
what I
company
think
much
of?
longer,
I think of General
or like
Electric.
in the future.
Oh,
It's a
you
real
know, it's
possibility.
very interesting you mentioned that because we just had that discussion in our office this
What are
morning.
these guys, like
the
storytellers
company
or
is
something?
struggling
Oh,
to
is it
remain
good? It's funny
relevant, which
you
is
mentioned that.
unheard of
Just so
for people
happens
who
in
grew up
my
in the
van
generation
I
I did,
have
where
some
that was a
candy.
household name and could do no wrong. So, to me, I think it's unfortunately
This company
gonna be dead
was
money.
like General Electric, Ron, on the Mount Rushmore of companies.
In 1999, 2000,
Exactly.
Intel was among the top 5 market caps in the world, all at $600 billion, including GE, Microsoft, Cisco Systems.
Can they get the mojo back?
Well, they're in a different business, right? I mean, they're
Keith
not.
says no.
Yeah, they're not competitive in the sense that an NVIDIA is competitive, or even an AMD.
I wonder if
which
this
they
is like a
were,
McDonald's.
in
If
fact,
this is how
fighting
some
with
McDonald's,
decades
you
ago,
know, where all those
there's
old
been
people
just
meet
a
at
wholesale
McDonald's or
shift
Burger King in the
what's
morning.
important in the chip
If
sector.
this is
So
how some of
I
the
don't know. I mean,
conversations are.
I know Jim Cramer and Carl and David Faber were talking this morning about some analysts using or questioning whether or not Intel could be a going concern. I think that is a bridge too far.
AMD has a nice little
but
area
how
here
far
I
we've
would
come.
watch.
Yeah, absolutely.
But when you start asking those
Watch
kinds of
AMD
questions,
well, it's not
down
good.
there.
Yeah,
it's not good.
Well, GE's completely broken apart, right?
Right,
So,
exactly.
Yeah.
Keith, you mentioned you were going shopping today. If you want to kind of button this with any thoughts on Intel or
or
tell us what you are buying.
Deep dive on the
Well,
analysis.
Intel's one of these stocks that I'm going to stay away from now at all costs. Pun absolutely intended. But I went after Apple today.
I don't know
went after
why
Microsoft.
anybody
I
would
added
even
shares
get
to
involved with
Palantir.
Intel in the first
I'm
place.
going to
Like,
look
that's a
to some
stock
of those
that
other names that have been hit hard.
it had
because
one pop, and
opportunity
everybody
is
was
usually
like,
made
"Oh,
on
it's
days
coming
like
back,"
today. You
or
just don't
"It's
know it
worth
until the rearview mirror.
doing something
All right.
with it." That
So
thing has been
one
junked
of the
for
questions,
years.
Keith, we've talked to you at great length about NVIDIA and your love for it and some of the big tech stocks over the last couple of
All right,
years.
let's go, NVIDIA.
Is this a moment of doubling down
Let's
on them?
go.
And if you think they're great, at NVIDIA at 140,
It's not
you
gonna
must
pay
love
on
it
the
at
other side.
104.
It's going to burn premium.
Well,
like
I have
an
no problem
asshole.
buying it, but I'm playing to a longer-term perspective. I think, Ron makes a very important point. You've got to be very calm about this. We don't know exactly if the game's over, but we definitely know it's underway. So this comes down to tactics and psychology. If you're worried about what happens in the next 24 hours, then yeah, it's kind of a problem. But that's not my viewpoint. I'm looking at 3, 4, 5 years, especially on a pullback like this.
Ron, you look at what seems to be happening with the consumer. You look at Procter & Gamble. You look at McDonald's. These are the ultimate consumer stocks.
Yeah, and they're flagging here, and they're saying, they're admitting it too, with their forward guidance that this is a difficult, more cautious consumer. And it's not just those two; it's really across the entire spectrum of consumer companies who are saying that they're pulling back.
Well, now.
Almost.
So I'm glad you said this because I'm scratching my head about this, frankly.
Okay.
Absolutely right about McDonald's. Absolutely right about you. What about Wingstop?
You see when I said that 148, 147 on NVIDIA when we called this out is where I should have got it, and I got it a little bit above it. And I said I paid a little much. Like You could have withstood. You could have withstood that pullback. Look, that was up here. That was up here. We're here, and now it's still back to where we said, and it's lower than our price of our entry when we talked about it on the breakout through 106. You know, now it's back to 106, still hanging out around that that area. So if we get back to 108, which I don't see why we can't, I'm not sure if we will, but I don't know. That's where I should have been a buyer, is my point. That 140, whatever. Because again, you know, getting up to like just under $2, you know, that's 25%. And again, if I'm down 50%, I gotta the options have to go 100% to break even, and 25%, it has to go 50%. I can live off of 15 to 18%, 20%, really 15% a day. I'm good. I'm all right. I'm gonna be all right. But sure, I don't always position myself that way, right? Sometimes, you know, yeah, I look for that 40, you know, 35, 25, you know, I like to at least get 20%. If I can't get 20 to 50%, I won't even look at it. But so we're just chopping around, wasting premium, especially off of a big gap down and a big move. This is just going to eat away at premium. I really hopefully next week we can get a nice bounce on NVIDIA, and this can all just be, you know, given
right now it's flying at the highest level since March of last year, and that is a good segue for this guy. Hi, Chem.
Hey, how are you, Rick?
If I do recall, we kind of warned viewers last time we chatted last week that volatility could get really juiced, especially some of the sector rotation. Why don't you pick it up right where we left off?
Yeah, buy them when you can, not when you have to, right? The reality is there's a rotation that's been going on. Risk is in the market. Ultimately, there's a buyer and a seller. It's a zero-sum game, right? But when risk gets concentrated into a part of the market and leverage, it becomes a problem. So a very violent rotation like we've been seeing can catch certain people off guard and really drive volatility at the center of the market. And that's what we're seeing, along with poor vol supply in the back end of the curve. Now vol is starting to expand, and that becomes a self-fulfilling prophecy.
Yeah, we've talked about this reflective kind of.
That's exactly why I did not tell you guys to go short on the SPY.
So mortgage rates are moving lower.
You know,
now.
Meta,
Maybe
Tesla, short.
Maybe they'll actually get lower
not the
than
SPY.
That.
It's exactly what he's telling you guys right there.
Well, it's asymmetric, right? There's enough pent-up demand. We're running a demand-side style economy now. That when those rates come down, much like they did in December when they started pricing in the cuts, you can see a pretty quick reaction to GDP and to growth. The problem is it's a slowing economy. It's dramatically slowing, and there's a wealth effect, which is ultimately with the market coming down.
I mean, I do know how to
reflexively slowing the market at the same time. So we'll likely get demand, which will drive inflation
and pricing pressures, and the Fed's going to have to deal with its own medicine. But yet, we all know that housing is huge if you want to try to spark some life back in the economy. Any final thoughts?
Well, I would watch, Powell and what he has to say coming up. I think there's they were very vague for a reason in the last commentary. I think they really have an adjustment to make. This is a reflexive machine, and he's watching these markets closely. They say they don't manage markets, but markets are money supply, and the more the market goes down, the more problem we have with liquidity.
Absolutely, and anyone who doesn't think they have both eyes on equities today is probably wrong. Tyler, Kelly, back to you, and try to have a good weekend. Don't look.
That's the exact reason why I told you guys a month ago, 2 weeks ago, 3 weeks ago that the market will start to price in a possible recession if Jerome Powell doesn't stop. He's getting the numbers that he wanted. You're seeing inflation come down, but you're seeing GDP and the labor market start to contract. And the market gave him the market even gave him a while up to this meeting, and then it's like, okay, that non-farm payroll was the final straw, you know. And really, even the day after the Fed day, we took it, we broke that level and then took it right back and said, nope, not today. You know, that initial jobless claims came in. That was the first sign of an imbalance. You took care of your inflation. Now the labor market's getting ready to go south. Now they really can't afford inflation. If you didn't think they could afford it with a job, wait till you see what happens without a job. You know, and I remember saying that yesterday about us taking that move right back, and that was a story that was to be told, like that should pay attention to. So, you know, and that's key, right? That's liquidity, that's money supply. That's going to get wiped out. You know, it's a lot of money. That's market caps. That's valuations of companies. You know, which is all. This is deflationary in a sense as well.
The half-point cut is not priced in.
So for some folks, they're probably pricing it in now.
Come on, NVIDIA, give me.
If we start to see that getting priced in later on, because there's going to be some signals coming from Jackson Hole at the end of August.
I'll be lucky to get out of this on stage.
So by the time we are in September, actually looking at rate cuts, that could be priced in, and we could be having a different conversation.
How weak do you see the
I hate
labor
that I'm
market
positioned for
being
Hamas.
and getting?
So right now, the labor market is showing some vulnerabilities. That's very clear. And there are some very particular vulnerabilities that I'm paying attention to. One, skewness in job growth. Most job growth came from government and healthcare, over 70%. Those areas still have some runway to grow.
And
so
of that
it's not like
70%,
we're expecting a negative payroll number anytime
90%
soon.
was.
But there's also other vulnerabilities, and that has
Only
a lot to do with
10% of that
hiring.
was
So
healthcare.
hiring hasn't picked up. In fact,
Of
it's
that
slowed down
70%.
coming into the summer, and we're not going to continue to see unemployment remain contained if people can't find
But
work.
really, that was just 1 month's
So
data.
on
but-
that front, Corey, when we talk about kind of what the Fed should do here and whether they, in retrospect, should have cut on Wednesday, what are their best options now? TD is now calling
So,
for a
and I
75 basis
think the
point
reason
cut in
why the
September.
Fed is holding on to, if you're wondering, well, why wouldn't they just go ahead and cut? If you know, if it's where they want it, they were still worried about home prices, and they were still trying to hold for home prices. And Powell mentioned, even if they hold, like they would much rather have the risk of holding too long than too little, because holding too long gives them more of a path to easing than cutting too early. If they cut too early, they don't like that gap. Let's just say, right, interest rates are 6%, we'll say. They're not. Let's just say interest rates are 6% and inflation is 2%. You have 3, 4, 5, 6. You have really not 4, but you have 6%, which you're undercutting the inflation, right? At 2%, we'll say inflation 2%, rates are at 6%. You could cut. You have like some room there, so you have that easy 4 basis point. You have 4% there, and you'll have that extra 2%. If you need it. So if inflation goes negative and real rates are at 5.25, which is where they are, and let's just say inflation goes to like 0, and that gives them a wider range to cut rates with their formulas that they use for inflation. For anybody that doesn't know that, right? So it's all about. This is why, if you're wondering why wouldn't he already cut if the numbers are already where they are? He was trying. He doesn't. Powell is coming from the mindset that he would much rather do more, have a problem of holding higher than holding for too little, if that makes sense. Maybe I'm saying it wrong, because he has said this. You know what I mean? Many times. He would much rather hold for too long, because they can handle the labor market and a minor recession a lot better and quicker than they can in inflation. Right? They really want to get inflation under control. And if the labor market, if things start to go bad in the labor market, okay, cool. Like, you know, that problem, in their opinion, is a lot easier of a task to fix than inflation and getting it to cool. So, you know, again, that's that's also why, you know, I know that that's why they haven't cut yet. But, and, you know, I feel like they are under the impression that they need a cool down. They need to cool things down. And maybe it was their intention, or I don't know. Because, again, you have to understand they have to abide by the laws. And the law is, you know, maximum employment and price stability. So they have to work at those two goals. They can't just, you know, even though what's his name did it in the 80s because he needed to. So I guess Powell could do it if he wanted to. You know, it's not something that they want to do, you know, because it's people's jobs, people's livelihoods. You're talking about when things get bad, you know, suicide goes up, drug addiction goes up, all that stuff. So, you know, it's good, you know, or it's not that it's good, but it can do a lot of good for a country, but it can also, you know, that short-term harm that's done, you know. The thing that I say, and the thing that I think is that knowing about it is the first step into being able to get around it yourself, right? If you're ever affected by a recession, you know, understanding it, understanding market cycles, and being able to say, okay, what do I do if you know, I need X amount of dollars saved. What is something that is needed? What's a service that's needed in that type of time? Maybe you have a truck, or you run a moving truck, and, you know, sadly, but, you know, you have a moving company because people are losing their houses, and realtors or banks are using you to clean these things out of houses. I don't know. That's just an example, you know. So knowing about it's could be the first step in, you know, not succumbing to it. Understanding if you're going to be a realtor, you may want to have a backup for when times get tough, you know. Which this has been crazy to me that we are where we are, and financial conditions have continued to be at lows, which is crazy. I think we start to see this obviously change, but I would have expected that this would have kind of led us to the top in the markets, and it never did. The one thing that I do use is the bank term lending program chart. That one lagged a little bit, and I was like, man, this thing's sinking, and the market's not. Damn, these are back to 14 already. Shit. See, look, looks like the market's going to bounce here. So, damn, I was really thinking we were about to have a little bit of downside get put in the market. All right, I got to figure out. I'm going to try and possibly get rid of this, and I'm going to keep these longs on this NVIDIA. It's not that I don't have no choice. I have some time. I want to see if I can get there, and I'll see if I can, you know, I'll put on some other positions to get today paid for, you know. Hopefully hopefully NVIDIA, you know, we get a nice little recovery, maybe a nice little shake and bake, make people think that, oh, it was just a 1 or 2 day thing, and I don't know. I don't think that's going to be the case, but I would like to see a bounce. I would like to see a little bit of a recovery. Maybe people start buying. So I'm going to keep this. I'm not getting out of this. I have a limit order out. Man, that's crazy. That's so frustrating. I thought about lowering my order too. When we were up here wicking, I was like, you know, you have a week. Like, just get out of it and get back in it. Because I wasn't confident that we were going to continue to break out, and I don't know. It is what it is. So I'm going to stay in this, and this put here, again, I'm down on both of these. I'm going to attempt to get out soon. What time is it? It's 2:30. Yeah, I got to get out. See, the market's just going to sit flat and sit still.
Steve, thanks very much. We'll see you when you get back. All right, let's move on now to another tech company facing its own challenges, Amazon, getting crushed following its results. Revenue did jump 10% to $148 billion, but that was a little bit shy of what analysts were looking for. Let's get to Kate Rooney now with more on what's going on Amazon. Kate.
Tyler, so Amazon is the biggest laggard right now on the Dow. The consumer side of that business, so e-commerce is really what has Wall Street worried today after yesterday's
Boom!
report.
Blast off.
The first time
50-day,
Amazon's
20-day.
revenue guidance
Should all
is
meet right up there at
116.
116.
Profit outlook also came up short, and then online sales
It better
did
not
slow
wait
to
until
5%,
112.
down from about 7% in the prior
I want to see
quarter.
a blast off rocket
on the call with
from
analysts called the
SpaceX.
Consumer cautious.
Just
Said folks are now
big
trading
plume
down
of
to
smoke,
lower
just
priced items, but did
boom,
argue that
just
faster
rip.
shipping for Amazon
I want to see this
is
thing
giving
rip.
them a bit of an edge.
Give
and
us some
as
news.
RBC put it in reaction,
You
the
created a
concern
new
from here
GPU
likely
or
switches from that
a new graphics
AWS
card and
re-acceleration, that cloud growth. Concerns there to views of a softening consumer, effect on margins, and rising CapEx intensity. They joke, where have we heard this before? It's a theme throughout big tech.
I
One
know,
reason for
tell
the
me,
choppy
Don.
Forecast. The CFO told us on the media call that
It's what
consumers
happens,
are
bro.
distracted by the news cycle.
You know, sorry I didn't see your, I know. Like I said a while ago, if Powell doesn't do something, the market's going to price this in for him. Just like it did in 2018. That's what I feel. That's what it feels like is going on. So here it goes. It's going to, like any other day, if this was like a Tuesday or like a Monday, this thing would just rip and rally into the close and go test prior highs. Let's see here.
Support the growth needed for AWS and
so wish me luck, guys. I'm going to hold these for a couple days, at least until Tuesday. I'm going to try to hold these until Tuesday.
Core businesses are. One is the consumer business. Two would be AWS, and three, it would seem to me, would be the growing future in AI. All of the other
I dug myself a hole today, that's for sure.
Apple Prime,
a little hole, nothing crazy. I can get out of this hole, but
almost like rounding errors to me.
Yeah, well, there's also advertising, which is a growing part of really the bull case, but it goes back to
my
Apple's
expectations were a
founding.
little
That's
bit
the
more
core
than
side
what it
of the
was going to give
business.
us.
E-commerce, them selling things online. It's a lower margin business. It's kind of, you can think of grocery stores and normal retailers. That's really what they're known for. And when most people interact with them, you've got the Prime subscription business, which is a part of that. And their whole bid has been, all right, we want people to stay on our platform.
Bro, this is
They're
crazy.
shopping
We
with
still
us,
have
but
room
they're
to the
also-
downside.
that helps the ad business.
And it's
They're
not
buying
doing it. Like,
subscriptions,
get it
they call
over
that
with.
flywheel effect. And
They're
then
going to eat up
AWS
all this
really
time,
sprung out
and they're
of
going to eat up time
nothing
off the
from Amazon.
clock.
It was built and is now the
Be careful.
higher margin, really higher growth side of the business. So
I
it's kind
can't
of, you
believe
can think
this.
of it as sort of these two parts. But one way, I was thinking about this analogy. I'm not sure it's a perfect analogy for the quarter, but if analysts and investors were going to give Amazon a hall pass on spending, you saw this with big tech. They've got to really nail it on their core business. You saw this with Meta. They're going to have to nail it. It's kind of like your parents saying, okay, you know, if you do your homework, you can go out and play with your friends. If you do your homework in the case of Amazon, if you're really nailing it with e-commerce, you can go out, we'll give you a hall pass.
Yo,
we'll let you
Drew,
go.
by the way, Drew, I
big
just
on
got
AI
that
and
from
do all this
yesterday, man. I
CapEx.
appreciate you, buddy.
That's really what they
I just
were
got that
not able
message.
to accomplish in the quarter. So that's kind of the analogy I'm going to go with.
I love that's a great analogy. Yeah, didn't stick that landing particularly
that
well,
one too.
as Ron said earlier. All right, Kate, thanks. Kate Rooney.
Thanks, guys.
And after the break, another key tech name going in the opposite direction. Intel sinking big time after missing on guidance, cutting its workforce, and cutting the dividend. We'll break down all the chip
I
stocks.
wonder what Intel does from here. I wonder if they get rid of their CEO. I was saying to Lance yesterday. I don't know if some of you guys watch. I think I'm pretty sure. And is there two? Is there two? Is there two in here? Oh, there is two messages. Oh, which one? I got one on my phone. Not Twitter. Not Twitter. Well, I got both. Well, I got both of them. Let's just put it to you that way. I got both of them.
So you can quickly build and scale generative AI with security built in. With generative AI on AWS, businesses can push the boundaries of innovation.
We need a small business loan fast. I got this. Loan There's a better way to get a fast small business loan. Go to ondeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
GA, the advanced form of dry age-related macular degeneration, can irreversibly damage your vision. It can progress faster than you think. When GA threatens your eyes, take a stand. Slow GA with Syfovre. Syfovre is an eye injection that was proven to slow damaging lesion growth over 2 years with increasing effect over time. It's the only FDA-approved.
You guys see this 15-minute chart here? Look at the MACD going negative. Look, let's see if we can get this MACD to turn down. Right? Get this 15-minute pull back. Like you're right in the middle here, but let's put in a lower high to go higher. And give me that pullback here off of this level here. But it's already retested it. They're just going to pin this thing. That's why I'm not expecting much. But if we do get one more little pullback, I would like to see either we break out of this and get an increase in volume, and there's like an end of the day, rally into the close, and they collect on their shorts, which is what it's looked like is going to happen. Let's see. I'm not going to get ahead of myself. Shoot, I don't even know if some of you guys saw that. I don't even know. I have to.
Shares of Intel are having their worst day since 1974, falling 26% after poor earnings. Joining us now is Vivek Arya, who covers semiconductors at Bank of America. He downgraded Intel this morning, saying they're not equipped.
Here we go. We're going to go test the top side of that range. Let's go.
Welcome back to Power Lunch. Shares of Intel are having
15-minute chart. You're above the trade line.
Falling 26% after poor earnings. Joining us now is Vivek Arya, who covers semiconductors at Bank of America. He downgraded Intel this morning, saying they're not equipped to compete with NVIDIA and AMD, and there are no.
I haven't ate anything today other than
and he joins us now.
Crackers.
Vivek, it's great to see you. And I mean, again, this is not.
I didn't really
like
have dinner yesterday either.
Off an all-time high. The shares were down 40% going into this, and it's been, I think, on like a 4-year slide.
We went and got chicken and dumplings yesterday, and I haven't had it in a while, so it'll be good.
From an industry side, yes, demand for AI is
I'll bandage up. I'll lick my wounds from today, and I'll go have some soup or chicken and dumplings.
Automotive is not really doing that well, and Intel's presence kind of exposes them to a lot of those cyclical factors. So there are industry forces at play. But in the specific case of Intel, I think in some ways it's a classic case of innovator's dilemma. The company did everything right.
I will say,
4 decades, when it
still not over. I'm still. It's.
CPUs that kept on making them better and better. But I think that in hindsight made them miss the mobile cycle and made them miss this move in the industry towards a fabless and a foundry model where either you are focusing on manufacturing or you're focusing on design like most of their competitors are. And more recently, I think it made them miss the whole AI cycle where there is a shift.
Bro, why did they do this?
So I think they have suffered from a combination of both industry and company-specific factors, and this thing is not going to turn around very quickly. We do think we might have to wait till 2026 to see any tangible signs of progress.
This is obviously a Harvard Business School or any but pick your business school case waiting to be written, because there are many companies that have had exactly this kind of phenomenon that you describe happen to them. What is the fix here, or is there a fix here?
So what I think Intel still has going for them is they do have a very strong brand name. They have a lot of very good US-based manufacturing assets, even though...
This did surprise me that AMD did not have any strength today and actually pulled back. It shows you that semiconductors still are, at least AMD is still a little reluctant to get up off its, you know what.
in the industry to catch up. So we do think that Intel stays a player in the industry, but the time for becoming relevant again, I think that time is going to
Oh,
be
don't think so. I'm gonna charge them for. Yeah, let's pull it back again. What time is it? 2:30. So I got a little bit. Let's see if we can pull this thing back. We're only a few points away. SMC, let's see. QQQ. So the Qs. Let's go here.
Intel's gross margins were over 65%. Now they are 38%. Right? As go gross margins, so goes Intel. And
All right, so here we go. Looks like you had some random volume here start to come in. 450. I wrote down this morning 450 was that middle area, and I wrote down 440 to 445. So 445, we never, wait, we did get there. I don't have it here. Oh, well, you know where I have it? I did some of it. I was back and forth on right here, 450 and then 455. Oh, because that was what? I literally wrote down 445, but neither one of these charts have a line at 445. 450, 440, QQQ, 445.
next year, for instance, there is the end of life of Windows 10. So many enterprise CIOs might be encouraged to upgrade their laptops. So that can certainly help Intel. If let's say there is a geopolitical situation in China.
I'm not sure. I'm not sure if that's because if that was pre-market or not.
Right. More recently, we saw, for example, when there was a strike, when there was an issue with CrowdStrike, a lot of Intel-based laptops.
No, it wasn't. Pre-market was 448.
Assets that work for them, but the big picture thing is that they are trying to simultaneously compete with the best designers on the planet, which are AMD and Broadcom and NVIDIA and Marvell of the world, and trying to compete with the best manufacturing entity, which is Taiwan Semi, and trying to run both marathon and sprints at the same time. I think it's just very difficult in this industry.
This was an interesting setup, and what's more interesting is how we're doing the same thing right here. If you guys can't see this, let me pull up like an hourly chart. So even on the SPY and the Qs, you guys will see how you have right here one pivot low, and another pivot low, and they're all lower, like 1, 2, 3. Well, if you look right here, you did the same thing right here, 1, 2, 3, up, and that was this higher high. I know you guys, I know it's hard to see because I can barely see it. So you can see it right here, 1, there's a low right there, a low, and then it, and then it goes. But what this is if you see, what you have here is this right here. This is pretty much, to the left of us is a rounding top, a breakout of this high, and I won't forget it, right? So if you were to pull back into this whole thing, right, this whole freaking top here, where would areas that you would look for to pull back into as support? First one would be obviously probably like right here, bang. That's a nice spot to start with. All right, well, the Qs didn't quite get there, right? So if you look at that, this 1, 2, 3, 4 up, like this, how it pulls back right here. That's your first, right here, all right? That's your first resistance zone. You go to the you hit it, you bounce, and what are you doing? You're making a higher low, and what's that? Look at that. That's that flat top breakout right there. And again, you can really see it on the Qs. I don't know what just happened, but I'll move this one, do this one. So if I pull a flat top resistance zone right there, should be like right here. So the SPY did it. The SPY did it there. This one is off just a little bit from it, but you can see how it's right there. It's just like a couple cents away. You know what I mean? And then look, right there would be, so you hit like this area, that area, then you hit that previous high, and then you took off. Look, and then you took off. So now we're doing it, and we're right back, and it's like boom, boom, boom. The same thing as when we left this area. So it's kind of funny. I had to bring that up because I saw that this morning, and I'm like, hey, this was the same thing that wait, is this by breaking out?
Are you raising the child of a loved one? You're not alone. Like many others, you've stepped up to raise the child of a friend or family
Yeah, she's
member,
still
allowing them to live, grow, and
like, so I put in a double bottom. I said I thought that we would get a little double bottom and then like a cover into the end of the day to take us back to where we opened, if not like, you know, high a day at the end of the day. I think we will. Well, I don't know. Listen, I don't know. I would assume that we would, but we'll see. I could see it both ways, right? The reason I would say that it wouldn't surprise me if we did rally, because look, and there's that double bottom we talked about. Like when we were up here, I said let's look for a double bottom, and then it kind of just rallies into the end of the day. I think that if we do balance, it's, you know, some profit taking on the short side going into the weekend, but it also, you know, a double bottom. If we don't break out, I think we just sit there and we don't move. I think it's one or the other. And in my opinion, we might just get stuck. I don't think we hardly move. We do have some nice volume, but I don't think it's just getting lower and lower, and it's not. You saw it pick up here for a minute, and then it just dropped. It just fell out of bed. So I got to get out of these NVIDIA puts and save whatever little bit that I have left. I'm trying to see if if we can reject this level and go back and test the 100-day one more time. That would give me another 10 cents on these puts, and I would just take them off and stay in the calls. I'm nervous that we're not even going to bounce back next week, and I should have market ordered out of that position when I got paid, and I should have taken it and stuck and just did what I always do. All right, because it didn't have relative strength, it didn't have like a huge increase in volume. Right, it's not showing you anything to stay in the trade, right? It's not like NVIDIA. You know, it had a nice setup to break out, but that's about it. You know, it's not like we had massive volume come in and this thing just screamed to the upside. You know, and we wait, but it's all good. It happens. That's why all human traders are fired and they just hire the computers, because they will do the same thing over and over and over again with no BS. And they also don't have to feed them. You know what I'm saying? They don't have to pay them hourly. They don't have to pay them bonuses. I was really hoping for a 110. 110 would have been nice. We could have got like, I think I would have been around like 40% on those calls. If I could have got that, if we could have just got up there to 110.
Let's get to Kate Rogers now for that CNBC News update. Kate? Hi, Kelly. The Pentagon said this afternoon the U.S. will make changes to its forces in the Middle East to support Israel as tensions boil over following high.
Okay, so we're getting some news.
Lily, FDA says Manjaro injection, 5 milligrams, 0.5 milliliters injection is available. That on the website. That's from the FDA. That's Lima Yankee.
You know why that looks worse than what it was? Is because I have that swing trade on oil. That's why, actually, that's why this looks as bad as it does. Normally, because I'm sitting here thinking to myself, I'm like, bro, I didn't even you know, have any crazy size on this thing. And
will remain as president of the school through spring 2027. Garber was appointed to the position in January.
Alan Garber.
Claudine Gay resigned following backlash over her response to anti-Semitism on the Harvard campus, as well as Mount's plagiarism allegations. Kelly, back over to you. Wow. All right, Pippa, she said. Kate, thank you. Kate Rogers. Home builder stocks are down across the board today. Could the drop in yields and rates help spur more activity? We will speak to an industry insider about that when we return.
So yeah, I have some oil position on just in case, you know, we get some, you know, news over the weekend or even next weekend. I have a lot of time on this oil play. I said it yesterday that, you know, it was probably a dumb time to get in this, but I have to take it because if something happens, you know, something happens, this could spike. And I think something is going to happen because when they said it was going to happen last time, they went ahead and did something. So what's it going to be? You know, like, tensions are rising. So you know what? I have a position on. Do I like the fact that, you know, people, you know, this could affect people? Absolutely. I don't like the fact that that happens, but I don't know what else to do. You know, I didn't make the rules. I'm just trying to play the game. That's all. Here's the thing though, is I think I don't think you see, even if they do something, I still don't think we see energy break out. Look, you're seeing it now, guys. Look. Look, you're starting to see them. It's recapturing VWAP, and they may try to break out a little bit here to the upside. And you have some people getting in over the course of the weekend in case something happens, just to have some exposure.
With more than $60 million in non-dilutive government funding to date, now is the time to own this rapidly growing company as it fast-tracks multiple drugs to over $2 billion in global market potential. SNGX on NASDAQ.
Okay, team. Oh, thank you so much. I couldn't have done it without you.
Honestly, I don't do a whole lot here. I'm really just here for the AT&T internet. It's super fast.
So any pre-launch concerns?
What if nobody buys them?
That's me.
Or what if everybody...
Man, Dwight looks so old.
That's probably not going to happen.
Can we handle that kind of traffic?
The network can handle it. I downloaded 8 hours of true crime stories just during our last video call. I'm learning a lot.
And she still looks the same. That commercial cracks me up.
Trading session, working the phones, talking to sources, and doing my own reporting to share insights, information, and all of the details that you need to be able to make money.
Well, I hope everybody here had a good week. You know, hopefully this is a sign of things to come. To just be careful and pick your spots. You know, next week I'm gonna have a lot of the names that had earnings, like, which I should have looked at today. A lot of the names that reported this week, I'm going to be focusing on them next week. All right, that'll help give us like a little bit of separation from the sentiment of the market, and it'll give us some reasons to move. So Moderna, I was interested in Moderna, but it's just not giving me the bounce back, and this thing is selling off, like just boom, just getting killed. So I am actually, I should have looked at it today. Why is the what is this? What the heck? That was weird. Damn, it's already almost there. Just to $80. That's so funny. This thing didn't bounce at all.
Yeah, that's exactly right. But
Oh, it did on the day that it opened. You can see it wicked into this level at $100, $99. It wicked in there and then it just fell. It already hit the gap fill, so you have another gap down here at 79. So maybe there's, maybe there's some room left there on Moderna. I would try to get it on bounce backs though. Look at that. That's wild. Wow. If there was ever a name to be short. Let's go look at I can't believe this. Let's see.
Leading to the higher interest rates than you typically would expect, and the forecast over the next year or so is for that spread to reduce. So along with 10 years coming down, you should see a little bit of reduction in that spread, which should help mortgage rates as we move into 2025 and beyond as well.
But what would it take, and this is now a follow-up to the first question, but the second
This is a good level here for AMD at 132.60. That's support, resistance, potentially resistance, and then support. So it looks like some of the semiconductors held up okay. Some of them.
You're going to need some considerable movement down from where we are today. You're going to need some compression of that spread. You're going to need both of those together. And,
I'm wondering if the SPY, like if the market's going to give us a little relief bounce into the close.
A couple of days ago, we were talking maybe low sixes by the tail end of next year with the lower Fed dot plots here after the latest meeting. Now maybe we're talking in the 5% range, high 5% range as we get into the tail end of 2025.
So here's the question that should be obvious, but
Just doesn't want to recapture VWAP. All right.
Are falling mortgage rates, do they mean higher home prices or lower home prices from here?
It's a good question, right? So if you look at our ICE home price index over the last couple of months, you've seen the housing market slow, right? Rates have been in this high 6% range, low 7% range. You've seen the housing market slow for each of the last 4 months, and suggestions that it would cool a little bit more over the next couple of months. I think this is a needle mover. This is a game changer in terms of the way that the housing market moves. There have been a couple of times over the last 2 years where they're in kind of this high 6% range, low 7% range. You've seen the housing market slow for each of the last 4 months.
Sorry.
And suggestions that it would cool a little bit more over the next couple of months. I think this is a needle mover. This is a
too
game
loud,
changer
just let
in
me
terms
know.
of the way that the housing market moves. There have been a couple of times over the last 2
see
years where
Roblox now.
30-year mortgage rates have been where they are right now. Both of those times have resulted in the housing market heating back
Roblox
up, demand
is-
heating back up.
Roblox
Some of that
is
supply,
green.
which has been a bright spot for the
Oddly
market
enough.
that's been rebuilding, getting bought down. And so I would expect a little bit of a transition here from a cooling housing market to potentially a little bit of reheat here over the next couple of months, given the additional buying power folks now have.
All right, very interesting. Andy, thank you very much. Andy
I
Walden,
cannot believe I
we
missed
appreciate
that
your time
fucking
today.
Google trade.
You bet. Thank you.
That should have been us.
10-year printing at 379
And we
right
called
now.
it out
It's
right
broad
there at that
sell-off in the
100-day
market.
moving average.
Intel's
That
lower,
should have been
so are
us.
most of the other chip stocks today, but there is one
That
name
trade
among the
right
carnage
there,
that's
bang.
perhaps a buy.
Should
We'll
have been
ask our
us.
trader which one that is in 3 Stock Lunch next.
I'm not even going to look at Tesla because I was trying my hardest to get that one, and I was just it just took me too long to get in it, and it fell out of bed. Let's see, so that's Meta, Amazon. What's Amazon doing? I can't wait to just get rid of all these levels this weekend and have a fresh chart. My account be down. Fresh chart. Ready to make a comeback. Ready to get that get back. So what else did we, who else did we have? Damn, we had a lot of earnings. PayPal. Did anybody okay, so PayPal turned around. That could be because of rates. JP Morgan getting smacked. Guys, it's at 198. Look how bad JP Morgan's down. Are you kidding me? That was the play of the day. Oh my god, that's gonna make me sick. So two reasons why I brought this up this morning and I forgot about it. I gotta start writing this stuff down. So the first thing that came to my mind was JP Morgan still has a lot of room to the upside if this market's going to go down and bring some of these other names down. This still had plenty of meat on the bone. Second, yields are pulling back. That means they're going to have, banks should also pull back because their margins are going to start to come back down. So damn. And I looked at it this morning too. I looked at it early and I'm like, wait for the pullback, bro. It's not gonna do it today. Man. That's crazy. It's all good. It's all good. Rivian. And how in the heck is Rivian still just like flat? Every time I look at it, it's like flat. It just doesn't move. Like, I don't even want to left shoulder, head, right shoulder.
Welcome back. Let's close out the show today with 3 stock lines as stocks continue to sell off. We're looking at some of the worst.
Everything's getting beat up.
There are any bargains according to our trader. He's Scott Nations, president of Nations Indexes. Scott, welcome.
50% off.
Welcome back. Let's close out the show today with 3 stock lunch as stocks continue to sell off. We're looking at some of the worst performers of the week to see if there are any bargains according to our trader. He's Scott Nations, president of Nations Indexes. Scott, welcome, and thanks for playing ball today. Let's start with Boeing shares, which are down 10% in the past week. The company reported those Q2 results showing a huge decline in revenue, fewer deliveries, that new CEO. The shares are down 35% this year. Would you step in and
I'm going to go make a bagel, guys. I'll be right back.
A greedy buyer, Kelly, and by that I mean I'm putting bids below the current approximately 168 price. You mentioned the new CEO. I think new leadership is absolutely critical. It means Boeing is turning the page. Importantly, he's a mechanical engineer by training. He's not a finance guy. He's not a marketing guy. That means that Boeing is going to refocus on engineering, design, manufacturing. He's their guy. Maybe most critically, he's announced that he's going to be based in Seattle. And you'll remember that a couple decades ago, the company moved its headquarters from Seattle first to Chicago because they wanted to be closer to international customers, and then to Virginia because they wanted to be close to defense buyers. I think it's just absolutely critical that they're back in Seattle. If there's a problem, and the reason I would be a greedy buyer is because the company has 200 planes parked in various locations waiting for parts for final assembly. That's going to be job one for the new CEO, Kelly Ortberg.
All right. Let's move on to Moderna. Those shares are down 30% or so in the last week. The company reported its Q2 revenue beat estimates and a narrower than expected loss for the period, but it did slash full year guidance. Shares of Moderna down almost 10% today. This one has been struggling. Scott, what do you do with it?
Yeah, this unfortunately is a sell. To many people, they were a hero of the pandemic. But as you pointed out, they just lowered full year guidance by 25%, losing a ton of money. Europe has announced that they're going to buy less of the COVID vaccine. It's about $86 now, but the price to pay attention to is the price at the start of 2020 before the pandemic was in full bloom, if you will. That price was $19 a share. So if you love what they did during the pandemic, that's great, but you don't have to be along for the ride all the way back down to 20.
So this would be a sell for you?
This is, yeah, Moderna's a sell for me.
Moderna's a sell, okay.
All right, let's see about Micron. Then those shares are down 16% this week. It's down 4 of the past 5 sessions, but still up about. What do you do with this one, Scott?
Micron is priced with a forward PE of just half. Fairly well diversified. They mostly make memory chips, largely DRAM chips, but those in AI in that they're bundled high bandwidth memory applications. There's a little bit of a glut of memory chips right now, but that's easing. That's going to help Micron. The only concern for this company is CapEx. They're going to have to build 3 plants, spend a bunch of money. But I love the fact that they're solidly profitable and relatively well diversified across the chip space.
We have our buy. It's been a tough week. So broaden it out, Scott, over the weekend. What kind of homework are you going to be doing? Are you stepping in here to say this is it's time to get positive on stocks, sidelines, or rotate?
There's lots of concern because we have slowing growth and of inflation. I'm old enough to remember stagflation. That's a concern. One thing that really jumps out is we calculate and publish an index, TDEX, TailDex, which measures the cost of crash more than 100% today alone. It's only done since 2005. So people are finally getting the message that stocks can go down, and they're just desperate to get protection right now.
Where would you, if you were a defensive-minded investor, where would you go?
I would go to consumer staples, particularly the biggest names with the most pricing, the strongest brands, because they are going to have to not only a bunch of stuff during a slowing economy, they're also going to have to do well. So if and the average cost of the product is $1 and you have pricing power and great brand equity, that's going to be in relation to the broad market. Another one would be Procter & Gamble, same sort of setup, wonderful, relatively low-cost product, and the ability generally to maintain pricing power in the face of. You really would have to have a strong stomach to step into the tech space.
Only quick comment on that, Scott, is I see some of the CPG consumer packaging from inflation. They have disinflationary pressures, but the market is speaking. You know, and certainly Coke chips, to go back to the discussion point. And then on bond yields, quickly before we go, or look at gold's breakout.
Yeah, they certainly were falling on lower economic growth, but right now much of it is a flight to quality. People are just buying bonds, but they're not worried about the return on their investment, the return of their investment. Yeah. So there's a flight to quality.
Very interesting. And we go into the weekend after a very busy, thank you, Scott, by the way, very busy week. Fed meeting, obviously lots of earnings reports that have been sort of spotty, patchy, I guess I would call them, and the jobs report today.
Indeed, I will see you at 6 p.m.
We have a special.
We will have some live coverage. Looking forward to it. And closing bell starts right now.
All right, yes, it does. And welcome to Closing Bell, everybody, on this Friday. I am Brian Sullivan, and for Scott, really a make-or-break hour. Breaking news animation there at the top. You've got a big sell-off in stocks. New fears the American economy may be about to roll over a bit. Another downward revision for the June number, putting the Fed back into play, and some on Wall Street sort of loudly wondering, did the Federal Reserve make a mistake by not cutting rates on? We're going to be joined by former Federal Reserve Vice Chair Richard Clarida. We'll ask him that and more about the economy coming up. You've also got a concerning Amazon quarter, the consumer coming in a little bit weak, and get this, its worst day since I was 3 years old, and the Brady Bunch was a hit on television when they were still cute. We're going to speak with an all-star analyst, unownable right now, and we'll talk about whether or not Intel could maybe go out of business. Not me, him. Here it is. Here's how things look. An hour to go. If you're looking for upside, and we always are, the Dow is off its low. 8 points, about 1.9%. S&P, worst session, but off the lows. NASDAQ now down more than 10% from its high, so technically you got small caps, you got regional banks taking big hits as well. All this as buyers really flock in. 10-year yields well under 4%. And then this, to me, this is the most interesting chart of the day. It is the so-called fear gauge, CBOE, volatility index, measure of bonds, et cetera, or options. It is having one of its biggest moves ever as the market really completely pretty much everything. This all takes us now to our talk the Fed might have to get, what it means for your money, where do we go? A lot. I'll shut up and we'll jump into it. New Edge's Cameron Dawson on set with us here. Also joining us remotely. Good to see both of you. Big day. Need a steady voice. Cameron, first to you. The jobs number wasn't that horrible. It feels like, we brought this up on the noon show, a little bit of a market overreaction.
Well, 114,000 really isn't that bad in the grand scheme of things. It depends on what the actual number of jobs should be. If it's 150,000, 114 isn't bad. If you think we should be closer to 200 to 300,000, then that 114 is pretty bad. If we think about this reaction, there's a lot of positioning happening here, and that positioning unwind is likely why this move is so magnified.
Yeah, because, and I think Cameron nailed it, Keith, because you know that, and the jobs number and the market does what it's doing. That to me is not about the jobs number or the Federal Reserve. It's what Cameron said. It's about positioning. It's about this yen NASDAQ carry trade unwinding. If I'm wrong, tell me.
Well, first, Brian and Cameron, great to be with you. My head's spinning with all these different cross currents in the. I do think it is somewhat of an overreaction. You said you've been doing this a long time. I've been doing this a long time. The jobs report day tends to be an overreaction, and you also have to look at the trend because this number is revised 1, 2, or 3 times. If you look back over the last 3 months, Brian, the average job growth is about 170,000. That's close to the But also, we have to realize we had a big first half in the market. As Cameron mentioned, positioning was a bit stretched. And even after you have that big first half, the second half, you tend to see gains, but there tends to be hiccups along the way with an average pullback at some point of about 9%. So I think we're in that corrective period, but we still think the bull market trend is intact. It just is going to take a little bit to get through this kind of choppier period.
And you had noted, Cameron, to me that all these sort of technical traders, right? They were all long. Yeah. It's like 99.9%. That's almost all of them, 99.9%. They were all long. They got to unwind that. And you pointed out, and this is fascinating, that the markets today sold off almost perfectly to their 50-day moving averages.
Yeah, 50-day or 100-day moving averages, depending on what index you're looking at. So you look at the Russell 2000, corrects to its 50-day. S&P 500, right to its 100-day. The SOX index, semiconductors, right to its 200 days. So the biggest test next week is how we react off of this moving average. Do we bounce off of that, or do we drift lower, meaning that this correction is deeper and more protracted? We really can't judge that until we start to see this bounce, but we would know markets aren't technically oversold yet, which would say that maybe there is some more churn to come.
More churn to come. Listen.
Wait.
I know it sounds weird.
Did Cameron Dawson just say the markets aren't oversold? She just said that markets are not oversold. Why does it keep going off?
Even safe places to put their money. Do you expect that to then be unwound and we go back to, quote, normal at some point here, Keith?
I don't know if we're going back to normal. I don't even know what normal is. I will say we in our portfolios, we added gold a few months ago, and we think it's going to be a good hedge because geopolitical risk is rising. There's uncertainty about the U.S. dollar. It just made a new high. Technically, it looks great. So in moderation, we still think that makes sense. We're actually overweight utilities as well. But listen, Brian, I think this kind of corrective period, there's 2 components. There's a price component and there's a time component. I think both of those have a bit further to go. I mean, one thing we'd be watching for is following tech. Tech let us down, and often when a correction has run its course, you'll see the leadership or you'll see what brought you down start to bottom. We haven't seen that yet. I think what's also notable, 2 weeks ago, everyone was talking about, hey, small caps has had the best, 5-day change we've seen in history, or one of the 5 best. We're back at the breakout point, that CPI day as well. So I'd be watching that over the next week as well, seeing if it can find some support. But ultimately, we do think the market will eventually recalibrate and move higher. I just think in the near term, it's hard to say what the catalyst is, right? We're moving past earnings season. The Fed's in a bit of a pickle because the next meeting's not till September. And then we get into this kind of signal period, which maybe in the election period gets a bit, yeah.
Well, I'm not disagreeing with you, but the Federal Reserve can cut anytime they want. I mean, they don't have to do it at meetings. They've made intra-meeting changes as well. So, A, do you think they've screwed up by not cutting this week? And B, I mean, they're going to cut. They can do that.
Yeah, well, Listen, I'm not one to second guess the Fed. My question today, and I've been asking around, did they have this report on Wednesday? I've gotten mixed answers on that. But listen, if they cut intra meeting, I think then the question becomes, are they? The market may take it that way, as opposed to being patient until September.
As like a panic, sign of panic.
Yeah, exactly. So I don't know that. I mean, I don't know that they're going to do it, and I don't know that the market reaction would be as positive as we think.
Yeah, we heard from Austin Goolsbee today, and it's like he read The Hitchhiker's Guide to the Galaxy that says, don't panic. He effectively said this is just normalization and that we won't read into one data point, which just says this doesn't seem like a Fed that's going into the situation room trying to figure out how they could stall the bleeding. I don't think that they're looking at this 114,000 and saying this is something we need to panic about. And if they did, it would be probably a bigger problem for the market because they would extrapolate that 114 goes to 50, goes to 0, goes to negative in payrolls, which would be a big problem for GDP and growth.
I mean, we're showing all these stocks, Cameron, right? And I get Amazon, they had weaker consumer numbers. Intel, its own story. We'll do more on that in a couple of minutes. But, you know, Micron is down. They make DRAM. It's a commodity product. Like, people are going to buy computers. They're going to buy things with DRAM. You know, Micron's down 10%. Prudential Financial, probably on the bond move, down 10%. It feels like everyone's just kind of dumping everything. And they're going to take the weekend to kind of reconsider what they want to rebuy.
Consider the starting point about how overbought things were. And so there is still this aspect of the bigger they are, the harder they fall. The more you were extended and overbought, the more room there is to correct, because valuations were also very extended. But to your point is that the big question from here is that do you see these kinds of moves translate into earnings revisions starting to trend lower? That's been the key
at least the
thing
high
that's
of day.
underpinning this market is continuously rising earnings
Should start to
revisions.
climb the high of
Answer
day.
your own question. Is this going to translate into revised earnings?
I think 2025 numbers are too high, and maybe
One
this
more.
data
One,
is the spark to get
maybe
people
two
to
more.
start moving
That's
estimates
crazy.
lower. 2025 numbers have a huge amount of acceleration in the top line and massive margin expansion. If inflation's fading, neither of those two things happen, which is why we think 2025 estimates do need to come down. And it suggests that as we move into next year,
I'm not going to
we're
interrupt.
looking more at a
what she's saying, you
sideways
guys are
kind of
listening to
choppy
this.
market versus this unflinching up and to the right.
Yes,
just
and
see-
Keith, I know
I just
Bill
see
Gross,
something
he's a friend of
that's
mine. He's known as the original bond
kind of funny.
but now he can just do whatever he wants. And he tweeted out something interesting today, as he is wont to do. Bill said, is any media figure willing to say bear, meaning bear market, bear, Bill, I'm in the media, I just said it. But he says very few bull stocks these days, pipelines, banks, financials in general. And this is, I want you to comment on this. Investors should stop talking about buying the dip and start asking about selling recoveries. What do you think?
Interesting. I gotta think about that one a bit. You know, at this point, I mean, our baseline view is that the bull market is still intact. So we would still be saying probably somewhat of a deeper pullback that you still want to buy the dip. I think some of this kind of economically sensitive trade that we had up until this point, I think that's questionable in a cooling economy, like going back to the small cap trade, even though we're more neutral. You know, in order for that to really do well, you need an economy, historically at least, to have some momentum. So what we're thinking about is we're looking actually with tech. We think it's premature. We downgraded tech at the end of June. We're looking for an opportunity later this year to re-engage because we still think that's the secular story. So to answer your question directly, Brian, we're still looking for buying the dip. We're just not buying the dip yet.
Not yet. That word "yet" is always such an interesting word. Yet. Keith Lerner, Cameron Dawes, thank you both very much. Have a great weekend.
Thank you.
All right.
Thanks, Brian.
In the meantime, we talked about it a moment ago. Intel on pace for its second worst day ever. In fact, in more than 50 years as a public company, Intel's only had one other day worse than this, and that was in 1974. Just gave away my age, but it's on the wiki thing anyway. This after investors, or Intel saying it would suspend its dividend, and it would lay off 15% of its workforce as part of its costly turnaround. John Fort sat down with CEO Pat Gelsinger and asked him about what is ahead.
Fundamentally, the four areas of our business, we're not changing any of those. A foundry, our client networking and data center business, those four areas. But within each one of them, we're looking at the portfolio of things and saying which ones are getting good financial return and which don't have as good a market or financial opportunity in the future.
All right, joining us now is Stacy Rascon. He is a senior analyst at Bernstein Research. I'm just going to, Stacy, you're a straight shooter. I'm just going to lay it out. You put in your note. You actually said in your note, I don't have it on top of my head, I'm not looking at it, something to the effect of, we may have to start having going concern comments or discussions.
Not quite.
No? Can you clarify that? Because it's getting a lot of attention.
What I said was in some other environment, we would probably be having those conversations. The one silver lining.
Not Intel, I want to be clear, because it's gotten attention.
So what I wrote was in other circumstances, we would be having those conversations. However, the one silver lining from last night, I actually do think Intel will live through this. I don't know what kind of a life they will live, but they will live through it, and here's why. So they are clearly, things are going very badly. They're cutting a lot of costs. They're in survival mode. But if you sort of add up the cost savings from the reduced CapEx, from the reduced OpEx, from the suspended dividend, and then from all of the cash that's coming into the company, like from the governmental support, as well as some of these partnerships, they've sold pieces of some of their fabs to private equity and gotten cash in. If you add all that up, it's probably $40 billion of incremental cash that will be on the balance sheet by the end of 2025 versus had they done nothing. That will probably keep them alive. They'll be okay. I'm not really worried about going concerns given all of that. But in another world, if you didn't have the geopolitical concerns and then all the subsidies and everything, we'd be having a different conversation. But I don't know what life they live.
If I have to sell my couch and to pay the mortgage and then sell my car, I know they don't have to. I get what you're saying. They're trying to bolster the cash position on the balance sheet. But you at some point, you run out of things to sell to private equity.
Again, it's hopefully they're at a point where it's enough. They sold half of the Ireland fab to Apollo for $11 billion. They sold half of the Arizona fab, which is not operational yet, to Brookfield, I think, for $14 billion. So that's almost $25 billion just there. And given, like I said, the CapEx cuts and the OpEx, there's a lot of cash versus doing nothing. But the state of the business is not good, right? I mean, they're burning cash. Margins are horrible. So the revenue's much lower than they thought. It's not a good situation.
So go more into that, Stacy. When you say it's not good, how bad is their business?
It's bad. So look, I mean, the quarter itself, the revenue you could argue was okay. The margins were awful, right? They're ramping up their new chips for AI PCs, and the cost structure is very, very bad. So the margins are bad, and that actually gets worse as we go forward on the next quarter or so. Even into next year, margins don't look great. And then the back half revenues are much worse. So some of that is inventory drain. There's too much inventory on PC chips in the channel. We've been highlighting that. I monitor that fairly religiously. We publish on it every quarter, and I'm convinced that we're swimming in CPU inventory right now. I think they overship massively in Q4 and in Q1. I think on the data center side, they're still losing share to AMD, and it doesn't look so good. There are other markets, Mobileye reported last night as well. We don't cover Mobileye, but factually they cut their guidance massively, and that goes in Intel's revenue. Altera looks like not great. That's their FPGA business. It's not good. In the context of just the broader macro and the share situations and everything else. And because the cost structure is getting worse, on just the cost of the parts, it's really impacting the gross margins. The gross margins are back to, they have a 3 handle on them now, which I always joked the last time that was happening was 1986 in elementary school.
Right now you're just bragging that you're younger than I am.
I'm not. I don't think I am. I was alive in 1974, so I don't think so.
Here's my worry as just a TV guy who's been doing this a while about Intel. Intel, and we wish them all the success in the world, was one of the most iconic success stories in global history, arguably. Everybody knew Intel Inside, the little ding, ding, ding logo they had.
Yeah.
Obviously, things have gone wrong. My worry is that a lot of investors out there, marginally interested investors, are going to be like, oh, it's Intel. It's down 30% in 2 days. It must go back up again because it's Intel.
It's hard. I mean, I've been having that discussion all day with clients, how do you value it? And the problem is there's no real earnings. There's no free cash flow, and there may or may not be any terminal value. We don't know, right? So, I mean, look, tangible book value roughly is about $21 a share, which I think is where it's trading today. So I'm having those kinds of discussions with people. Again, I don't think there's any reason to own it. Like, people that owned it clearly are selling it today. You've got probably a bunch of dividend funds who may have still owned it even after they cut the dividend last year, but they still paid one. They don't pay one anymore, so it's hard to own there. You know, it could go up too. I mean, it's down a lot. Like, these things get really volatile. They start trading like options, like when the equity value gets low. So I don't really know what to do with it. But I mean, to me, it feels like you don't need to be there, like, at all. Like, I would be advocating avoidance at this point. Like, why do you need to be there? There's easier ways to make money.
Yeah, there's a really easy way to lose money today if you owned it yesterday.
Clearly, yeah.
But we appreciate the candor and the honesty. Tough time for Intel, its people, and its investors. Stacy, thank you.
You bet.
Oh, by the way, so John Ford sat down, I don't know if it was earlier today or yesterday, with Intel CEO Pat Gelsinger. You saw some clips out of it. The full interview is going to air next hour on Closing Bell Overtime. I'm fascinated to watch and listen. I wonder if he's going to just say straight up to Pat Gelsinger, you seem like a nice guy, but are you going to step down? We'll find out. Tune in the 4 o'clock hour. All right, let's send over now to Kate Rooney for a look at some of the other big names that are moving into the close. Lucky you, Kate.
Exactly, Sully. A lot to talk about. Clorox is going to be one of the few green charts you see on your screen today. It's emerging as this flight to safety, leading the S&P gains, avoiding this market sell-off you've been talking about. Investors are overlooking some of the weaker than expected revenue to focus on the firm's strong profit picture. So the household cleaner giant raising its full-year profit outlook. And then, of course, household essentials tend to hold up better in any sort of economic downturn. And then on to one of the S&P's biggest laggards. You're going to see some red on your screen again. Shares of Snap. This is the parent company of Snapchat, sinking over 24% on disappointing guidance. The firm slashing its Q3 earnings outlook on soft demand from advertisers in consumer sectors. Brian, back over to you.
Hard to believe Snapchat was a $70 stock about 3 years ago, now under 10. Kate Rooney, thank you. All right, we are just getting started here on Closing Bell. Up next, we're going to obviously all over today's market sell-off. The major averages still getting hit hard into the close. And we have a great guest for you. Former Fed Vice Chair Richard Clarida back with us. We'll get his first reaction to the jobs number and whether recent economic data really puts recession risk on the table. Live from the New York Stock Exchange, Closing Bell. We're back right after this. All right, welcome back. Let's ask a very simple question. Did the Federal Reserve make a mistake by not cutting interest rates this week? More on the street are beginning to ask the question, especially as markets sell off today. So let's talk about the Fed's next move and where the American economy really stands right now with the perfect guest for it all, and that is Richard Clarida. He is former Fed Vice Chair. He is the Global Economic Advisor to PIMCO. And Richard, listen, good to talk to you again.
Yeah,
I know you have great
while.
respect. You have great respect for your former colleagues on the Fed, great respect and friendship with Jay Powell. You're not going to dunk on anybody. I get it. But was it a policy, personally, was it a policy mistake to not cut on Wednesday?
Well, I don't think so, and here's why. Look, the Fed is going to be data dependent. They've said that. The data has been soft for a while. It got more than soft today. Markets have already priced in rate cuts. So I think the important point is the markets understand the Fed's reaction function. I think it would be a mistake if they didn't cut in September and probably indicate more are on the way. But no, I don't think you can micromanage July versus September, especially when the markets are doing some of the work for them.
Yeah, and that's you nailed it as usual. That last point, the markets are doing some of the work for them. We're all freaking out about the Fed and what they might do or may not do in September or November or December, whatever it might be. It looks like you're on the other side now, Rich. The bond market has spoken.
Yes. You know, and sometimes the market gets it wrong. In January, the markets thought there would be 6 cuts this year. Don't think that's going to happen. And then, of course, it got to 1 cut. So, you know, we're in a phase now. Look, there's been a big success here. The Fed brought inflation down from 7 to 2 point something. So far, we've avoided a downturn. I think the Powell Fed's trying to stick that soft landing, that soft, you know, to borrow from an analogy to the Olympics. So I think that's where we are right now. Yeah.
So does it matter what they do in September? The market has got like a 100% chance of a rate cut. Does it matter if they cut in September for the economy? Yeah. And number two, you might have patched in late. I was sort of reminding the audience, Fed can cut any time it wants, right? They don't have to cut only
sure.
meetings.
Oh, yeah. In fact, I was there. I was there in 2020. We did that a couple of times. Yeah, we prefer to call it an unscheduled meeting, not an emergency meeting. But yes, sure it can. I don't see that's happening. You know, there is a risk whenever the central bank adjusts outside of a scheduled meeting. The markets can think, you know, what do they know that we don't know? So no. But get back to your original question a moment ago. Yes, I think it would clearly be a mistake, given what we know now, if they didn't cut in September. You know, the unemployment rate has now moved up by about a point. The payroll gains today were very modest. You know, private sector payroll gains, especially excluding, you know, healthcare, which has a connection to the government, have been running weak all year. So I think they have enough information. They will have enough information going into September. I think they will cut. The news then will be how many cuts do they pencil in for the rest of the year. But they made it very clear in the FOMC statement 2 days ago that risks are balanced. They have a balanced approach. They have two mandates: employment and price stability. And I think they're ready to adjust.
There's so much noise out there in the data, though, and I get it. I don't want to get politics involved, but everybody's like, "Oh, this super strong economy." I've been sort of on the tape saying I don't know how strong it is. Going back to pre-COVID, 6 million more jobs than pre-COVID. Divide that by the number of months. That's kind of average or even below average job creation. To your point, most of the job creation is either government or government funded, which is was healthcare. Those are good jobs. Yeah. No disrespect. I just wonder, can the private sector stand on its own? People wildly underestimate how much COVID money and COVID stimulus and low rates were out there. I just wonder what the actual stripped down, true American economy looks like right now. And I have no idea.
Well, I think
Why is everybody suddenly talking about the SOM rule? I mean, literally, I heard of it for the first time like 3 weeks ago. I've been doing this 26 years, and suddenly it's like this magical thing that's come out of the air. Are you a believer in the SOM rule, son of SOM?
I know Claudia. I'm a big fan of her work. She was at
She was on the 1 o'clock show today. She seemed very lovely.
Yeah, and no, the whole point of the SOM rule was essentially to find a simple measure of when the economy is tending to move from recovery, from expansion to a slowdown or even a recession. And the SOM rule historically has done a good job of identifying that inflection point. It might be wrong this time. You know, Chris Waller, for example, 2 years ago said, you know, we can get inflation down without a big rise in the unemployment rate. A lot of folks said, you're crazy, that's never happened. Well, it has happened. And so this is unusual. This may be a cycle, and the SOM rule does not indicate a recession. But certainly, I think there's enough there that it's going to get and is getting the Fed's attention.
Great interview. I would expect nothing less, Rich. Thank you very much. Appreciate it.
Thank you.
Rich Clarity.
Very good.
All right. Very welcome. All right. Getting some news, by the way, out of the Food and Drug Administration. Breaking news from Angelica Peebles. Angelica, what's going on?
Hey, Brian, that's right. We are just seeing that all doses of Eli Lilly's Mounjaro and Zepbound, those GLP-1 drugs for diabetes and obesity, are now all available. Remember, these drugs have been in shortage, not all of the doses, but some have been in shortage because there's just so much demand that they can't keep up with the supply. But now FDA is saying that these are available, and we're going to keep an eye out to see exactly what that means for Lilly when they report earnings next week. Brian?
Oh, so it's a good news breaking news, Angelica. It's not like a bad news breaking news.
No, it's good for Lilly. It's good for people who are looking for that drug.
Looking for that drug. There you go.
Those drugs, 2 drugs.
Raising their output, as we talked to the CEO in Indianapolis a couple months ago. Angelica, thank you very much.
Thank you.
All right, on deck. Call it crude realities. Even with the Middle East on the razor's edge, oil down today. We're going to find out why. Next.
So if we get a bounce back opportunity, I'm going to get, I'll be out of this. And I'm not going to look to get long unless something either has, you know, news that separates it from the market and I can really trust it. But everything you're seeing again today, even from Wednesday, we break through that level on the SPY Wednesday. And the overall markets tried to bounce, and then we're immediately met with this pullback, and then we get hit and smacked again today with the data. It's like, I'm good. I don't want to be long. It wouldn't surprise me if we get like a deeper pullback here, and we'll wait and recognize when we actually start to get strength. Right now, it's risk off. So, in my opinion, it's risk off. So until it's time to put money back to work and it's time to get long, I think you have to be short-minded and or just wait until you get the opportunities. Just, you know, I got to tell you guys, like, over the years and even the frustrations of today. I'm not even frustrated. So I just from what I did today, I missed Google. I missed Tesla. I didn't miss Tesla. You guys know what happened, right? So I called them out. I tried to take Tesla, but it's just like it fell out of bed on me as I was trying to get in those. So if I'm not getting it when I want it, I'm not going to be taking it, and I'm just going to look to be trading the downside. Everything is breaking down, and nothing wants to hold up or extend. There's nothing wants to extend. There's no, like NVIDIA, you know, I would like to see another test of like 110, 112. Can we get a bounce back? You heard? Nope. This thing doesn't even want to leave the 100. You would think if this was a good opportunity, you'd be able to, you know, at least buy it down here and it would pay you. That's not happening. So it's obviously not time. So take it for what it is. That's how I'm going to go into next week is, just because we're down doesn't mean we can't go down further. I'm expecting more downside. I think it's here. I do. I think we got a lot more downside to come.
NBC.
We also don't have any
energy. All right, first up, we got
let me go see what
earnings out
data
of
we have
ExxonMobil and
next
Chevron. Both were out today. ExxonMobil had one of its highest ever profits, fueled by Pioneer Natural Resources, boosting output. Now, Chevron did miss estimates. That stock, they're both down. Chevron's down a little bit more. Chevron missing mostly because of weaker margins in refining, and maybe a bigger headline, Chevron is leaving California after 145 years. Too high regulation, other issues as well. 2,000 people probably moving to Houston, California, losing another big company. Could be tough for the area. Now, also with oil prices are down today, even though tension is rising in the Middle East, and the real threat of an attack by Iran on Israel this weekend. Let's find out maybe why we're not seeing more of a pop. Bob McNally of Rapid Ant Group. Bob,
I don't think it's going to be until
next week. I'm guessing we're not
weekend.
seeing a pop because you and I have talked about this many times. Unfortunately, in the last couple of years, there's always now some kind of a threat, and it feels like there's just plenty of oil to counter anything. We don't need to have $100 oil.
We don't have any demand either. I think that's why we're
Brian.
not seeing it.
The humans and the machines that trade oil are forward-looking. And when they look forward, they see macro calamity and risk. The unemployment miss this morning being the most recent example. They're very attuned to that. And that's why we saw crude sell off. When they look forward on the geopolitical side, they don't see anything. What they hear is the village boy crying wolf. In other words, you get these sporadic escalations between Israel and Iran. You get a little bit of a pop, like we got a few days ago, and then it goes away. And so, look, we're not disagreeing so much. I think the odds favor a sort of a bigger repeat of April. The Iran will strike back, but rubble will bounce, and most likely and hopefully Israelis won't die. However, the risk of escalation is not 0 or 5%. It's more like 35%. And Brian, the village boy, who cried wolf, that story did not end well for the village or the boy.
Yeah, and that's it. And it's exactly kind of how I phrased it, speaking with somebody earlier today. There's a not 0% chance. And let's hope that none of this happens, Bob. But I guess the idea is Iran, literally Iran, maybe not even Hezbollah, launches a bunch of missiles like they did recently at Tel Aviv. Tel Aviv defends them. At some point, if that happens again, Israel will say enough is enough. And if they start to lay waste to some of Iran's money, which is pretty much all oil, what then with the price of oil?
It'll go up. The market will be shocked and it will go up. Look, the Houthis killed one Israeli in Tel Aviv with one drone. And Israel responded by torching the port of Hodeidah in Yemen, blowing up a power plant and storage facilities. So Israel's in sort of a 3 eyes for 1 eye mood right here. And so, look, just as the protagonist 110 years ago in Europe didn't want to enter a big war, a long, costly war. No one wants that. Iran doesn't want it. Israel doesn't want it. Certainly President Biden doesn't want it. But you can't always get what you want. And we are in an escalatory dynamic, and we're still climbing up those rungs.
Outside of that, let's all pray it doesn't happen, Bob. Fundamentals alone right now. Looks like the trend is lower for prices.
Yeah, fundamental data, Brian, coming in do not justify lower prices, in my view. Look at May. We got a final, just hard data for May, blockbuster strong in the United States, including for gasoline, the highest since 2019 in May. We don't have any sign of a peak and collapse in demand there. Europe, not even so bad in gasoline. Yes, China. Yes, distillate is weak, but gasoline globally, jet globally, petchem globally, not weak. And we're seeing stock draws too, Brian, in Cushing and other places. So, look, it's not super bullish, but it doesn't call for a massive sell-off in oil prices, in my view.
Okay, good stuff. And obviously, we'll see what happens with OPEC.
Bearish.
December 1st in
I
Vienna.
knew it. So
Maybe we'll
look,
both be there. Bob,
that's
thank
why
you
I
very
just
much.
turned to Apple. So I just turned to Apple because Apple, like, so AMD had good earnings. Guess what? Sold off. All these other companies, Meta, sold off. Good earnings. Google, decent earnings, sold off. Amazon, good earnings, sold off. I think that's it. Like, the reason I just looked at Apple and then I'm like, oh, this is why it's going down, because this one has the most meat left on the bone. This one hasn't been taken down yet. It's still green. I think you're gonna have to look at these companies and I don't know what turns you around. It's either it's a price point where buyers feel comfortable, or if it's some stabilization and some time that passes, or we get these data points that come in. I don't know. I honestly don't know. But like I think that thinking that AMD and NVIDIA are buys. I think you have to let the market show you that they're buys before you go ahead and buy them, and not assume that they're going to come in a bit. Because like this price action here, not leaving this level and continuing to break 107 or 106. Like, how many times are you going to break above it and not hold it to go higher? If you're not going higher, you're going to go lower. So, if only we could get to 104, well, I don't think that would help. If only if we could, I don't know. Get a little sell-off here, get something going. Just be careful out there, guys, that's all.
All right, got about 18 minutes left to the close here. Not a good day. Macro markets down. NASDAQ down 2.5%. But one stock that is higher, not a lot, but it's higher, is Apple. Now, one analyst calling Apple stock a, quote, good place to hide in today's market. That analyst was not Eric Woodring of Morgan Stanley, but Eric Woodring of Morgan Stanley is indeed here. It's your competitor, but how much do you think there is today's move is more of like, yeah, let's put money in Apple because they're a safe place to be?
I think that's a very fair explanation. Again, what happened last night?
And not a knock on, it's not a knock on Apple at all. It's kind of the opposite.
We called it a flight to safety, right? Yeah. In a world, in a market where there's a lot of concerns of what's going on, both macro and micro-wise, especially with the consumer, Apple did slightly better than we expected. As a market, right? They have a story to tell about what to look forward to. And in this environment, that was enough.
What is that story?
Right. So again, iPhone 16 launch mid-September. What becomes really important is the iOS 18 launch that well, but then the incremental rollout of Apple Intelligence.
Sorry, I'm trying to see what the heck is going on here with this.
Onto the iPhone. Now again, that's new software, but as we've talked about, what's important is you can only run that on the iPhone 15 Pro, Pro Max, and new iPhone 16 model.
I was just about to ask that because I got two. It's not going to work on these, is it?
There's only 70 million iPhone 15 Pro and Pro Maxes out there today. There's 1.3 billion iPhones in the world that are active today.
So even if you're happy with your phone, and I'm sometimes happy with the phone, right? Pictures are fine, holds enough music's fine, works fine, whatever. If I really want that AI, I'm going to have to go upgrade.
You need to upgrade.
Is it going to be thus compelling enough that I will want that AI?
That's the magic question, right? That's what
you're
we're
the
all trying
analyst.
to
Answer the magic question.
It's not out yet, so we need to figure that out.
This.
What we do know is developers have the first beta version of iOS 18 with a few features for Apple Intelligence today related to messaging, some transcription functionality. I would say the early reviews are positive, but it's still a very narrow set of features that developers have today. So we will need to wait and be patient for over time for that to roll out. Again, our thesis is fiscal 26 is the big cycle. That's 14 months from now. We're just saying that there's an upgrade cycle that is coming.
I don't give investment advice, but I will give financial advice, right? Sort of. Every couple of months, I go a little crazy, and I go through the budget, the family budget, and I go through all the credit cards and everything, and I realize I'm sending massive amounts of money to Apple every month. I'm not talking about the phone. I'm talking about Apple One Plus, right? News and all this other stuff. Apple Music, iTunes Match, okay? Apps, Roblox stuff, whatever it might be, it's a lot. I would imagine I'm not alone. Apple's services business is one of the biggest standalone, if it was, it would be one of the biggest revenue companies in the world.
Correct.
It doesn't seem to get a lot of love or attention.
It should. It's outperformed for 8 quarters in a row. It's accelerating despite.
How much are they making off of the Woodring, Sullivan, and millions of other families? I was shocked at the money that was just going to Apple every month without them even thinking about it.
Well, I'll tell you two things. First of all, it's the power of the ecosystem, right? Everybody thinks phone, or iPad, Mac. There's an $88 billion business in services that should not go unnoticed. Again, 74% gross margin. That's incredibly important. But second, what's almost more important is today, the average Apple consumer across devices and services spends about $1 per day on the most important technology platform in their life.
On average, $1 a day.
I'm
well above that. But
spend $7.62 for a coffee per day in New York City. The amount of potential upside to spend per day that you could have for Apple, again, across the ecosystem, is incredible. Services is a key part.
Personal opinion, not representative of Morgan Stanley's views, Eric. Can they do something to make iCloud Mail not be so crappy?
I guess I will defer that question to the future.
I did not expect you to. I just had to. It made me feel good to say it because I think everybody kind of knows Gmail is far superior. They got to really work on it a little bit.
Sure.
But we're still handing over.
We are
handing over that money.
Again, Apple did what they needed to do to help investors feel better about owning Apple stock, and you're seeing that today in the market.
That's it. A good place to hide also. Eric Woodring, Morgan Stanley, great combo. Thank you.
Brian.
All right, still ahead. Trouble in tech. Amazon's post-earnings drop dragging down the major averages. NASDAQ on pace to close in correction from its record high in July. More than 10% drop. They call that a correction, and we're getting ready to go into the market zone, thankfully, on a Friday after this.
Come on, let's go. Give me 110. Let's go. What time is it? It's 3:48. Of course, we're not going to get it. It's too late. Damn it. Look, once again, the markets are just nothing to get up to the upside. So be careful going long, guys. If you do go long, or even if you go short for that matter, if you get paid, take it, okay? Just take your moves.
To learn more.
And we are now in the closing bell market zone, the last one of the week. Charles Schwab's Kevin Gordon is here on what is a very volatile day for stocks. Leslie Picker is tracking some of the bank sector sell-off. Surprised I got that out. Kate Rooney on Amazon's post-earning drop, one of their worst days ever. We got a lot more to do and not a lot of time to do it. So let's just jump right in. Kevin Gordon of Schwab, thanks so much for being here.
Nice to see you.
What is the biggest question you are getting from clients right now?
Well, I think one of them being, is this more of a shift out from, what's become this kind of positioning argument, things got too one-sided for the mega caps and maybe shifting into, our recession fears now more justified because of this one jobs report. It is a little amazing to me to see so much focus on one report itself. And of course, yes, the broader context is that things have been slowing in the labor market, but I'm not sure we should be, having so much of a knee-jerk reaction to just one, especially with the aggressive nature of the drop in risk assets. But I do understand why it's happening.
And go into that more. Listen, you are the expert. I am not the expert. But I can tell you this, I'm doing a long time. I have not seen a market move like this because of a small miss in the job market, or maybe the Federal Reserve should cut, 2 days ago instead of 2 months from now. Every guest we've had on is like, this is positioning, it's technical stuff, it's carry trade, hedge funds. This is not mom and pop selling, is it?
Well, I think you have to keep in mind where we were, coming into this with, the investor sentiment environment was incredibly frothy. You basically got back up to, kind of all-time highs if you were looking at a combo of behavioral and attitudinal measures of sentiment, but also the fact that you had this really strong rally and sort of the snapback in the rubber band on the small cap side because of what happened with the June CPI report. Now, of course, a lot of that is reversing, but I think that in conjunction with what had been from a positioning standpoint, a lot of this trade kind of moving into the mega cap world at the same time that you started to see this breakdown in breadth under the surface. So a lot of this and how we're kind of looking at it is, the indexes from a volatility standpoint catching down to what had been weakness sort of under the surface. Because you have to keep in mind too, up until this point, the average max drawdown for members in the S&P was approaching 20%, getting up to 16, 17%. For the Russell 2000, it was more than 30%. The max drawdown at the index level has really not been that bad this year for the S&P, for the NASDAQ, for the Russell. You haven't even yet gotten to outright correction territory. So I think a lot of this is the index is kind of catching back down to what has been the story under the surface.
By the way, not even the worst day of the year for the S&P. That was July 24th, where he fell 2.3%. But here's what does not worry me, it vexes me, which is that the rapidity of these moves now, even though the market's gotten faster every day for 20 years, I get it. But when small caps gain
Let's go.
11%
Come on,
in 2
baby.
weeks,
Let's go.
and
Rip
Nvidia's
it.
at
Go,
25%
go,
of its
go,
high
go,
a month and a half
go.
ago.
Let me get up out of this
unknown
thing.
news,
Or
by the
even
way.
some
And we have
profit.
2 of the worst days of the year in the same 2-week period. It just feels like everything is a lot more violent these days.
Even for small caps, though, I mean, the other thing I think it's important to point out is a lot of the move that you had seen post CPI, and I think the excitement around the fact that the Fed was finally getting ready to start cutting rates.
See what I'm saying?
I think a lot of the excitement was
that's why it's important to, some people want to hold on and try to get moves, and I understand it. That's fine, but sometimes you know, it's unless you have the things, like unless you have the things, and I'll have to make a video one day about the things. What are the things that to identify, you know, being able to hold it to certain targets, like should I have went long Google and the market bounced? Like, yeah, I should have did it early in the week, but I also noticed that, you know, it wasn't time. Would it have worked? Yes, it would have worked that time. But like, I should have taken my profit. I should have got in a little earlier. I should have waited for this, just like I did Tesla. I never took it because when I tried to get in it, it dropped out from underneath of me, and it had jumped 20 cents. So, you know, I said, fuck this. I'm not paying up for it. It just goes to show about you know, if it paid you, again, I did have a limit order to sell it, so I don't even know why I'm saying this, because it's not like I didn't try to get rid of it. Like, it's not like I didn't try to sell NVIDIA. But, like, I don't know. Man, I just hope to goodness gracious that we can, like, get some type of bounce next week. We have ISM manufacturing, and that's about it. So, I don't know when Jackson Hole is. I have to look. I think it's soon. But, so yeah, I'm gonna attempt to hold this. We'll see. We'll see. I have an oil play, but I have like 3 weeks on that, so there's no rush for that. It is down a little bit. It's a really small position at that. Because again, I bought USO to see how it traded, because I've never like did a swing trade on USO, and I wanted to see how. Sorry, I'm trying to log back in. I wanted to see how it reacted, so I just put on a starter position. I gotta lick my wounds this weekend. I got a little bit of coming back to do early next week, so if you see me taking trades and it pays me, I'll probably be taking it, because I'm probably gonna size up on these, and I'm gonna size up on my trades next week, and I'm gonna wait for top-notch setups, and I'm gonna take them, and just what I'll probably do is this weekend when I go to make my watch list, I'll probably end up having like a kind of like what I did Sunday, you know, like pretty much a lot of those worked out. You know, like one of my top ideas was Google, right? So let's just take, for example, Google. See, we have 1 minute left, guys. Let me turn this down. The bell's going to ring. There's still stuff flying around. It's crazy.
Kevin Gordon, final wrap. Listen, it's going to be a big weekend for Schwab.com.
I'm nervous, guys. I don't know. Wait.
What you and Liz Ann are writing about. Can you give us a preview? What kind of advice?
Like, I'm just nervous that we're not going to be able to go much higher. Look, we did test this level here at 110 yesterday. We tested it yesterday. Okay, 112. 112 is the level I'm looking at. Okay, so we have not tested 112. It's just crazy. It's beyond me that we have not. Come on, man. I got a limit order out there. You can do it. It's going to sell back off. You're starting to see some of those 180s come in. I hope you guys had a great week. I thank each and every one of you guys and girls. That's about it. That's it for the day. I don't even think we have any earnings today after the bell. I'm sure there might be a couple, but no, there isn't. There is no earnings. Earnings after the close. At least it's not posted. Sundial reported this morning. Are you serious? That's so funny. I didn't even see that. SNDL. Dude, this thing is... I can't even believe it's still $2. Wow.
smiling faces, not in the market, but up there. Folks, I've enjoyed being with you. We'll see you next week. Let's go into overtime with Morgan and Doug.
Would like to see. We should have a couple more minutes here.
A major sell-off rocking investors today after soft jobs data dialed up fears about the health of the economy.
I thought we had like a few minutes on Fridays.
Pullbacks from Amazon and Intel on earnings. That is the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan.
Well, we will be all over the market downturn
Oh,
throughout
wow.
the hour with
That's
a great
funny.
lineup of guests to break down whether this is a buying opportunity or just the start of more selling.
Plus, we'll have much more on Intel's free fall, including highlights from my first on CNBC interview.
Hold on
with
one second.
Intel CEO Pat Gelsinger. But first, let's start with the markets and the sharp sell-off.
I think we're seeing a lot of this now. Fuck, I gotta hurry up.
And much weaker than expected jobs report. Let's bring in our panel.
Second, where's the profits coming from? I think point number two is that the earnings and the revenue have not overall in the S&P been that exciting, and it raised more questions about broader valuations. Now you come in, this is the third leg here, and we've had some gathering weakness in the economic data this week. The ISM manufacturing numbers were terrible. The jobless claims ticked up, and now this number. And the problem with this number is there's nowhere to look to sort of hang your hat on if you're an optimist. It's pretty relentingly weak all throughout. The only good thing, two good things you could say. One is that there wasn't a lot of firing. There was just not a lot of hiring. What happens over time with that is you end up perhaps losing payrolls, losing it if you don't. There's a lot of churn in the job market. So what happens is, in fact, it's like looking at the surface of some lava and it looks flat, but underneath there's all this stuff going on. People are losing their jobs all the time in industries. People are gaining their jobs. What happens is it looks flat across the surface, but right now we're just getting we're not getting a lot of hiring, but we're not also
Damn, so you got some $4 in there, $3. All right, guys, I appreciate all of you guys. I'm going to get up out of here.
the market's gone too far relative to how fast I think the Fed is going to change its opinion depending upon what happens between now and the September meeting.
I hope you guys have a great rest of your day. All right, next week we're gonna try to have a better weekend. You have a great weekend too, Drew. I appreciate everything. Yeah, it's all good, man. Don't even worry about it. You ended up, if you're up, you're up. I wouldn't sweat it. Just be careful next week. That's all I will say. Talk about it more later on the watch list and stuff. I will say after today, I kind of just messed myself up again. I missed a fill. Literally on this order by like a penny up here on this long on NVIDIA, and I just I got time on that. We'll see what happens. Just be careful next week. Just understand what's going on, right? You're going to be paying more in premium, so that means even when you get the move, you're not going to make as much, and if it goes against you, you got to be able to handle the drawdowns and just understand what's going on, because this environment is exactly what happens. It is to burn money up. It is to burn your money, their money, anybody that's in the market's money. So this is the best time to sell premium. I'm just saying. You guys have asked me a while ago if I sell premium. I've just been waiting for this type of environment. This is the environment. This is when it pays to sell. So instead of being a buyer, you might want to think about being a seller. So you guys have a great weekend. Let's all give a round of applause to everybody in the chat and Morgan Brennan with her little beautiful ass. She is so goddamn sexy. You guys have a great weekend. I'll see you guys on the watch list.
This year, look at that. We're back to planning 5 by January 2025, 8 through June of 2025. So this is a very, very aggressive move. By the way, I think it's going to be interesting to think about companies being able to refinance their debts now in ways, depending on what happens to spreads here, but in ways that they weren't able to do. It is, I was just trying to calculate here, the amount of stimulus to the economy just delivered through this is something like 80 or 90 basis points in pretty much the blink of an eye. I think you have to have a very rapid and pronounced deterioration in the data to bring the Fed to where those charts are right now. And I don't think that's where we're at. The latest GDP
real quick,
estimates going in
108 is going to be the next level. I want to see us break above and hold.
That's
I want to see if we can
potential.
break above there and hold.
So what I would say
I do
at
have
this
a limit
point
order
is
out. I
watch
doubt
the
I'll get
jobless
filled
claims.
after
There's
hours. I
6
think you
jobless
have.
claims report between now and
I
September 18th.
think you have until
There's
6
at least
o'clock.
one. No, there's 2 more inflation reports coming,
Where the heck
and
is-
there's another jobs report. But the thing I would watch most carefully now is the consumer, as to whether or not the consumer is giving it up. He or she, he and they.
I think you have until 6 o'clock for options, or 5, something like that. At least I know on Fridays. It's difference between I think there's a difference between ETFs. You'll have to read the rules on that, but I do have a limit order. We'll see what happens if it gets filled.
Earnings calls about a cautious consumer
I'll let you
and
guys know on
challenges around
Twitter. I
the
doubt it will,
macroeconomic
though.
environment where the consumer is concerned. So the fact that we had this very defensive day here, you saw utilities, staples, REITs outperform. We've had this ferocious
We saw
move
you,
in
Morgan.
the treasuries as well. We started the week with the 10-year treasury yield at 4.18. We're at 3.79 right now, to put that one in perspective.
Wow.
Spike in the VIX today. You got gold at record highs. You got crude under pressure, despite the fact that we have flaring tensions in the Middle East right now. Where do you invest? How do you think about this?
Well, I think from a stock investor's perspective, the fact that we're getting so much expectations of cuts is kind of the thing that's keeping up stocks relative to where
What's
they
his
would
name's
be.
on
Look,
here?
stocks have they have an
let
expectations problem.
anybody
They
on
actually
this
don't
channel.
have really an earnings problem.
No,
We're seeing
okay,
earnings growth,
he's
year over year,
smart,
10%.
but
That's pretty good.
some
Right?
of
The
these-
problem is people are expecting
some of these
17,
guys
18,
like
20% earnings growth from a lot of names.
They try to be a little too smart, and they try to be a little bit too much. In the answer on what's going on and why are we pulling back. We know what's
for
up.
the Fed. The Fed this
All right, the Fed got what they wanted, which was control inflation. They got that. They weren't satisfied, so now the market's like, okay, keep this up, and you're going to send us into a recession. This is why we have what we have going on. Along with earnings, I think earnings estimates are a little bit too high. If you look at like some of the FANG names, all the estimates have been brought down, except for Meta. Like, yes, they've been beating, but their estimates have been brought down. So add in earnings with the possible no soft landing, and this is what we get.
And are you going to get those 17% growth rates in earnings over the course of the next 12 to 18 months?
That's true.
And say nominal GDP growth is great and it comes in at 5 or 6%. There's a long way between 5 or 6% nominal growth and the types of expectations that are priced into those forward earnings.
Okay, gentlemen, thanks for joining us here
Pleasure.
on set. A power panel.
Have a great
Steve
weekend.
Wiesman,
Yeah, thank
Bob
you.
Elliott. All right, well, don't miss Steve's exclusive interview with Chicago Fed President Austin Goolsbee. That is Monday at 8:30 a.m. Eastern on Squawk Box. You're going to want to tune in to that one, especially now.
And from macro to micro, one of the major stock stories of today's sell-off is Intel having its worst day in more than 50
All right, guys,
years.
have a great weekend. I'll see y'all. I'm going to leave CNBC up for just a little bit,
with hyperscalers
so everybody can
signaling huge capex outlays. Intel isn't benefiting more from that spending.
Her
overall, John, the story is the AI
that
build
is,
out. So I'll say everybody is still pretty
girl.
focused on their
You guys have a great
AI
weekend. I don't even
and
know what I'm saying. I'm tired.
accelerator
I'm hungry.
investments,
Have a
and
great
the
weekend,
CPU portion is more modest. We do see some early breadcrumbs of enterprise cycles. We do expect some growth there. Our products are getting stronger, but the story is still one where the data center and the cloud is driven by the AI investments as the primary ones. Obviously, for us, we need to get our AI accelerators, our Gaudi 3, launch this coming this quarter, we believe allows us to start participating more effectively in that area. And we're seeing some good early signs of customers there. So we do see some of those benefits, but fundamentally, we're not yet getting the full benefits of that in our business, even as we aim to be much more strongly participating in 25 as those products are now ramping and fully in the marketplace.
Really bad guide for Intel, Morgan.
Really bad guide and just a lot underneath the hood. We talked about it in overtime yesterday in terms of data center weakness and some of the other aspects of this. The fact that we saw such a big move in Intel, which is considered such an American stalwart, tech stalwart. Of course, it's a Dow blue chip as well, suspending the dividend. It raises the question, what is it now going to take for this turnaround to really come into full effect?
Spending all this, you can't really change direction strategy-wise if you're Intel at this point. I mean, domestic chip manufacturing is important. We got the CHIPS Act. We can see the AI demand boom. And then they still have the majority of the PC market, right? And data center CPUs are still big. So you got to keep making those. So, exactly how they solve this problem, especially of the trust of Wall Street after this quarter, that's a big question.
Any sort of sense, I know we got to keep moving here, but any sort of sense on how much time Gelsinger actually has to continue to execute on this? What needs to happen in terms of that time turnaround? Has he put out a multi-year forecast, for example?
We are 3.5 years in about to what he said was going to be a 5-year turnaround. So that's okay. The board knows beyond that.
All right, investors do too. Well, Intel is just one of many tech names selling off today as the Nasdaq closes more than 10% off its recent all-time high. So we're officially in correction territory. Amazon diving almost 9% today after weak third quarter revenue guidance in its earnings report yesterday. Joining us now is Goldman Sachs tech analyst Eric Sheridan. He has kept his buy rating on Amazon, but lowered his price target to $230 a share from $250. I mean, we finished today, Eric, just below 168. Why do you feel confident that this is still a name to own right now?
Well, number one, thanks for having me on a Friday late in the afternoon. It's great to talk to both of you. Second, AWS is reaccelerating this theme around cloud computing as an output of the AI investments and hyperscalers seeing both putting cloud optimization in the rearview mirror, workload migration picking up at the enterprise level, as well as AI workloads starting to pick up and generate growth. We believe is still an underappreciated story. We don't think this is the end of the reacceleration growth story at AWS. And not only are you getting 19% growth, but you're also getting a mid-30s GAAP operating income margin at the same time. And we don't think AWS is valued as if it's a rule of 50 plus company inside Amazon as the first point. Second, while the consumer is becoming more volatile, and while there was a lot of noise around operating income this quarter, we would say the long-term thesis around a rising operating margin and Andy Jassy's commitment to delivering a mixture of a return to operating margins to pre-pandemic levels, as well as the advertising business contributing more margin than just that narrative is still well intact. So we still see a pathway to GAAP earnings and operating income margins that look, believe it or not, relatively cheap on earnings as you look out over the next 2 to 3 years. We have a $6.50 GAAP earnings number for 2025, almost $8 in 2026 against less than $170 price today.
Yeah, I mean, it's interesting when you lay out the thesis for Amazon, and you can argue that it's been similar for some of the other Mag 7 names that have reported in the past, call it week and a half, is investors have been really nitpicking and really going through line by line and honing in on very specific metrics, and that has been triggering the selling, even when there's been top and